Guys, now we'll be doing the job costing. Basically, job costing is nothing but a method of costing, guys, where you are going to ascertain the cost for a job. What do you mean by job, sir? Basically, our customer will come to us. Customer will ask us, boss, I need this. As per the specification of the customer, not a general product. He will be doing it as per specification. For example, let's say, now, Lokesh want to start a bus company. Okay. How the bus will be there? Basically, generally bus won't come with full this thing and all. They will just give it like this. Here one driver seat they will give, here one steering they will give. That's it. Oh, of course, tires they will give. Okay. Now, Lokesh, guys won't mind telling different names. They will be like, hey, my friend only know. Girls, sir, how dare you? Instead of Shalini M, you called me Shalini S. Now listen. Now, he want to build a body for this bus. Do you think all the bus look same? No. Lokesh want the glass to be like this, not straight one. Not the straight one. He wanted something like this. And here also he wanted something like this. And like this. He can do it, no? And seats, windows. For windows, you want a screen and all. Tempo traveler. Now, here big Loki travels. Okay. And whenever he moves, the tire will be like, the light should come. In tire, the light should be moving. Here also, full bus. Ground also the light should be there, full green light or yellow light. Okay. Now, here also full radium, light, everywhere light. Horn also, 2-3 kind of horns. Different horns, you know, right? Those horn. Also normal when police is there, king horn. All normal horns, all the horns in it. Now guys, tell me, this Lokesh did. Now Abdul want to open one Abdul Travels. He want a bus. Here he want it to be written as Abdul. Okay. Now he want a basic. Don't want lighting and all. Normal lighting, etc. Guys, tell me whether both of their bus for a bodybuilder, will the specification same? Different specification. Will the labor involved will be same? Materials involved will be same? Number of hours work will be same? Now, here in this scenarios, now that bus bodybuilder is going to apply job costing. So basically, when you are going to do it as per the specification of the customer, cakes. General cakes will come. For that, batch costing will apply. Same kind of cakes will be done in batches. But Lokesh is like, baby, you look like Mickey Mouse. So for your birthday, I will cut a Mickey Mouse cake. Now if he comes and order Mickey Mouse cake, as a bakery guy, will I be preparing a Mickey Mouse cake all the time? No. Now it is as per the specification of the customer. Got it? Now there we are going to apply job costing. Basically, based on the specification of customer, when you're going to do the work, you can apply two different costing. One is called as job costing, one is called as contract costing. Basically, when the work period is lesser, smaller work, job costing. Larger work period is like year, 2 years, 3 years. There we are going to apply contract costing. When the work period is less, job costing. Work period is more, contract costing. Got it? Now, basically ascertaining the cost for a job, what we prepare, that we call it as job cost sheet. To ascertain the price cost for the job, when we prepare any document or when we prepare any statement, that statement is called as job cost sheet. Got it? That's it, nothing much. What are you talking, sir? Seriously? Yes, seriously. See here. They have given one question here. As a newly appointed cost accountant, you find the selling price of job number 9669 has been calculated the following basis. So they have calculated one job sheet here already. Also, they have given a previous year P&L also together. Now, you are required to enter the revised cost using the previous year's figure as a basis of, drop a job cost sheet, add the total cost of 10% for a profit to give the final selling price. Which means now on some basis you have done a job cost sheet. They are asking you to prepare it as per the basis of previous year figures. Okay. How you can do it, sir? Guys. Direct material to won't change, no? Direct material won't change for the job. It remains same. So as per the new method also, it will be 12.8 only. Direct wages 22 hours at the rate of 25 paise per hour. Department A 10 hours, Department B 4 hours, Department C 8 hours. Okay. Now, how much it is? 5.5. Now, prime cost is how much? 17.5. Sorry, 12.08. 17.58. That is your prime cost. Now, guys, you got they are adding 33.5 on a prime cost directly and they are telling a cost. But let's not do like that. Let's analyze one by one as per the previous year figures and we'll do it. What do you mean by that, sir? Guys, factory overhead is there for Department A, B and C. At the same time, direct wages is also there. Factory overhead is there. Direct wages is also there. Guys, so can I take the factory overhead directly instead of 33.33% on prime cost? Instead of that, can I segregate the overheads into factory cost as well as S&D? Can, no? Now, factory overhead, what you are going to do, sir? Factory overhead, guys, I'm going to find out the absorption rate. What do you mean by absorption rate, sir? Guys, try to understand. For a whole organization, factory overhead of A was how much? 2,500. Whereas direct wages of A was how much? 5,000. Can I tell factory overhead of A is 50% of direct wages of A? Can I? B, 4,000, 6,000 into 100, 66.67%. C, 4,000 divided by 1,000 into 100. Sorry, 1,000 by 4,000. 1,000 by 4,000, 25%. I'm going to apply the same rate to the job here. That is, guys, 10 hours, how much was the labor? 2.5, no? Per hour, 25 paise. 2.5. For 4 hours, it is rupees 1. For 8 hours, it is 2 rupees. Total is coming to 5.5, correct. Now, overheads. Guys, overheads. A, 2.5 into 50%. 1.25. 1 rupee into 66.67. 0.6667. That is B. Overhead of C, 25%. 0.5. Total overhead is how much? Sorry, 2.42 is coming. That will give me factory cost. How much? 20. Guys, there is a selling cost. There is a selling cost. As there is a no sales and all, what I am going to do is selling cost I am going to absorb it as a percentage of factory cost. How much was the factory cost last time? Direct material was 77,500. Direct wages was 15,000. Factory overhead was 7,500. Total factory cost how much? 92, 99,500. Hey, no. 1 lakh, 1 lakh. Factory cost was 1 lakh. Sales cost was 30,000. Can I tell selling expense is 30% of factory cost? Now factory cost is 20. Then S&D overhead, guys, 30% of 20, which will come to 6. So total cost will be 26. And what they are telling, add 10% for job cost, 10% for the profit. So 10% of this is 2.6. Your new job rate will be 28.6. This is what you are going to do it if they give this kind of question. Hope it is clear. Clear? So many questions are there in this. How many questions are there? Look at the second one. A work order for 100 units of a commodity has to pass through 4 different machines, which the machine are rate are. Machine P so much, Q so much, R so much, S so much. Following expenses have been incurred on the work order. Material we incurred 8,000. Wages we incurred 500. Machine P has been engaged for 200 hours. Q has been engaged for 160. R has been 240. S for 132. After the work order has been completed, material worth rupees 400 are to be found to be surplus and are returned to the stores. Office overhead used to be 40% of the works cost, but on account of all-round rise in the cost of admin, distribution and sales, there has been 50% rise in the office and overhead expenditure. Moreover, it is known that 10% of the production will have to be scrapped as not being up to the specification, and the sales proceeds of the scrapped output will be only 5% of the cost of sales. If the manufacturer wants to make a profit of 20%, find out the selling price. Guys, listen. Very simple. What do you mean by very simple, sir? Whatever the data they have given, all you have to fill in the blanks. I told you, no, in costing, basically half of your paper is based on reading the question. There only half data will be there. Now, direct material, not 8,000, guys, it will be 7,600. Because 400 is returned. Direct wages 500. Correct? Now overheads, listen here. Machine P we are using for 200 hours. How much? Sorry, 250. Q we are using for 160. 400. Machine R for 240. 720. Machine S is 2.25. 290. Total 1667. So factory overhead is 1667. Now tell me how much is factory cost. Sorry, 767. Now, that is your factory cost. After the work order has been completed, done, office overhead used to be 40% of the works cost. How much is 9767 into 40%? Sorry, 907 shall I take? Yes, or 3000, 906.8. That's it. Now, they are telling there has been 50% increase in the expense. So, into 150 percentage. 5860. Hope you guys understood this. That is 58 office overhead. 5860. OOH is office overhead, not OO. Got it. Done. Next is what? Next is what? This will give you cost of sales, because office overhead is there. If you consider it as general in nature, how much is the total cost? 15,627.2. Now try to understand. They are telling, moreover, it is known that 10% of the production is 100 units. 10% of this will be 10 units, will be scrapped, and sales proceeds of the scrapped output will only be 5% of the cost of sales. So guys, how much is the cost of sales per unit? Sorry, not here. That is 15,627.2. That is for 100 units. 156.272 into 10 units will be scrapped. 1562.72. But are we going to recover whole cost here? No. We are going to recover 5% of this. 78.13. Now what I am going to do, from 15,627.2, going to reduce 78.136. 10,000, 15,549.06. Now they are telling at 20%. 80? 0.87. Now this will be my selling price for how many units? Find out the selling of the unit of commodity ready for sale. 18,658. No, guys, but here remember one thing, we have done one mistake. You know what it is? If the customer is ordering for 100 units, and when we know that 10% is a loss, do you think are we really processing 100 units? Not even 110. Input minus 10% is equal to 100. From around 111.111 something will come. We'll be processing so much, which means output won't be 90. Output will be 100. But sir, this also will change, no sir. Guys, they are telling 10% of the production. 10% of the production. So what you are going to do is very simple. 15,627.2 is there, no? In that 10% is waste. Of that 5% is recovered. You will get a numbers. But when you are dividing, make sure you are going to divide it by 100, not 90. So input we have taken more than 100, not 100 and then it becomes 90. For example, let's say in a bakery, the bakery guy know that if you produce 100 units, 10 units will be lost. Now let's say you placed order for some 100 units. Will he put input for more than 100 or less than 100? More than 100. He can't tell, take and go 90, 10 went in loss. We told you to give 90, 100, no? Then you should have put more, no? Like that it is. Got it? The data pertaining to Heavy Engineering Limited are as follows at the end of 31st March 2022. That is direct material 9 lakh, direct wages 750, S&D 525, admin overhead 425, factory profit. Prepare a cost sheet following showing all the details. One cost sheet you have to prepare. Okay. Next. Factory has received a work order. It is estimated that direct material would be 12 lakh. Direct labor would be 7 lakh 50,000. What would be the price of the work order if the factory intends to earn the same rate of profit on sale, assuming that selling and distribution overhead has gone up by 15%. Factory recovers factory overhead as a percentage of direct wages, administrative and selling distribution overhead as a percentage of works cost based on the cost relevant to previous year. Now guys, this year's how much is the direct material they are telling? 12 lakh. Correct? Direct wages how much they are telling? 7 lakh 50,000. So total will be 19 lakh 50,000. Correct? Factory overhead what they are telling? If the factory intends to earn the same rate of profit on sale. Last time how much we earned a profit, just check now, percentage. 609 divided by 36 lakh 54,000 into 100. 16 point. So we are planning to earn 16.67% on sales, which means basically 20% on cost. Now, factory overhead, they are telling selling and distribution has gone up. Factory overhead recovers a factory overhead as a percentage of direct wages. Guys, last time factory overhead as 450, direct wages was 750. How many percentage of direct wages was factory overhead? 450 divided by 750 into 100. 60 percentage, which means this year wages is 750. So 750,000 into 60 percentage, 4 lakh 50,000. So your factory cost will be 24 lakhs. Right? Now Karthik sir takes in that classroom, no? Whether tab issue is still there? When he writes some line and all will, that is there. Admin overhead. Guys, admin and selling and overhead is percentage as works cost. Admin overhead 420 when the works cost was 21 lakh. How many percentage? 420 divided by 2100. How much? 20 percentage. Selling and distribution 525 divided by 21 lakh. 10 lakh 50. 40%, no? 40%, no? 5 lakh 25,000 divided by 21 lakh into 100. 25 percentage are done. Now Admin overhead is 20% of the works cost. That is 24 lakh into 20% will come to 4 lakh 80,000. Now my cost of production will be 28 lakh 80,000. Now selling and distribution is 25% of the works cost. Again 24 lakh into 25 percentage. 6 lakh is my S&D. So my cost of sales will be, wait. They are telling S&D will gone up by 15%, which means it will be 6 lakh plus 15%. 6 lakh 90,000. So 35 lakh 70,000. That will be our cost. That will be our cost. Now for this, if you add the profit, that is 16.67 on sales, which means 20 on cost, you know that. Or you can take, if the sales is 100, cost will be 83.33. For 100 you don't know how much, but for 83.33 it is 35 lakh 20. 100 question mark, you can do like that also, but plus 20%. How much is 20% of this? 7 lakh 14,000. Total will come to 42 lakh 84,000. Okay. Now, sir, your answer and the study mat answer is not matching. Why? Guys, here what we assumed is selling and distribution increased 15% when we compare to last year. What they are assuming is, boss, last year you absorbed it 25%. This year what we are going to do, add 15%. Not it is what we are doing. We are thinking 15% increase over and above 25%. Basically 15% increase of 25%. What they are doing, 15% plus 25%. They are taking it as 40%. Got it? If you take it as 40%, just check. How much is 24 lakh into 40%? 9 lakh. How much will be the total year? Sorry? 20% of this. 20% of this. Total 40. Got it? A manufacturing company is divided into 3 divisions, ABC. All the production is against a customer specification. All orders are dissimilar and they go through all the 3 departments. Direct material department A, direct labor and direct manufacturing cost. Okay, total 90, 180. The cost of producing a particular order was determined as follows. Material is 1000, labor department A, department B, department C, and indirect manufacturing cost is 600. The general manager had an idea that job executed on orders of this nature as underpriced. He is telling it is underpriced. So the service of a firm cost accountant, which was you are a member, acquired for a thorough investigation. Can you identify, after carefully analyzing limited available information, fundamental flaw in the company's method of assuming that direct labor cost is an acceptable basis for distributing indirect manufacturing cost? Prepare revised cost for this one. Guys, try to understand. Department A is there, no? Department A is there, no? In Department A, what they have done? They have taken manufacturing cost as a basis of 50% of direct labor. Here they have taken 200% of direct labor. Here they have taken 100% of direct labor. So now 60. How much is this one? Try to understand. What they have done in general, they have taken everything as same. Blanket rate they have taken. Total overhead is 90,000. Total wages is 90,000 into 100. So they have taken it as 100% of wages. Same thing they have applied. But if you take department wise, 120, for that 50% will be applied. 60. Next one 280, 200%, 560. And department C 100%, 200. That is, the indirect material cost absorbed will be 760, 820. So the total cost will be 1600 plus 820, 2220. 2420, no? Got it? What they have applied is blanket for all the department. Together wages they have taken and they have applied. But if you take it on individual basis, then you will get a proper number. Now, if what is happening, you are considering cost itself as less than what actually we are incurring, no? Then automatically your price will be underpriced only. So make sure your cost becomes more. I mean, you are incurring more cost, no doubt in that. But you are not able to absorb it properly. That's the thing. Guys, fifth one, it is just like the first one what we have done. They have given material, they have given wages and 33.33 for expense. And again, here they have given this. So what we did here, overhead of department we have taken as a percentage of wages. Selling expense we have taken percentage of works cost. Then if you apply the same here also, you will get a answer. Got it? For that add 20% of cost. Nothing special there. Here guys, they have given 3 jobs which is already there. Material, labor, factory overhead which is already incurred till September. Here they have given October 1. So what you should do for this particular job, add the new material introduced in the month of October, add the labor for the month of October. Then you will be able to find out a cost. Simple. You have solved in the cost go through the. This was about your job costing. Next, going to batch costing. Guys, here, whenever you do the similar kind of product in a batches, you are going to determine the cost per batch. Now, the method of costing which you are going to apply to calculate the cost of the batch, that is batch costing. Got it? Now, sir, can you tell me how much batch size we should produce? Guys, try to understand what happens. If at all batch size is 1000, generally batch size was 1000. Now you increased your batch size to 5000 units. How many units? 5000 units. Guys, now my question is pretty simple. Just because you increased your batch size, whether your sales will increase, whether the speed of your sales will increase, no. Which means earlier you were carrying half of 1000 units. Now you have to carry half of 5000 units. Which means you have to pay more carrying cost. That is more holding cost. Got it? However, okay sir, then we got one idea. What is it? Instead of 1000 units in per batch, we'll produce only 10 units per batch. Annual requirement, let's say 10,000 units. Earlier, how many batches we used to produce? 10 batches. If we go for this 5,000, we'll go for 2 batches. Sir, we'll do one thing. Let's not produce 1,000 units. We'll produce, let's say 100 units per batch. Great, no? Smart, no? Because you have to carry just half of 100. How many units? 50 units. Automatically your holding cost will be less. Guys. You know what is the best part? What ordering cost for batch? Guys, once you complete one batch, you have to set up for the new batch. Complete the batch, set up for new batch. Complete the batch, set up for the new batch. Which means you have a setup cost for each and every batch. Earlier you were incurring setup cost only twice or 10 times. Now if you produce 10,000 units per batch, you have to incur it for 100 times. Setup cost will become more if you try to reduce your carrying cost or holding cost. Sir, somewhere we have heard all this kind of things, sir. Delulu, sorry, not Delulu. What is it called as? Deja vu. Nostalgia. Which one? Not sometime. Yesterday we did. EOQ. That is when carrying, there it was carrying and ordering cost. Here carrying and setup cost. So guys, here the batch size at which both together will be minimum will be economic batch quantity. Batch size at which your carrying cost as well as setup cost will be same as well as minimum together. That is known as economic batch quantity. Formula is 2ds divided by C. What is D, sir? Annual demand. How many units you have to produce? S is what, sir? Setup cost per batch. C is what, sir? Carrying cost per unit per annum. If at all demand you take per month, it will be per month. Like that. Got it? Hello. From the following information, calculate the economic batch quantity for a company using batch costing. Annual demand 2400, setup cost 100, manufacturing cost per unit 200, carrying cost is 6%. Square root of 2 into D is demand 2400 into, guys, try to understand in EOQ how many units to be purchased. A. Here D is how many units to be produced, not how many units to be sold. If they give opening stock, closing stock and all, then always remember there you should calculate how many units to be purchased for a A. Here you should calculate how many units to be produced for a B. Got it? 2 into 2400 into your setup cost is 100 divided by your carrying cost is manufacturing cost. There it is purchase price. Here it is manufacturing cost into 6%. How much? Fast. 200 units. 200 units, which means per batch you should produce 200 units. Got it? Oh, hi Santosh, you are here. A customer has been ordering 90,000 special design metal column at the rate of 18,000 per order during the past years. The production cost comprise of 120 for material, 60 for labor, 20 for fixed overhead. It costs 1,500 to set up one machine run. So can I tell S is equal to 1,500 for 18,000 columns. So earlier we used to produce 18,000 columns, which means basically we used to do 5 batches in a year. Correct? 18,000 per batch, 90,000 is total requirement, 5 batches. Inventory carrying cost is 15% of the 120 rupees. Correct? No? Manufacturing cost 120. Since the customer may buy at least 5,000 columns this year, the company would like to avoid making 5 different production runs. So they don't want to make 5 different production runs. Find out the most economic production run. Simply whole story they have given. That is 2 into demand is how much? Annual demand 90,000 into setup cost 1,500 divided by carrying cost rupees. Manufacturing cost is how much? Manufacturing cost is how much? 120 for material, 60 for labor, 20 for fixed. 200 rupees 200 into 15%. You have reached. Nice. How much? 3,000 column. You have to produce 30 batches. Correct. Got it up. Look at the ninth one. AB Limited is committed to supply 24,000 bearings per annum to CD Limited on a steady basis. It is estimated that it costs 10 paise as a inventory holding cost per bearing per month. Guys, 10 paise per bearing per month, which means rupees 1.2 per annum. Got it? Setup cost is 324. What would be the optimum run size for a bearings? Square root of 2 into 24,000 into setup cost 324 divided by, sorry, how much? Sorry, 3,600 bearings. So we are, if they produce 3,600 bearings per batch, their cost will be minimum. What is the minimum holding inventory cost at optimum run size? Half of 3,600 into 1.2. Holding cost. Half of order size or half of batch size? 2,001. Done. Assume the company has the policy to manufacture 6,000 bearings per run. How much extra cost would the company have to incur? Guys. If at all they go for the EBQ, then their setup cost will be how much? See, the cost of manufacturing in both will be same only. No doubt in that. But setup cost, in case of EBQ, 24,000 divided by 3,600, how many batches? 7 batches. 7 batches at rupees 324. 7 into 324. 2,002. That is if you go for a EBQ. If you don't go for EBQ, if the company has a, see here, this is not even a choice. They are like, you want to produce 6,000. You just tell us, just by not going for EBQ, how much we are losing. Don't suggest us to go for EBQ. Tell us how much we are losing. So always understanding question is very important. Now, guys, 6,000 bearings means 4 batches. 4 into 324. 1,296. Carrying cost. In case of EBQ, half of 3,600 into 1.2. We already calculated and kept 2160. In case of next one, half of 6,000 into 1.2. 3,000 total cost. 4448. What is the difference? 460. We are incurring extra 468 rupees. Got it? Component gold is made entirely in cost center 100. Material cost is 6 paise per component. Each component takes 10 minutes to produce. The machine operator is paid 72 paise per hour. I don't know what is wrong with these guys. Why they want to give it in paise, like literally? Machine hour rate is 1.5. The setting up of the machine to produce the component gold takes 2 hours 20 minutes. So setting up time, how much it takes? 2 hours 20 minutes. On the basis of this information, prepare a cost sheet showing production and setup cost both in total per component, assuming batch of 10 components, 100 components, 1000 components. Now, if the batch is of 10 components, each and every unit takes some material of 0.06. So total 10 components will take 60 paise. Machine operator, try to understand guys, he is getting paid 72 per hour for 60 minutes. For 10 minutes, how much? Eh? 12 paise. So 12 paise, that is 0.12 into 10 units, 1.2. Next, machine hour rate is 1.5. So 1.5 is for 60 minutes. For 10 minutes, how much? 1.5 is for 60 minutes. For 10 minutes, how much? 0.25. So 0.25 for 10 units, 2.5. Next, machine operator, next setting up time. Guys, this much is clear, huh? Now, try to understand. In the setup time, overheads we have to incur no, other than material, power, labor, all those things will be there, no? Yes or no? Now, it takes 2 hours 20 minutes. 2 hours 20 minutes. Labor guys, 12 paise, 72 paise for 60 minutes. For 140 minutes, how much? That is 120 plus 20. 1.68. Machine hour, rupees 1.5 is for hour. 1.5 is per hour. That is for 60 minutes. We want it for 140 minutes. 3.35. 1.6 and 3.5. That is per batch. So total per batch you are incurring 9.48. Same thing you are going to do for the batch of 100, batch of 1000. Got it? With that we have completed our batch costing. But guys, if at all in your examination time, if at all you get a free time, I will tell one question, go through that question. That is ICI study materials, batch costing, case-based scenario question. ICI study material, batch costing, case-based scenario question, that is bottles, etc. It has. I will show it once. How to download also I will show. Whoever don't know how to download the ICI study materials, all you have to type is ICI. There you will find it something like this. There all you have to press is study material. In the study material intermediate course, paper number 4, cost and management accounting. In the cost and management accounting, applicable for May 2025, click on that. Here you will get a different chapter's name. Here what I am talking is about chapter number 8, cost and batch costing. Here they have given one question about the use of these things. See here. If you have time, please visit this question once. Arnav operates. This question is there, no? beverage industry, soft drinks. Guys, go through this once. One of the crazy question of batch costing. You don't have to answer these MCQs and all. You can straight away go for the compute the total profit or loss per batch. There they have computed a cost sheet for a batch altogether. See here, like this. They have computed. No, go through this once. You will get a idea about it. See this statement. Calculation of profit or loss is there. No, this statement. Go through this once. One of the nice question if they want to give for 14 marks from batch costing. Best question. And it has all, like, so many times it has happened. ICMA giving the questions from the ICA exam, like ICA study mats. It has happened so many times. So you never know if your luck is too good. If at all you go through this, and if they give this, congratulations, brother, congratulations only. Straight away 14 marks. Go through this. If you get a doubt and all, please let me know. Got it? Yes. With that we have completed our batch costing. Now may I know quickly which and all are the chapters remaining? Contract costing, process costing, joint product by product. That is part of process costing only in your study material, but we can see it as an independent. Operating costing, that is service costing, marginal costing, standard costing, budget and budgetary control. See, this JPBP, budget and budgetary control won't take much time. Service costing also won't take much time because you don't have many things here. Only I think transportation and hotel is there. Correct? Now, contract costing also, logically it won't take much time, but we'll go aram se, as many of you have a doubt and all. Your process costing, we'll see it, that equivalent units as well as your inter-process profit and all, that takes some time. So let's see, let's not rush. Tomorrow's our target will be contract costing, process costing, service costing. We'll start with service costing, then we'll complete contract costing and process costing. If time permits, JPBP. Got it? By second we'll complete triangular in nature, which means A, B, C. Now, guys, from A, it leaves with a 20 metric ton and it unloads 8 metric ton in station B, which means from A to B, it will go with a 20 metric ton. From B, at B, we unload 8 metric ton and remaining 12 metric ton we carry to C. Guys, ton and metric ton are same. Now, from station C to station A, 16 metric tons it carries. 16 metric ton it carries. Now, distance between A to B is 80 kilometers. Distance between B to C is 120 kilometers. And distance between C to A is 160 kilometers. Now, if at all you want to find out an absolute ton kilometer, what you are going to do, sir? 80 kilometers into 20 metric ton plus 120 kilometers into 12 metric ton plus 160 kilometers into 16 metric ton. This will give your absolute ton kilometer. No, sir, we want to do it under simple average, commercial. Then total how many kilometers we are traveling? 80 plus 120, 200, 200 plus 160, 360 kilometers. 360 kilometers. This will be multiplied with average of tons carried. 20 plus 12 plus 16 divided by 3. 32, 48, 48 divided by 3 is 16. So you are going to consider 16. 360 into 16 will give you simple average. However, sir, what if from B to C we didn't carry anything? We carried 0 metric ton. In that scenario, how to compute a commercial ton kilometer? Very simple. For kilometers we traveled 360. We should take that only. However, for the average computation, 20 plus 16 divided by 2. You should not take it as 3. Telling 0 as one observation, no. As it is not generating any revenue, you should consider only 2. Got it? Okay, that is about transportation composite, sir. Fine. What about the hotel? For hotel, it is room days. For hotel, it is room days. Number of days a particular room has been occupied in a particular month or a day. Healthcare, if it's a outpatient, that is the person who comes, takes the consultation, goes back. For them, based on the service provided, consultation provided. However, if it is an inpatient, that is one who gets admitted into hospital, for them we are going to charge it on number of bed days. Number of bed days. Got it? See here, a transport company, service company is running, and always remember, sometimes when you are having 3 different kind of rooms and all, when you are having 3 different kind of rooms, what you should do is you should find out equivalent, because divided by, for example, my hotel has 10 single rooms, Santosh, 10 single rooms, 20 double rooms, 20 triple rooms. Okay, concentrate. Now, guys, let's say the total cost will come to around 10 lakhs. Total cost will come to around 10 lakhs. I can't tell that I should divide it with 50 room days. I can't. Why? Because the cost of single room, double room and triple room won't be same. So what you are going to do, sir? Either you convert everything to single room for computation, that's it. Or you convert everything to double room, or you convert everything to triple room. Let's say single room charge, we don't know how much it is, but double room will be 2 times of single room. Triple room will be 3 times of single room. Let's assume the charges, or let's say 4 times of single room, or 2 times of double room. 2 times of double room as well as 4 times of single room is same, because 2 single room is equal to 1 double room, 2 double room is equal to 1 triple room, which means 4 single room. So what we are going to do, let's say we are going to compute it equivalent to 10 single rooms, single rooms. So 1 single room is equal to 1 single room only, whereas 1 double room is equal to 2 single rooms, which means 40. 1 triple room is equal to 4 single rooms, which means 80. 130. Now this is 130 equivalent rooms. 10 lakh divided by 130 rooms. Now we will get some number that will be cost for single room. If I multiply it with 2, that will be cost for double room. If I multiply it with 3, cost for triple room. Got it? That is your equivalent. Leave that, concentrate here. A transportation service company is running 5 buses between 2 towns which are 50 kilometers apart. So there are 2 towns, A and B, and distance between these 2 towns are 50 kilometers. Seating capacity of each bus is 50 passengers. 50 passengers. Guys, try to understand. If at all they tell seating capacity is 50, each bus has 1 cleaner, then passengers you should take as 49. Keep this thing in mind. 49. Passenger you should take it as 49. Why, sir? Because 1 seat will be allocated to cleaner. Sir, our side and all, cleaner will stand and go. Not allowed. Rules. Basically, standing and going as per RTO is not allowed. So always try to remember, if at all they give 50 passenger, then take 50 only. 1 cleaner, 50 passenger, then take 50 only. If they just tell bus has a capacity of 50 seats, and in each and every bus, one cleaner will be there, then that bus has 49 passenger capacity. Now, the following are the particulars. Wages of drivers, conductors, cleaners. Salary of, guys, what we are going to do is, the cost we are going to either compute everything per month or everything per annum, everything per 5 bus or everything for 1 bus, depending on question to question. Point number 1. Point number 2. Generally, cost will be divided into 3 categories. Standing charges, which is fixed charges. Second, running charges, which is variable cost. Third one is maintenance charges, semi-variable, or you can tell it as maintenance. Your tire, all those things. Now, wages of the driver, cleaner and all, it is fixed in nature. Standing charges. And this is for the month of April. Okay. Salary to office staff, again. Diesel and other oil is for running charges. Repairs and maintenance. Taxation and insurance, standing. Depreciation, standing. Unless and until they tell it is on the basis of kilometers, it will be fixed in nature, standing. Interest and other expenses, standing. Fixed, no. Whether you run the bus, you don't run the bus, you are going to incur that. Fixed. Actual passengers carried were 75% of seating capacity. All buses run on all day of the month, which means in April, how many months? 30 months, not 31. No. 30 days. Sorry. April, how many days? 30 days. Each bus made 1 round trip per day, which means it will go from A to B, back B to A. Find out the cost per passenger kilometer. Guys, you can compute it for 5 buses or 1 bus. Here, anyhow, they have given everything for 5 buses. I am going to compute it for 5 buses only directly. Anyhow, total cost also I don't know. I know. All I want is a passenger kilometer. How to compute, sir? Guys, in April month, how many days? 30 days. In 30 days, 2 times we are traveling for 50 kilometers each. Now what I will get? I will get to know how many kilometers my bus has traveled. What I will get to know, guys? How many kilometers by my bus has traveled. Now, if I multiply it with the passengers, I will get a passenger kilometer. That is 50 passengers where the capacity is just 75%. 40? Did they tell each and every bus has a conductor in it? If they tell each and every bus has a cleaner and it travels with the bus, then only it should be. How much, guys? 2000? 250 passenger kilometer. That is per bus. Try to understand. This is passenger kilometer per bus. But we have 5 buses because cost is relating to 5 buses. 11,250 passenger kilometer. So how much is the total cost? 13 lakh 90,000 divided by passenger kilometers are 11,250 per passenger per kilometer. How much I should charge? 123 point. Hey, just check now whether you calculated this correctly or no. 5 lakh 62,500. Passenger kilometers are how much per bus? 1,12,500. Five lakh 62,500. How much? Okay. We are going to ascertain this way. Now listen, guys. In a lodging home is being run in a small hill station with 50 single rooms. Santosh, concentrate here. 50 single rooms, which means whatever the rooms available in that particular Lodging home, everything is sir, everything is single room, which means no need to calculate the equivalent room days. Room days we have to calculate. The home offers concessional rates during 6 off-season months in a year, which means 6 months is season months, 6 months is off-season. During this period, half of the full room rent is charged. So we are charging them half of that, which means now we have to calculate equivalent. Because both off season as well as in the season, rent is not same now. Room rent is not same now. The management's profit margin is targeted as 20% of the room rent, which means 20% on sales, not on cost. The following are the cost estimated other detail on 31st. Assume a month to be of 30 days, which means on an average we are expecting 360 days in a year. Occupancy during the season is 80%, during off season is 40%. Expenses, staff salary excluding room attendants. So it is for a whole year they have given. Repairs to building, laundry and linen, interior and tapestry, sundry expenses. Annual depreciation is to be provided for a building at 5% of the, and on the furniture it is 15% on straight line basis. Depreciation. Room attendants are paid rupees 5 per room day on the basis of occupancy of the room in a month. Monthly lighting charges are rupees 120 per room. Guys, try to understand, it is not per room day. It is per room per month. Per room per month. And when you will turn on the lights, when guests are there or when guests are not there? When, sir? When guests are there. When the guests are not there, why to turn on the lights? Correct? Hey. I mean, that again depends on the guest. Which guest? The one who stays in the... Single room, sir. What couple you are telling? Except in 4 months in winter, when it is 30 per room and this cost is on the basis of full occupancy for a month. Guys. In 8 months or for 8 months, they are going to charge 120 rupees. But in the winter time, the electricity people charging you just 30 rupees. Total investment in the home is 100 lakhs, which 80 lakhs is relating to building, balance is relating to furniture and equipment. This is just to calculate a depreciation. You are required to work out the room rent chargeable per day, both during the season and off season on the basis of foregoing information. Guys, first shall we calculate number of room days. In fact, here we can't calculate number of room days. We should calculate number of equivalent room days. Number of equivalent room days. Guys, on season, off season. On season, Santosh, out of 100 rooms, how many percentage is occupied, sir? 80%. For how many months, sir? 6 months. For how many days? See, we want room days. Now we'll get a months. 30 days each. 6 months we have taken no already. Whereas in off season, 100 rooms, only 40% will be occupied into 6 months into 30 days. Now I will get a room days, not a equivalent room days. How much? 14,400, 7,200. Now if you go for equivalent room days, guys, for off season you are charging half of what you are charging for the on season, which means if I take on season as 14,400, off season will be 50% of that, 3,600. Or you can turn convert the on season into off season also, your call. So total 18. 18,000 equivalent room days. 18,000 equivalent room days. Now, for electricity purpose, try to understand. 6 months, how many rooms were operating? Out of 100 rooms, 80%. In the other 6 months, out of 100 rooms, 40% rooms were full on an everyday basis, which means 80 into 6, 480 rooms, and this 240 rooms. In fact, this should be divided into 3 months and 3 months, 4 months and 3 months. 4 months. This should be divided into 4 and 3 also, winter and non-winter. Because in the, see, try to understand, you are going to assume winter is off season. Okay, they will give you, but still. So now one more thing you have to remember is winter is off season. Along with that, there is other 2 months which is off season. For that you have to pay 120 rupees only per room per month. So now try to understand. First, salary, staff salary. How much? 2,75,000, no changes. Repairs to building, 130,500. Laundry, 40,000. Interior, 87,500. Sundri expense, 95,400. Depreciation, 5% on building. That is 80 lakhs into 5%. Sorry? 4 lakhs. And your 15% into 20 lakh. 3 lakhs. Room attendants are paid 5 rupees per room day. Guys. We are paying them 5 rupees for each and every room they attend every day. Guys, in first 6 months, how many rooms they have attended? 14,400 room days. In the next 6 months, 7,200 room days. You understood? Sir, but you should take equivalent. No, sir. Hey, do you think our these guys who work in our this hotel, they will be okay with we paying less money to them, telling that we are charging less? In the sum? Not 50 or 100? Oh, 50 it is. Then take it for 50. Basically in ICA module it is 100. 7,200, 3,600. Here it is 7,200, 1,800, 9,000. Correct? Here 6 month. 6 month 50 rooms, 280, 240. 6 month 50 rooms, 120. Total in a year 360 room months. Each and every room month wise. For electricity it is done. Okay, now listen. These guys are getting paid 5 rupees for every room they attend. On season they are attending on an average 7,200 room days. In the off season they are attending 3,600. They won't agree if we tell, boss, we are going to pay you half. For them we are paying full only, on season or off season. 5 rupees per room they clean every day. That is 7,200 plus 3,600, 10,800. 10,800 into 5, 54,000. This is your room attendant salary. Next, monthly lighting charges. Guys, try to understand. Instead of this, I am going to do like this. What is it, sir? First 6 month, on an average, out of 50 rooms available, 80% occupancy was there. So on an average, 40 rooms used to be there throughout the month. So How much we are charging per month for electricity? 120. How much it is? 4,800. Now, guys, other 6 months I am splitting. Try to understand. For the 2 months, only 28,800. Now, for the next 2 months, guys, although we have occupancy of the just 20 rooms, 40% of 50 room, still we are paying 120 rupees. 4,000. Now, for the next 4 months in the winter time, that time also 20 rooms occupancy was there on an average every month. For that, we are paying 30 rupees. Total. 36. Depreciation we have provided, right? So total cost is how much? 275 plus 13500 plus 40,000 plus 87,500 plus 95,400 plus 4 lakh plus 3 lakh plus 54,000 plus 36,000. 13 lakh 28,400. That is your cost. But they are telling profit they want on the basis of sales 20%, which means 25% on cost plus 25%. Whatever it is, overall divided by equivalent room days. Equivalent room days are 9,000. So per room, how much we should charge? Sorry? Total mistake. 14 lakh 18,000. 14 lakh 18,400 plus 25% divided by 9,000. Rupees 197, which means in a normal occupancy you are going to charge 197 per room. In the off season time, half of this 98.5. $197 and 98.5. You are going to do this. Mark it as LMR, guys. Guys, mark it as LMR. And also in hotel sum, you have to remember one more point. What is it, sir? That is, sometimes they will give a complimentary breakfast. What do you mean by complimentary breakfast, sir? Guest don't have to pay. The hotel guys will incur the cost. That you should add to the cost. Sometimes hotel will provide breakfast. For that they will charge from the guest extra. Now, this is not the cost of hotel. Don't include. If at all we are recovering it from the guest. Also swimming pool facility. If you charge for the guest, don't include in the cost of the hotel because you are recovering it. It's not your cost. If at all you don't charge for the guest, then only charge it. Add it to the cost. Got it? In hotel what we do, in the hospital what we do, basically whatever the cost is there, this question you just go through once. And listen here bed days calculation is very important. Sometimes here in the given question, if you remember the question, the hospital has a capacity of 40 beds. Okay, whereas we have already put 35 beds. If at all requirement is there, 5 beds we can. However, only when requirement comes extra 5, up to extra 5 we can do. However, we should pay the rent for those beds. Now, here for computing the bed days, it was estimated that for 150 days, 35 beds were occupied. For 80 days, 25 beds were occupied and hospital hired 750. Why the hell they will hire it? Because the patients were more than 35 in particular days. So total it is 750 in total. throughout the year. First one how much? 5,000. 80 into 25. Total 8,000 bed days or patient days. Okay. Now total your revenue divided by patient days or bed day will do. You will get per patient per day how much you should charge. Per patient per day how much you should charge for the inpatients. Okay. And now always remember, whatever this 750 you are getting, for that 100 rupees rent also you have to pay. 100 rupees rent also you have to pay. Got it? Go through that question once. Listen here. Nice question. Listen here. There are two warehouses for storing finished goods produced in a factory. Warehouse A is there at a distance of 10 km. Warehouse B is at a distance of 15 kilometers from the factory. Guys, here somewhere the factory is there. Okay. For this factory, the raw materials are stored in two warehouses. One is warehouse A, one is warehouse B. Warehouse A is there, no, that is 10 kilometers from the factory. Warehouse B is there, no, that is 15 kilometers from the factory. A fleet of 5-ton lorries is engaged in transporting the finished goods from the factory, which means lorry capacity is how much? 5 tons. Sir, if you put more than that, the lorry won't carry, it will. But if at all police catch, you have to pay the penalty. And you know that penalty won't be treated as normal cost. You should charge it to costing P&L. Got it? Penalty, etc. Now, the record shows that lorry average speed is 30 km when running and regularly takes 40 kilometers to load at the factory. So, at what kilometer speed we are running? 30 kilometers, which means in 1 hour you are able to cover 30 kilometers. And for loading it takes 40 minutes, and for unloading A it takes 30 minutes, B it takes just 20 minutes. Driver's wage, depreciation, insurance is rupees 18 per hour operated. They only have told how much it is directly. Fuel, oil, tire, repairs, maintenance is 2.4 per kilometer. You are required to draw up a statement showing the cost per ton kilometer carrying finished goods to two warehouses. Guys, listen. Very important, listen. Now, first, as per A, you should check how many minutes your lorry is operating in total. Guys, for loading, both are taking 40 minutes, 40 minutes. Correct? 40 minutes, 40 minutes for loading. Now, reaching the destination, we are going at the speed of 30 kilometers per hour, which means to reach 10 kilometers, we need how many minutes? 20 minutes now. A, to reach 30 kilometer you need 1 hour. For 30 kilometer you need 60 minutes, which means each and every kilometer need 2 minutes. Now we are reaching 10 kilometer, means it takes 20 minutes. Here it takes 30 minutes. Yeah. Boss, in 1 hour you can travel 30 minutes. For 10 kilometer traveling, how many hours you need? Can't you calculate that? 20 and 30. Now, while going back also you need 20 minutes and 30 minutes. Correct? Done. Sometimes they will tell while after unloading the speed they might change. That time it won't be same, it will be different. Generally it will be there because unload vehicles will go faster. Now, while loading I have added and this one I have considered. No. Okay. So for while loading it is 40 minutes, right? And 40 minutes. Traveling is done. For unloading it takes 30 and 20. For A it is 30, for B it is 20. Drivers, wages, depreciation and taxes is rupees 18 per hour. So guys, per trip how many minutes we are spending? 40 minutes for traveling, 40 minutes for traveling, 40 minutes for loading, 80 minutes plus 30 minutes for unloading, plus 30 minutes for unloading. How much it is, guys? 20, 20, 40, 40, 40, 80, 110 minutes. 110 minutes in case of A. B, 40, 30, 70, 70, 20, 90. 90 minutes per load. 90 minutes per load. What they are asking, you are required to draw up a statement. Cost per ton kilometer carrying the finished goods. Guys, how many ton kilometers we are carrying? 10 kilometers we are carrying 5 tons. 15 kilometers we are carrying 5 tons. In case of A, we are carrying per trip 50 tons, 10 kilometer. In case of B, we are carrying 5 into 15, 75 ton kilometers. This is what we are carrying. Sir, while going back we are going empty. No ton kilometers for that. Done. Now, driver's wages. Guys, how much it will cost? Driver's wages and all? 16 per hour. How many hours we are spending in A? 110 minutes. Guys, this one, 40, 60, 60 plus 30. Oh, 30, 30, 120, no? 120. Now try to understand. 18 rupees you are spending for 60 minutes. Per minute how much? 0.3, which means you are spending 0.3 for a driver depreciation insurance per minute. So A in a single trip operating 110 minutes. So 110 into 0.3 rupees 33. In case of B, 120 into 0.3 36. Next, maintenance etc. is 2.4 per kilometer. In case of A, we are traveling for 40 kilometers. Sorry, 20 kilometers. 20 into 2.4. Next, we are traveling how many kilometers? Sorry, how many kilometers? Yeah, 30 kilometers. 30 into 2.4. 70. Total will come to 81, 108. 81 and 108. If you divide by ton kilometers, you will get how much per ton. This is one of the important question. Mark it as LMR. Once they have checked it in ICA questions, ICA exam questions. A transport service company running 4 buses between 2 towns which are 50 miles apart. For you, just for a ease of calculation, consider it as 50 kilometers only. Seating capacity is 40 passengers. For the month of April they have given. So 1 month information they have given. Actual passengers were carried at 75%. All 4 buses run all day of the month. Each bus makes 1 round trip. Calculate passenger cost per passenger kilometer. Guys, total cost is 14,100. I am not going to touch that again. Why, sir? Because That is the cost per month only. Now, guys, in a April month, how many days? 30 days. You are doing 2 trips of 50 kilometers each. 50 kilometers each, which has a passenger capacity of 40, but only 75% will be occupied on an average basis. 90,000 passenger kilometer. Now 14,100 if I divide by 90,000. That is per bus. But this cost is for how many bus? $90,000, no? So this cost is for 4 bus. So it is 360,000 per passenger kilometer of the 4 buses. 360,000 passenger kilometers. Now what you are going to do? You are going to divide the total cost with this passenger kilometer. Each and every bus has 90,000 passenger kilometer. We got 4 buses because this cost is for 4 bus. 14,000 divided by 3,60,000 passenger kilometer. We will get to know how much is cost. All other things you can do it, guys. And for a mileage calculation, what you are going to do? Total kilometers traveled. You are going to divide with the mileage. Per liter, how much it will give. You will get to know how many liters you want. For that, you are going to multiply the prices of that. You will get a cost. Accordingly, all other things we have discussed once. Please go through this. If you get any doubt and all, please let me know. Go through all these questions once you go home. Got it? If at all when your marathon happening, if you are able to spend like 1 hour every day for whatever we discussed, then you would be having bit of idea about it. Otherwise, whatever I taught on first day, you would have forgot by now. Correct? Yes, sir. Is it yes? No. Done. So I'm not going to discuss more about service costing, not wasting much time because nothing special is there. However, in our additional question bank thing, I have solved one question based on student, leaving the students to the school bus question. Okay, go through that question once. School bus question, go through that. And also that hotel question, if I am not wrong, I have done that swimming pool and breakfast question also. In an additional question session. I hope they have given it as a separate access, no, there. In a videos, they have given it as additional discussion. You go and watch it. Okay. Chalo, with that we have completed our service costing. Now we are left with our major chapters like contract, process, JPBP, joint product by product, marginal, standard, budget and budgetary control. Budget and budgetary control. Got it? Only so much, no? Did we miss anything? No. Fine. Yes, guys. Now we'll be starting with contract costing. Okay. Contract costing. What do you mean by this, sir? This is nothing but ascertaining the cost for a contract. Ascertaining the cost of a contract. What do you mean by contract, sir? Guys. This is doing something as per the specification of the customer. Sir, then job costing, contract costing, same. Job is for the shorter span contract, whereas contract costing is for the longer span contract, which means it might go for beyond 1 year generally. Now, sir, in the contract costing, what we are going to prepare, guys, in the contract costing, listen here carefully, we are going to prepare something called as contract account. We are going to prepare something called as contract account. Okay. For each and every contract, we are going to prepare. Okay. Contract accounts are in which nature, just like your P&L, guys. contract account is P&L for that particular contract. Contract account is P&L for that particular contract. What do you mean by that, sir? All the expenses will be debited to contract account. All the leftovers, that is closing stocks, as well as sales, revenue generated from that will be credited to contract account. I repeat, all the expenses will be debited, all the stocks as well as revenue generated will be credited to contract account. Using that, we are going to find out either the profit of that contract or loss of that contract. But sometimes what happens, guys, contract will be for the longer period. Let's say 3 years. Now, you can't wait for receiving a money for 3 years. No, you can't wait for 3 years as a contractor. The person who gives you a contract is contractee. The person who takes the contract, that is you, your business. You are a contractor. Now you can't wait for 3 years. So what you will do, you keep on receiving the money in between and all. Now when you receive in between, you have to find out profit and all, no? Yearly. Now there we call it as a, there what we are going to do is open a contract account. Got it? There could be 3 kind of contract, guys. One is fixed price contract. Here both of them will sit, both of them will fight, both of them will talk, both of them will negotiate and will fix one price for the contract. Boss, I am going to pay this much for a contract. For example, now let's say Santosh want to build one house. Now he is like, see, in Chennai I want to build one house. Okay. Somewhere in between, like in the city, he want to build a house. He is coming somewhere from the far, no, 1.5 hours. He want to build one house. Okay, sir, I will build a house, no problem. He is like in search of the site and all. Where is like sites available? If you know this, guys, there is one Nungambakam SS Biryani branch is there now. Opposite to that, empty land is there. Correct? Where vehicles and all they will park. Let's say he bought that land. Now he want to build one house exactly opposite to SS Biryani. Okay. Hey. Now, when he want to build it to SS Biryani, now he called the contractor. Let's say contractor is Lokesh. Okay. He has one, the company called Lokesh Pawan Contractors. Together, partnership. Business partners. Lokesh Pawan and Co. Lokesh and Pawan. Lopa. Lopa. In Kannada, Lopa means defect. Imagine that they will keep for the construction. Okay. Lokpav. Okay. Now, Lokesh Pawan, they are sitting in the office. Santosh will go ask them, see, I want to build like this. My house should be like this and all. What I should do? How much is the money? Now Lokesh and Pawan will fix one money and tell. Now, whether the prices will go up, prices will go low, whatever it is, let's say 1 crore rupees they fixed. Now they should construct and give the specification of Santosh, the house specification, exactly opposite to SS Biryani at rupees 1 crore. Santosh is going to pay 1 crore. Whereas contract with escalation clause. What do you mean by that, sir? They fixed 1 crore. But now Lokesh and Pawan, they are telling, see boss, now the market is very much volatile. Okay, it is riskier. Sometimes the steel price will be 100, sometimes the steel price will be 150. So we can't trust in this. So what? So we'll do one thing. What? We'll fix the price as 1 crore now. Now, if at all the material price and labor prices goes up, you are going to compensate for that. Santosh has to pay something more than that. Of course, Santosh is going to pay as per the standard requirement, not as per the actual. Guys, 100 kg of, let's say 1000 kg of iron should be used. Now, they are using 1100 kg. 5 rupees is increase in the iron. Now, Santosh is not going to pay 1100 into 5, 5500. Why he will pay? he will tell, see boss, it's your mistake. You are supposed to use only 1000 kg. For that I am going to pay 5 rupees. I will pay 5000 extra, not 5500 extra. Now that is your escalation clause. Okay. And I think one escalation clause question we have discussed in the additional question bank. Just check once. Cost plus contract. Guys, cost plus contract means here Lokesh, Pawan, both are friends of Santosh. Now Santosh want to build a house there. They understand his feelings. Correct? They understand his concerns. They understand his requirements. Now, what they will tell is, see boss, you are our friend only. We are not gonna lie. See, for your house, no. It takes 80 lakh rupees to construct. Santosh is like, is it? Okay. So what they will, so I have to pay you 80 lakh. They are like, what? You are our friend. That doesn't mean that we should not make a profit out of you. Business is business, friendship is friendship. But for what we are telling you cost also. For others, we don't tell cost. You do one thing, 80 lakhs plus 10%, which means whatever cost we incur, on that you pay 10%. We will not compromise with quality and all. Now Santosh is like, okay, fine. Why Santosh don't want them to compromise with the quality? Otherwise, what they will do? Selling price is fixed. So they will try to reduce the cost as much as possible. Now they are least concerned. They want a quality there. Cost, whatever is there, upon that, over and above that, 10% Santosh is giving. Now that is cost plus contract. Cost plus contract. Got it? Yes. Guys, for this machinery and all, whatever we use, no. Accounting for it in contract, there are two types. What do you mean by that, sir? Either you can take the depreciation as an expense in a single line. One line depreciation, or what you can do, machinery what you introduce, that you take in the debit side, machinery book value what is remaining, that you take in the credit side. Balance will be depreciation. No, either take the depreciation, or either opening balance you take in the debit side, opening balance are introduced in the debit side, closing balance in the credit side. Balance will be. There are few important terms called work in progress. What do you mean by work in process or progress? Nothing but, guys, how much contract is complete? The contract is not even, it is started already. Santosh house construction is already started. And this year end, 70% of the work is done. Which means out of the total contract, 70% is work in progress. Got it? Work in progress. However, now if Lokesh and Pawan tells 70% of the work is done, do you think he will believe? He won't. What he will do? He will ask his engineer to check. Now the engineer will come and check, and he will certify, telling that about 60% of the work is completed. Now, although 70% of the work is done, only 60% is work certified. 60% is work certified. Now the extra 10% which the work is already done, but it is not certified by the engineer, that we call it as work uncertified. Work uncertified. Got it? Depends on what you take. If you take the contract price value, if you take the cost. Now, Santosh, they are telling boss 1 crore was the agreement. Now at least your engineer told no 60% is done. Give us 60 lakhs now. Do you think he is idiot to give it? What if Lokesh and Pawan won't come from tomorrow? So he will give only 50 lakhs. Now the 10 lakh is retaining. 10 lakh is retaining. No, that we call it as a retention money. Now, guys. Whether the profit is already made by the Lokesh and Pawan? No, not yet. The final profit will come only and only once the contract gets completely over. Which means now what they are thinking, they made a profit that is called as notional profit. Not actual profit, it's a notional profit. How to arrive at it, sir? How much is the value of the work certified? 60 lakh rupees. How much is the cost of work certified? 48 lakh rupees. Now 12 lakh rupees is a notional profit. What is it? What is it? What is it? How much is the work certified value? 60 lakhs. How much is the cost of that? 48 lakh. Difference 12 lakh is notional profit. Notional profit. Estimated profit means what, sir? Guys, what we are estimating in total. Let's say 90% of the contract is done. Now we are like to complete the remaining 10%. How much cost we might incur? We know the contract price. How much cost we might incur? So total contract price, that is your value, minus how much cost you are already incurred, plus for 10% how much extra you might incur. Together we'll calculate and we'll find out how much would be our estimated profit in total from the contract. Now that is your estimated profit. Got it? Now, sir, whatever the notional profit is there, are you going to transfer? Are you going to transfer everything to the P&L? The answer is no. We are going to keep something as a provision. We are going to keep something as a provision. How much, sir? Try to understand. If at all, guys, your work is less than 25% completed or equal to 25% completed, less than 1/4, less than or equal to 1/4, you are going to transfer nothing from the notional profit to P&L. You are going to keep everything as a provision. Whatever the notional profit is there, you are going to transfer nothing to P&L. You are going to keep everything as provision for contingency. Now, what if work is completed more than 25%, sir, but of course less than 50%. More than 25%, less than 50%. In that case, 1/3 of your notional profit. 1/3 of your notional profit shall be transferred to P&L. Remaining 2/3 of the notional profit will be kept as a contingency. Got it? Now, what if, sir, 50% greater than or equal to 50% we have done? In that case, 2/3 of the notional profit will be transferred to P&L. Once the contract get over, then we are going to transfer 100% of profit. Then there is no question of notional profit. Everything is a profit. Okay. Come on. Come again. Less than or equal to 25. 0%. 0%. More than 25. But less than 50. 1/3 of the notional profit. If it is more than or equal to 50, 2/3 of the notional profit. Guys, sometimes we might also consider cash received and work certified for the computation. Generally we'll do 1/3 or 2/3, no? Along with that, we might also consider cash received out of the work certified. Whatever the retained, relating to that, whatever the money is there, for that also again we are going to keep. First to try to understand. 2/3 we have transferred, let's say. 2/3 we have to transfer, which means 1/3 we already kept as a provision. Now you are not keeping only 1/3. In the 2/3 what you are supposed to transfer, in that again relating to retained money you are going to retain. You are going to keep provision, which means you are going to transfer to the P&L only to the extent of received portion. Only to the extent of cash received portion, only to the extent of realized portion. That is cash received divided by work certified. Got it? It will. Cost is not affected by notional profit. Why the cost will get affected by notional profit? We'll see. Now, look at the questions, guys. A firm of builder carrying out a large contract kept in a contract ledger. Okay. Separate account for each contract on 30th June. The following were shown being expenditure in connection with contract number 555. Guys, material purchased 116, 126. We'll take it in the debit side or credit side. Material issued from stores. Again, debit. Plant which has been used on the other contract. Guys, either you can find depreciation or you can take plant in the debit side, balancing figure of plant in the credit side. Generally, it is better to take the depreciation, let it be. Okay, these two you leave now for the time being. Wages, debit. Direct expense, proportionate of establishment expense. The contract which has commenced on February for 6 lakh and the amount certified by the architect after deducting 20% of the retention money is 2,41,600. Work being certified. Guys, this is your money what you are receiving out of the work certified. I will show that. The materials on site is 19,716. This is closing stock of material in the site. You are going to take it in the credit side. A contract plant ledger was also kept in which depreciation was dealt monthly. Amount debited is so much, which means they have given depreciation directly. So don't take these two amounts, take directly 2260. See here. What we'll do, sir, first we'll find out how much is the cost of contract in total. All the expenses I have debited. Whatever the balance remaining in material, I have credited. Now the cost of contract is 2,87,000. 2,87,000. Guys, next, in the credit side, in generally P&L, what we will take? Closing stock and sales. No. Now, whatever the cost is there towards that sales is nothing but your work certified. That will be your sales because that work is done. As good as your customer accepted it. Now, work certified, you are going to take it a value. That is selling price. If the work is uncertified, that is as good as your closing stock. Closing stock, you should take it cost. Always remember how to compute WIP, sir. WIP comprise of two things. Value of work certified, cost of work uncertified. Value of work certified, cost of work uncertified. Sir, why value, why cost? Go and watch the classes. Now, sir, okay, how much is the work certified you are telling, sir? Guys, some amount is work certified here. Some portion that is work certified. We don't know how much. But after work certified, our contractee, the person who gave a contract to us, taking 20%, retaining 20%, later giving us a money of 241,600. Later giving us a money of 241,600. So now easily we can find out how much is work certified. X minus 0.2x is equal to 241,600. X is equal to 3,02,000. 3,02,000. Guys, value of the work certified is 3,02,000. Did they talk anything about the work uncertified? No. Which means what we are going to assume? Cost of work uncertified is 0. Cost of work uncertified is 0. Guys. So far to do this work certified plus work uncertified together, how much cost we incurred? 2,87,000. How much is the value of work certified plus cost of work uncertified? 3,02,000. Which means 15,000 is notional profit. Now, that is done. Now, notional profit we bought. How much to keep as a provision, sir? How much to transfer to P&L? How much to keep as a provision? How much to transfer to P&L? Guys, all we have to do is, how much was our contract price in total? 6 lakh. Out of 6 lakh, how much is the value of work certified? 3 lakh 2000, which means, can I tell 3 lakh 2000 divided by 6 lakh? How much it is? 50.333 percentage, which means over and above 50% or more than 50%. How much of the notional profit to be transferred to P&L? 2 by 3. That is, out of 15,000, 2 by 3 is how much? Rupees 15,000 into 2 by 3. Guys, in the question, cash retention is also there. So, only to the extent of amount received out of work certified, I am going to transfer. Remaining also, I am going to park it in the provision only. That is, how much is the cash received? They are telling 2,41,600. How much is work certified? 3,02,000. How much? 8,000 is what we are going to transfer to P&L. 8,000 is what we are going to P&L. Remaining 7,000 you are going to keep it as provision for contingency. Provision for contingency. Hope it's clear. Shall we go to the next one? May I know total till how many illustrations it's there? 20? Three are there, no worries. Listen. A contractor has undertaken a construction at a price of 5 lakh. This is contract price. And begun execution of work on 1st January. The following is up to 31st December. 1 year data they have given. Machinery, guys, what we should do? Either we should take the opening balance of machinery and closing balance of machinery in the debit and credit respectively, or take the depreciation in the debit side. Material, debit. Wages, debit. Direct expense, debit. Uncertified work, that is opening WIP. Opening WIP, debit again. Wages outstanding, debit. Value of machine, closing also they have given. Guys, they should have given it as 22nd, okay? 2022. So, 8,000 is a depreciation. I am going to take depreciation 8,000 in the debit side. Overheads, debit. Material returned, credit. Work certified. This is value of work certified. If they don't tell whether it's a value or cost, work certified will be value. Because engineer won't be knowing how much is the cost. As a contractor, we will be knowing the cost. Unless and until they give it as a cost of work certified, it's always and always value of work certified. If they give work uncertified, sir, then it is cost. Why? Engineer didn't even recognizing that as work. Only we know that is work done, but is not yet valued. Which means we will value it at cost only, no. Cash received they have given. Materials, closing they have given. This is credited. Okay. Cash received has nothing to do with the contract. Leave that. Now, it was decided that profit made on the contract in the year should be arrived by deducting the cost of work certified from the total value of the architect certificate. That is, 1/3 of the profit so arrived. It should be regarded as a provision against contingency, and that such provision should be increased by taking the credit of the P&L account only such portion of the 2/3 of the profit as cash received to work certified. Guys, they are telling how to treat the notional profit. That I will tell later. Basically nothing. Whatever we discussed, that only. Prepare the contract account. Depreciation 8,000. Material, wages, outstanding wages, direct expense, overheads. Material returned will be credited. If you transfer to any other contract, that will also be credited, and closing material will be credited and will arrive at a cost of contract. Now it is the time to compare cost of contract with the WIP. Now, Now guys, WIP includes two things: value of work certified, cost of uncertified. Value of work certified, they only have given it as 390,000. Work uncertified, they also have given it as a 9,000. Value of work certified and cost of work uncertified. Now we'll get to know notional profit. Notional profit. Now what they are telling about notional profit? It was decided profit made on the contract in a year should be arrived by deducting the cost of work certified from the total value of the architect's certificate. That is, deducting the cost of work certified from the value of work certified, they are telling. And 1/3 of profits so arrived, it should be regarded as a provision against contingencies, and such provision should be increased by taking to the credit of P&L only such portion 2/3. Basically whatever we done now, they are telling take the amount which is equivalent to cash received. Whatever money retained relating to that also create a provision, they are telling. Increase by that one, they are telling. Now listen, how much is our notional profit, guys? 56 lakh, 56,450. In that they are telling, boss, 1/3 you keep as a provision, okay, 2/3 will be profit. Wait. In the 2/3 also, whatever the money retained by them, you keep it as a provision, which means whatever the money received only relating to that transfer to costing P&L. How much money received, guys? 360,000 out of work certified 390,000. That you transfer, remaining you keep it as a WIP, provision for contingency. Hope it is clear. Look at the 13th one. A contractor commenced the work on a particular contract on 1st April. He usually closes his books of accounts on 31st December. Following information is revealed from his costing records. Material sent to site, debit. Junior engineer, debit. Debit to the extent of how much junior engineer provides service. If they tell junior engineer in this contract gives 6 months of his time, which means 6/12, like that. Got it? Labor, debit. A machine costing 30,000 remained in use on site for 1/5 of the year. Its work life is estimated 5 years. Scrap value is 2,000. Guys, try to understand what is the cost of machine. 30,000. But scrap realization, which means the total depreciation of the machine for a year is how much per year? 5,000. However, this machine is not there for the whole year in our contract. It is there for only 1/5 of the year. Sorry, 1,120 will be depreciation, which should be debited. Got it? A supervisor is paid 2,000 per month and had devoted one half of his time to the contract, which means in a year he is devoting 6 months to this contract, which means 2,000 into 6, 12,000. That should be debited. All other expenses were 14,000. That should be debited. Material at site is 2,500 credited. The contract price is 4 lakh. On 31st December, 2/3 of the contract was completed. However, architect gave certificate only for 2 lakh, on which 80% was paid. Sir, now how to compute the work uncertified? Very simple, guys. You will get to know the contract cost. You will get to know the contract cost. Yes or no? Now, we know that contract cost, whatever you get is 2/3. For example, let's say contract cost what you get is 4 lakh. Contract cost what you get is 4 lakh. Now for full contract, how much is my estimated cost? 6 lakh. How much is my estimated cost? 6 lakh. Now Now our engineer is telling, let's say 80% of the contract is done, or let's say 60% of the contract is done. He is telling 60% of the contract is done, which will come to 3,60,000. But we know that we already incurred a cost of 4 lakh. But he is telling only 3,60,000, is certifying only 60% of the contract, which means cost of work certified is 360, then remaining 40 is cost of work uncertified. Like this, you are going to find out the cost of work uncertified. Got it? See here. Material, junior engineer, labor, depreciation 1120, you know how we calculated it. Supervisor, we started on April. 9 months. Guys, 9 months. In a contract, 9 months is there. So 9 months means it will be 18,000, no? However, in this 18,000, this salary is devoting only half to our project, which means supervisor salary is 9,000. Other expense they only have given. Material at site, we got to know how much is our cost of construction so far. How much we incurred? 177, 460. Best part is our 2/3 contract is already done. 117,460 is the cost of contract for 2/3 of the contract. For the full contract, question mark 3/2. $266,000 190. Okay. Now, however, architect gave certificate only for 2 lakh, which means guys try to understand how much he is thinking it's done. What is the total contract? 4 lakh. He is telling certified as 2 lakh, which means he is certifying only 50% of the contract, which means may I know how much is the value of work cost of work certified, not value. Value is 2 lakh. Cost 1 lakh 33,095. Guys. We already incurred cost of how much? 117,460. Sorry, 177,460. In this total cost, what we incurred, how much cost work is certified? 133,095 is certified. How much is not certified? 44. That is not certified. That is how we are going to compute the cost of work uncertified. Please mark it as LMR. Here in question only they haven't given, but they have given all the hint. Using that you are going to calculate. I hope you guys understood. You understood now what I did? I know that 2/3 of the contract is done. For 2/3 I spent so much money. For full contract, how much I will spend? I will get to know total cost of contract. Also, I know that our architect is telling only 50% of work is completed, which means I know how much it will take in full cost. Of that 50% will be cost of work certified. I know how much I incurred so far, how much is certified. Difference is, sir, then why to take that 133 and also take 2 lakh only? 2 lakh is the value of work certified, not cost of work certified. Cost minus cost only will give you cost, no? Cost minus value will give you what? Profit. You want to find out the cost of work uncertified. Cost of work uncertified. Using the total, cost incurred so far and cost, in that cost how much is certified. Balance will be uncertified. See, here the numbers are complicated. I told you with a simple example here. Let's say I incurred a cost so far is 3 lakh rupees. I know that I completed 3/4 of the contract. So can I tell that for 3/4 of the contract, if I am incurring cost of 3 lakh, I can estimate my total cost to be 4 lakh? Yes. Now let's say my contract price is 7 lakh. My contract price is 7 lakh. My architect is telling I am going to certify only 350,000 values contract. He is certifying only 3,50,000 values contract, which means can I tell he is certifying 50% of the contract? Yes. Now guys, can I tell that if at all 4 lakh is my total contract cost, in that 50% is certified, can I tell that out of total contract cost, 2 lakh is certifying it's already incurred. But the best part is we know that we incurred 3 lakh, which means 1 lakh is work uncertified. So this question you go home and try once again. Very important. So using that we got to know how much is our notional profit, and guys we know that our work certified is 50%. So what we are going to do? We are going to find out how much profit to be transferred to P&L. Guys, how much is our notional profit? 66,905. More than or equal to 50% work is completed. Then we are going to transfer 2/3 of our profit to P&L. However, in the 2 lakh guys, only 80% is paid, which means only to the extent of amount they paid. Other 20% again kept as a provision. In that 1/3 again plus this one. How much? 35,000. This is provision. Hope it is clear. No doubts. Akka. Shall we see one more? See what's the time? 4:30. No, I don't know till 5 in contract costing how many questions can be solved. Till 5 we'll solve. After 5 immediately we'll go to process costing. Fine, no? That will be fine, right? We'll see how much ever is possible. So far we'll solve. See, they have given work in progress is 85,000. Less cash received from contractee is 55,000. This is opening. Opening WIP is how much? 85,000. This includes what and all? Value of work certified and cost of work uncertified. Value of work certified, cost of work uncertified. During the year, wages is there, debit, materials bought, debit, working expense, material issued from stores. Issued from stores, not sent back to stores. Expense only, no. Administrative expense 250 is chargeable to P&L, which means 1,000 rupees debit. Plant 2,500. Guys, if at all they have given any other information, I am going to take only depreciation of that. Have they given any other information? No. Then I am going to take full. Material returned to supplier, credit. Material returned to stores, credit. Yeah, material bought. Work certified, that is value of work certified. Contract finished, they have given how much contract we have already finished. Profit taken up upon contracts, advance from contract is 40,000. Whatever we have received from contract is 40,000. Done now. So now listen here. Contract account, WIP, wages, material, working expense, administrative 1,000, plant. Material return to supplier, material return to cost of contract is 114,000. Now 114,000 guys. Work in progress, that is value of work certified. How much? 15,000. Correct? Value of work certified is 15,000 and guys, now listen here. Contracts finished, which means we finished. Our contract gave us money also. He gave us money also to the extent of 22,500, which means guys, whenever we receive a money, what entry will pass? Bank account debited to contractee account. Now once the work is done, is no more our creditor kind of thing. Is no more our creditor. Why? We done the work for him, he paid us the money. Now this will be treated as income. We are going to transfer it to contract account. Contractee account will be debited to contract account. So by contractee 22,500. By contractee 22,500. Now profit taken upon contract, they only have given how much is a notional profit also. So notional profit also I will take. So the balancing figure will be work uncertified. Balancing figure will be work uncertified. If you see the contractee account, guys, opening balance 55,000 was there. During the year they are telling we received 40,000. In that 22,500 contract we transferred it to him. No more we are related to that now. Transferred. Balance is still our creditor for 72,500. Got it? Sir, balance sheet, what will come, sir? Basically, how much liability we got? 72,500. How much asset we got? Work in progress. That 1,03,000. Our work in progress is our asset now. We have done it now. Our stock, right? As a contractor, it's our stock asset. Got it? This is how you are going to do it. Mark 14th also as a LMR. Ranjini, understanding, madam. Now listen. The information given under has been extracted in the books of contractor relating to contract for 375,000. Guys, always remember, question will be two types. They will give three different contracts or 3 different years. Same contract, 3 different years, or 3 different contracts, same year. Both type of questions are there in your study material. This is only one contract running for 3 years. You should go year on year on year. See here, first year, contract account, material, debit, direct expense, indirect expense, wages, total work certified, WIP, credit, work uncertified, not there, plant, balance is 5,000 or plant used is 5,000, debit it. The value of the plant at the end of the year is 4,000. So instead of 5,000, what I am going to take? Depreciation 1,000. Depreciation 1,000. It is customary to pay 90% in cash of the amount work certified. So 87,500 is work certified. Of that, they are ready to pay 90% of it. 78. Done. Prepare a contract account. Now 45,000 material, direct expense, indirect expense, wages, depreciation of 1,000. So my cost of contract became 91,000. Now 91,000 is my cost of contract. Anyhow, value of the work uncertified is not there. I mean, cost of work uncertified is not there. Value of work certified is there. 87,500. Guys, value of work certified is 87,500. Cost of construction is 91,000, which means it's not a profit, it's a loss. How much? 3,500. Okay, sir, how much provision to be kept? Hey, for loss, what provision you will keep? Against conservatism, no. If you think, okay, loss is there, but profit will come. Profit is there and we are keeping something for loss, makes sense. Loss is there, we'll keep for profit. Got it? That is as good as Santosh waiting. Logicless. Useless. Now, second year. Guys. Last year's closing WIP will be this year's opening WIP. So, 2 work in progress, 87,500. Okay, done. Next, second year what we are doing, sir? We'll take the material, debit, direct expense, debit, indirect expense, debit, wages, debit, work certified, credit, work uncertified, credit. Take it as a WIP. And I told you already, if they just give work certified, it will be value. If they just give work uncertified, that will be cost. Why, sir? Work certified will be done by our engineer. Our engineer won't be knowing the cost of ours. He is not a related party at all. He is not from the side of contractor. He is not from the side of contractee. He is an independent valuer. Work uncertified, guys, we know that how much cost we incurred. We know that how much that idiot has certified. How to know also, I calculated and showed and marked it as LMR question. So this will be work uncertified in cost. And second year, value of the machinery will be 2,500. Second year opening plant was how much? 4,000, not 5,000. Why? First year 1,000 depreciation. And second year closing is how much? 2,500. Depreciation for the second year is 1,500. Clear? Cost, total cost is becoming 2,08,750. Accumulated cost. Last year's cost plus this year's cost. So this is so much. And guys, WIP opening is, closing is how much? 280 to 500 and 5,000. Now we get to know how much is our notional profit. Now my question is, how much was the value of contract? 3,75,000. In that, how much is certified? 2,82,500. Which means, of course, more than 50%. Which means you should transfer 2/3 of your notional profit along with the adjustment of the retained money, because the retained money information is given here. 90% of the cash is paid. So, how much is your notional profit, guys? 78,750 into more than 50%, 2/3 will be transferred. In that also, just 90% will be transferred. Other 10 retained money related will be provision. 47,000. Remaining 31,500 is provision. Got it? Third year. Third year, guys. This year's closing will take it as a opening there. 2,80,000 to 500 and 5,000. Got it? Now, material debited, direct expense debit, indirect expense is not there, wages debit, total work certified. Oh my God! What is the best part? Contract is done. Otherwise, he is not idiot to give 100% as the work certified, no? Which means contract is done. No more contract account required. Whatever we received from the contractee, we are going to credit it. Now, plant, guys, at the end of third year, it will be 1,000. Beginning of third year, how much was the plant value? 2,500. How much is the third year end value? 1,000. Which means depreciation is again 1,500 for the third year also. So, this, and this, and cost of contract is 3,33,750. Work certified is so much, and 41,250 is your notional profit. As the contract is done, transfer everything into P&L. You don't even have to keep it as notional profit. In fact, directly you can tell it as a 2 costing P&L. Hope it is clear. Clear, no? See here. The next one which I told is here. That I told year basis. This I told same year but different contracts. Same year, different contracts. Here you can open the contract account, 3 different contract account, or open one contract account, open 3 amount column. One is for contract 1, one is for contract 2, one is for contract 3. Left to you guys. Now, a firm of engineer undertook 3 contracts beginning on 1st January. That is contract number 1, 1st January, 1st May, contract number 2, 1st August, contract number 3. Their account on 30th November. So 30th November, till 30th November it is. Not even 1 year. Contract price they have given. Great. They're asking you to respective date the plant was installed, depreciation thereon being taken at 15% per annum. You are required to prepare contract ledgers. Guys, material, debit, wages, debit. I'm talking about contract 1 now. General expense, cash received for work certified. Ignore. Bank account debit to contractee account. Work certified. Debit or credit? Credit. Work uncertified. Credit. Wages outstanding. Debit. General expense outstanding. Plant installed 4,000. 15% depreciation you have to give. How much it will be? 4,000 into 15%. But the best part is the plant is installed on the 1st January only. No doubt in that. But used till 30th November. 11 months. For 11 months how much? Depreciation. 550. Debit it. Material in hand. Credit it. Clear? And cost of construction we got. Using that cost of construction, we calculated our WIP, value of work certified, work uncertified. We got to know our notional profit is 3,400. Now guys, how much is cost of contract? 37,800. That you leave. Listen here. How much is the work certified? 40,000. How much is the contract price? 80,000. Moral of the story, 50% certified. If 50% certified, 2/3 should be transferred. Also, cash received is also given, which means how much is notional profit? 3,400. In that, 2/3 should be transferred. However, out of the work certified, only 30,000 is cash received. Sorry, 1,700. Remaining 1,700 you are going to keep as provision. Got it? Shall we go to second contract? Guys, material, debit. Wages, debit. General expense, debit. Cash received for work certified. Ignore for the time being. It won't come in contract account. Once it gets over, then only contract account will be credited. Cash received will be debited. Work certified. Credit. Value of work certified. Work uncertified. Credit. Closing WIP. Wages outstanding. Debit. General expense. Debit. Plant install 3,200. But depreciation will be, guys, 3,200 into 15%. However, from the May, June, July, August, September, October, November, 7 months out of 12 months. Material on hand, credit. Nothing, I don't have any like hatredness towards Dhoni and all. I love Dhoni. You want Amla? Guys, 280 is depreciation. Got it? Now listen. 11,600, 22,500, 750, 550, 100, 280. We got to know how much is the contract cost of contract. 34,980. 34,980. Guys, how much is the work certified? How much is work uncertified? 32 and 1,600. 32,000, 1,600. Got it? But there is a loss. Should you keep any provision? Should we keep any provision? No provision. Contract 2, done. Contract 3, debit, general expense debit, cash received, ignore, work certified, credit, work uncertified, credit, wages outstanding, debit, general. Sir, that is liability, no sir. Hey, it is expense which is not paid. Plant installed 2,400, guys. 2,400 into 15% into August, September, October, November, 4 months. 4 by 12. 120. Depreciation is 120. And material in hand credit 800. 800. So cost of contract is 6720. I will take 6720 and work certified, work uncertified I will take. So notional profit is 880. Now try to understand how much is the work certified? 32,000. Sorry, 7,200. How much is the cost of contract? 60,000. So how much is work certified? 7,200 divided by 60,000 into 100. Either you are going to compare value and value or cost and cost. If they give cost of work certified, that time how to find out percentage, sir? Compare it with the cost of construction. Cost of contract you will get, no? That you compare. Numerator, what is your cost? Denominator, cost of contract. So, guys, how much it is? 11.6. Huh? 12%, which means less than 1/3, that is 33.33, which means you are not going to transfer even a single rupee of the profit to notional profit. Everything is contingency. Everything is contingency. Got it? This is how we are going to do that one. Shall we see the 17th one? Might be the last question of contract costing. The following is the trial balance. Contract is account. Guys, amount received 3 lakh. Building is there 160,000. Creditors, bank balance, capital, material, wages, expense, plant. Guys, material, wages, expense, all these are outstanding. No. Then why it will come in asset? These are expenses. Trial balance. The work on contract number was commenced on first. Material 170 were sent to the site to the contract. So debited. Correct? Next. 6,000 were destroyed in the accident. That is credited. 6,000. Costing P&L. Abnormal loss. Don't treat it as a cost of contract. Abnormal loss. Then wages 180,000 were paid during the year. Next, plant costing 50,000 was used on the contract all throughout the year. So we don't know the depreciation. Plant with the cost of 2 lakh was used from 1st January to 30th September and then was returned to stores. Now, the material of 4,000 were at site, that is closing balance. I am going to credit it. The contract was for 6 lakh. Contract pays 75% of the work certified. Work certified was 80% of the total contract. Uncertified work was estimated to be 15,000. Now, expenses are charged to the contract at 25% of wages. Plant to be depreciated at 10% for the entire year. So 10% per annum. Prepare a contract account. Now depreciation, try to understand. One plant is there, 50,000, it is used throughout. Depreciation is 5,000. 10% no. 50,000 into 10%. 5,000. There is one more machine which is costing rupees 2 lakhs, 10%, and it is used till 30th September, which means 9 months. 9 by 12. Total depreciation. Got it? Got it? Expenses 45,000. Done. Now, cost of contract is 4,05,000. Now, they are telling how much of the work is certified. Work certified was 80% of the total contract work. How much is the total contract? How much is the total contract? 6. Have they given? 6 lakh. So 6 lakh into 80%. 4,80,000. Work uncertified, they only have given. Notional profit we got. And anyhow, we know that more than 50 is certified. So 2/3 we have to transfer to P&L. That is rupees 90,000 into 2 by 3. But however, are we receiving every money or they are retaining some money? Only 75% they are paying. So only 75% will transfer. Sorry? 45. They are taking 50,625. If I am not wrong, they are not taking this 75%. Just check 90,000 into 2 by 3. Huh? Then what they are taking here? We rectified it. Done. We rectified it, sir. Watch, go through recordings wherever you have taken leave. Basically, whole costing class. Like that you are going to do. In the P&L account, you see, guys, from the contract account, we are receiving that money, 45,000 in our books. And sorry, this 6,000 is material which we lost. And the machine which we didn't use in this site is used somewhere else. So relating to that depreciation and expenses and net profit we got. That will come to 32,000. Accordingly, do it. Got it? Yes. All other things, guys, go through it once. All other questions, kindly go through it once. With that, we have completed our contract costing. Next, we'll be starting with process costing. Okay. Take a... Yes. Guys, now we are going to start with the process costing. Basically, this chapter, guys, listen, just process costing could be divided into 3 main portions where they are going to examiners going to ask the questions into. One, they might ask the process accounts. Okay. The other one they might ask is inter-process profit will be there. That kind of questions. The other one is equivalent units. Okay. And also in this chapter only they have given you joint product and byproduct also. That also we are going to discuss. Now quickly we'll start discussing about process costing. Shall we? Now, sir, what do you mean by process costing? Again, it is the method of costing, of ascertaining the cost. Ascertaining the cost of what, sir? Guys, ascertaining the cost of the product when that particular product goes through different processes. In a single process, it's not getting manufactured. It goes through different processes, that we call it as a process costing. The method of costing where we are going to ascertain the cost of the product, where before it becomes finished, it goes through different processes, that we call it as a process costing. Basically, let's say 3 processes are there. Process 1, process 2, process 3 and finished goods. Now, in the process 1, we'll input material, we'll input labor, we'll input direct expense, we'll input overhead. Now, what happens? Process 1, it will get processed and it will get transferred to process 2. While in processing in process 2, we might add some material, but always and always remember, guys, that is not a main material. Which means For example, if you put an input of 10,000 units here, then output cannot exceed, I mean, generally, unless and until it's a chemical, it won't exceed. Because if you, for example, you are producing bat. Process 1, you are cutting a wood into bat shape. Process 2 is joining that handle and a wood. Now, in process 2, can you give a wood? No, it should come from process 1 only, no. So, process 2, of course, you are going to give gum, you are going to give the sticker, you are going to give that, what is it called as, stroke, these things. But, end of the day, you can't give directly again wood in the process 2. So, material introduction will be there, but not the main material. Again, here also labor will be there, overhead will be there, all those things will be there. Process 2 output will be input for process 3. Here process 3 also will input material, labor, overhead, direct expense and all. Then whatever the process 3 output will be there, that will be finished goods. So one thing is very clear here. In the process costing, output of one division or one process will be input for the other one. Output of one will be input for the other. Output of one will be finished goods. Got it? Done. So from the point 1 now, here till it gets finished goods, it will be work in progress only. It will be work in progress only, because before going through the different processes, you cannot know, you cannot call it as finished goods, no. That is your process costing. Sir, generally in process costing, what we will do, sir, in process costing, we open a process account. We'll do the process account. Guys, process account, you can divide it into 3 columns. Amount, you can divide it into 3 columns generally. What are those, sir? Guys, units, rate per unit, amount. Units, rate per unit, amount. You are going to do like this. Got it? And now, sir, how to ascertain the cost per unit? How to ascertain the cost per unit? How to ascertain the cost per unit when there is a normal loss, abnormal loss, all those things? If you remember, cost per unit will be, guys, total cost incurred. Total cost incurred minus scrap recovery from normal loss, minus scrap recovery from normal loss, whole divided by total input for that particular process, actual total input for that particular process minus normal loss units. You will get the cost per unit. You will get the cost per unit. Whatever you get, now you will multiply it with the units transferred to next process to ascertain how much to be credited to the next units. I mean, next unit will be debited by what amount, and closing stock will be there. For that also we will calculate how much it is. And also abnormal loss is there, that also you take. If the abnormal gain is there, that will come in the debit side. Abnormal gain is there, that will come in the debit side. Got it? I will just show with the questions only how to solve it. I am not going to. Now, what do you mean by abnormal loss, guys? Let's say you are inputting 10,000. Input is 10,000. 5% is a normal loss, which means you should get 950 as output. No. Let's say you are getting the output as 920. You are getting the output as 920. Now, this 50 is your normal loss. Whatever the loss is there over and above normal loss, that is 30 units. That is your abnormal loss. That is your abnormal loss. Now let's say this 950 is there. This 950 is there. Let's say 965. Sorry, 9,500, 9,200, 9,600. Now guys, normal loss was 500, no? Normal loss was 500, no? But actual loss is just 400, which means 100 is not a, 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 100 is The loss which is less than normal loss, the difference is abnormal gain. If the loss is more than normal loss, the difference is abnormal loss. Got it? Cost, if you want, you can remember it just by considering it as total cost minus scrap recovery from normal loss whole divided by input in that particular process minus normal loss. Sorry. Now, in the abnormal gain account, what you are going to do, sir? See, abnormal loss is there, no? That should be eliminated from the total cost and it should be charged to costing P&L. So what you will do, in process account, whatever debit is expense, no? If you credit it, then it is as good as eliminating a cost. So you will credit the abnormal loss, and in the abnormal loss, what you will do? You will write to process account. Okay, and you will realize some money from that, no, scrap recovery, that you will write it as by bank account. Whatever the balance is there, that you are going to charge to costing P&L. Whatever the balance is there, that you are going to costing P&L, that is your abnormal loss account. Sir, abnormal gain, what you are going to do, sir? Guys, this is very important. Abnormal gain will be credited by process account. Correct? Now, are you going to recover any scrap from abnormal gain? Why you will recover scrap? Because it's an important product, main product. So, sir, what we are going to debit, sir? Guys, to the extent of abnormal gain we got, to the extent of the normal loss scrap recovery you did. For example, last time I did the 500 recovery. But the best part is scrap was not there for 500 at all. Scrap was just 400. Relating to 100 you recovered, no, that you reverse it now, which means to normal loss. To the extent of scrap unrealized, that is nothing but abnormal loss units into scrap recovery rate. Whatever the balance will be there, that will be credited to costing P&L. That will be credited to costing P&L. Sir, in normal loss account, sir, guys, always and always remember, normal loss, should you write the amount? Normal loss, should you write the amount? Never. Why? If you write the amount, don't you think the cost will get allocated to that also? So you should never write the amount. However, if the scrap recovery is there, that should be reduced from the cost, which means that should be credited. So generally when you write normal loss, only units you take. So only good units will be remaining. However, if the scrap recovery is there, that also you take in the credit side, so that debit balance will become nil. Less. So normal loss, what you should do, guys? If the scrap recovery is there, amount column, scrap recovery is not there, amount column 0. If the scrap recovery is there, units into scrap recovery, that will be in the amount column. Got it? Shall we see this one question? How many illustrations are there? Just check and tell me. A product passes through 3 processes, A, B and C. The details of the expenses incurred on 3 processes were as follows. Only in process plus JPBP. Now, units introduced during A is 10,000 units. How many units? 10,000 units. Guys, cost per unit introduced is rupees 100. In process A, again we introduce the sundry material, labor, direct expense, selling price per unit of output. Which means in process A only you can sell it at 120. Process B also they have given, but always remember main material won't be introduced. So material column will be nil in case of process B as well as process C. Got it? Management expenses during the year is 80,000, selling is 50,000. These are not allocable to the process, which means you are going to write it off against costing P&L. You are going to write it off against costing P&L. Actual output of the 3 process was as follows. Process A 9,300, process B 5,400, Process C 2100. 2/3 of the output of process A and 1/2 of the output of process B was passed to the next process and the balance was sold, which means you are going to transfer that cost of the unit sold to the costing P&L. Whatever you sold, no, that cost you are going to transfer to where? Costing P&L. The entire output of process C was sold. Of course, because there is no other process. The normal loss of 3 processes is calculated on the input of every process. Process A normal loss is 5%, process B 15%, process C 20%. Now, the loss of process A was sold at rupees 2 per unit, B was sold at rupees 5 per unit, C was sold at rupees 10 per unit. They are asking prepare up 3 process accounts and P&L. Costing P&L basically, not accountants, accounts. Okay. Now, first shall we do the process 1? Guys, you are going to write two material in a unit column 10,000, rate column 100, amount column 10 lakh. 10,000, 100, 10 lakh. This is the only place the unit column will come. Done. Next, material, only amount column, indirect material. Labor, debit, amount column. Direct expense, debit, amount column. Okay. Now I got to know how much is my total debit. Got it? Now, we know that how much is normal loss? 5% is normal loss. How much we have input? We have given input of 10,000 units. In that 5% is normal loss means 500 units. How many units? 500 units. Now units column I will take 500 and scrap recovery is there. That's why rate and amount also will come. That is 2 rupees, which will come to 1000. Which will come to 1000. Now we know that in process A output is just 9,300. In process A output is just 9,300. Guys, how much we were expecting? 9,500. But the output is just 9,300. 10,000 we have given input, no. 500 was normal loss, which means we were expecting 9,500 units, but 200 extra loss is there. That is your abnormal loss. Abnormal loss. So abnormal loss 200 units. Sir, amount I will tell. Amount I will tell. Next. Okay. Then what they are telling? 2/3 of the output of process A is transferred to next process. Which means 9,300 into 2 by 3. 6,200. 6,200 will be transferred to next process. So debit the next process, credit this process. 6,200. Amount, sir, I will tell. Next, remaining 3,100, what we are doing, sir? We are selling it. I told no, relating to that cost should be transferred to costing P&L. So by P&L account, 3,100 basically costing P&L. Got it? Now for all these things, what is the amount, sir? Guys, how much is my total cost? 10,46,000. Correct? Correct? How much is the scrap recovery from the normal loss? 1,000. How much is the input? 10,000 units. How much is the normal loss units? 500 units. Per unit how much? 110. So I am going to transfer to abnormal loss at 110. Next process 110, P&L 110. Got it? Got it? Yeah, sold units we are going to transfer to P&L. Cost from here, cost will transfer to P&L. In P&L, we'll find out the profit by comparing sales and profit. Cost. Now, look at the process B, guys. Process 1 is transferring 6,200 units to process B at the cost of 110, which will come to 6,82,000. 6,82,000. And as I already told you, main material won't be introduced here onwards. So 2 material, no unit column, 2 labor, no unit column, 2 direct expense, no unit column. Got it? If at all these were apportioned, you have to take that also as a overheads, but here it is not apportioned. Okay. So we got our cost to be 7,95,150. Our cost to be 7,95,150. Guys, now listen. Now listen, very important. We are introducing how many units? 6,200 units. How much is our normal loss? 15%. 930 units. So normal loss, unit column I will write 930, and we know that scrap recovery is 5 rupees. 5 rupees. Amount column 4,650. Got it? Now, guys, how much we transfer to the next process? How much is our actual output? 5,400. Guys, try to understand how much I have introduced. 6,200. In that I thought loss will be 15%. So how many units I am expecting? 5,000. 5,000 to 70 units. 5,270 units. But actually how much I am having? Wow, 5,400 units. Which means abnormal gain. How much? 130 units. 130 units abnormal gain. Should I debit side or credit side write it? I should write it in the debit side. To abnormal gain 130. Sir, amount I will tell. Wait. Done now. Which means there is no abnormal loss as such. Closing stock is also not there. If closing stock is there, we have to calculate equivalent unit and all. That I will tell later. If the opening stock and closing stock is there, we have to calculate equivalent units and all. I will tell that. Now, guys, we produce 5,400. In that, 1/2 is transferred to next process. That is 2,700. That is by process C. By process C. And remaining half will be sold by costing P&L. Now, how much is the amount, sir? Guys, how much was the total of debit side? 7,95,150. How much is the scrap recovery from the normal loss? 4,650. Whole divided by how many units you have introduced? 6,200. In that normal loss is how much? 930. That is 15%. Hey, whether actual loss is that much or no, that doesn't matter. We should reduce the normal loss. How much per unit? Sorry? 150. Now, for the next process, you are going to transfer at 150. For P&L, you are going to transfer at 150. For the abnormal gain, you are going to transfer at 150. Hope it is clear. Process B. Done? Done? Shall we proceed? Next, process C, guys. Process C. First, debit side, I am going to take 2,700 units at the rate of 150. 2,700 units at the rate of 150 as a to process B. To process B. Next, material introduced, labor introduced, direct expense introduced. Now, 2,700 is what we introduced, correct? Now, how much is a normal loss? 2,700 into 20%. 540 units. That is normal loss. Unit column I will write 540, and of course I am recovering scrap of 10 rupees. So I will write 5400 in the amount column also. If there is no scrap recovery, then normal loss, only unit column, no amount column. Clear? Now, guys, we thought, we have input of 2700. There is nothing to think. We actually have. In that, we thought the output, 540 will be normal loss, which means we are expecting 2160 units as a output. But the best part is we are getting only 2100, which means 60 is a abnormal loss. So I am going to write by abnormal loss, and I am going to keep it as a, amount column I don't write anything. Okay. Now, what they are telling, whatever was there in the process C, everything was sold. So whole 2100 units were sold. So by P&L, 2100. Got it? Got it? Now, I should find out how much is the amount for this. Very simple. How much is my total debit? 5,02,200. That is total cost. Minus how much is my scrap recovery from normal loss? 5,400 divided by how many units I introduced? 2,700. How much is a normal loss? 540 units. Sorry, 230. That is for process. For the P&L, I am going to transfer it at 230. Abnormal loss at 230. Hope it is clear. If nothing is transferred to the, if nothing is sold at that particular process, everything will be transferred to finished goods. From last process A to process B to process C to finished goods, like that. Now, guys, P&L account, if you see, sales, process A, how many units sold at what rate, B, how many units sold at what rate, C, how many units sold at what rate, that will be credited. Correct? And also there is an abnormal gain. Now, directly I can't write. Why? Whatever abnormal gain is there, from that I have to adjust scrap recovery relating to that abnormal loss. I should reverse it because that never happened. That is not a scrap only. Do you think I would have realized it as scrap? So I should reverse it. See here. Here they have given it as abnormal loss. Actually, it is abnormal gain account. CMA material, and there is no mistake in the question is like not possible at all. Now, abnormal gain account. Guys, by process B, how many units? 130 units, rate of 150, 19,500. And normal loss account, I should reverse it relating to this particular abnormal gain where we didn't recover the scrap. That is 130 units, 5 rupees we thought recovered, we didn't, so reversing it. So remaining whatever the balance is there, no, that shall be transferred to P&L. Coming to abnormal loss, both account will be debited, correct? Credit side, scrap recovery from that abnormal loss. That is by sales or by bank, do whatever you want. 260, so much. So balancing figure will be transferred to P&L. Got it? Here, process 1 cost transfer to P&L, process 2, process 3 cost, along with the 2 unabsorbed cost, you will get the profit or loss for the period. Here it is loss. Guys, mark this question as LMR. This is one of the master question. I hope you guys understood this. Now, guys, listen. There is some something called as inter-process profit. See, I'm sticking to your study material answer and I'm doing it. Inter-process profit means what, sir? Process 1, in a last question, what used to happen? Process 1 used to transfer to process 2, but at the cost itself. Process 2 used to transfer to process 3, but at the cost itself. Now process 3 used to transfer to finished goods at the cost, then finished goods will be sold, costing P&L, where the performance of the managers cannot be determined easily. So what we will do here onwards, process 1 will transfer to process 2 at their cost plus some profit. Process 2 will transfer to process 3 at cost plus profit. Process 3 will be finished goods. So that we'll get to know which manager is making how much profit. But end of the day, one thing you have to remember, whatever the profit here we earn, inter-department profit, that is not the actual profit of the company. The actual profit of the company will come only and only when customer buys it. So it is only and only for the sake of performance measurement. Only and only for the sake of performance measurement. Got it? Got it. So always remember, guys, here we are going to divide into 3 columns. Amount column 3. One is cost, one is profit, one is total. One is cost, one is profit, one is total. Okay. Now, guys, the profit means here not only that particular process profit, for the whole organization how much profit is coming, like that. Okay. Total means cost plus profit. Always remember, process 1, when it transferred to process 2, that we call it as the price, we call it as transfer price. We call it as what price, guys? Transfer price. Now transfer price itself is the cost for P2, because that is profit of P1. Our supplier's profit is our profit. No, that is our supplier's profit. So in P1, usually in the profit column, nothing will be there. Unless and until we transferred it to process 2 at profit. So we'll see a question, we'll understand. When we see this question, we'll understand, concentrate. A product passes through 3 processes before it is transferred to FG. The following details for January. Process 1, opening stock. All these are in rupees, okay? All these are in rupees, guys. Opening stock 20,000. Direct material, direct wages, production overhead, closing stock. Profit on cost of sales. Basically, they are telling profit on cost 33.33%. Sales, nothing is there. Okay. Inter-process profit is nothing. In the opening stock, how much inter-process profit is there? Nothing. Of course. Why? Because no other process sent to process 1. Process 1 itself is the point of origin. But supplier profit will be there. No, sir. Supplier profit is supplier's profit. Is it our company's profit? Got it? Process 2. And process 2 profit will be is 25% on cost. And they are telling in the opening stock, there is 4,000 rupees of inter-process profit. Third one, again, 25% is the profit. And in the opening stock, 4,000 is their inter-process profit. And that is sold at 7 lakh rupees at the end. And they are telling in the opening stock profit was there for 22,000. And listen, stock in process 1 are valued at prime cost. So closing stock of process, stock in process, that is process 1, process 2, process 3, it is valued at what cost? Prime cost. That is direct material plus direct wages plus whatever we transferred from different process, opening stock if we have any. Finished goods at the price at which it is received from the process 3. Finished goods will be valued at the price it is received at the process 3. Find out the amount of provision to be made to offset the inter-process profit added. Now guys, listen how it is going to be done. One of the important question, mark it as LMR. Process 1. Guys, opening stock was there 20,000. Or quickly shall I solve this? It will be easy for you guys to understand it. Easy, right? Because I'm expecting this from this in the question this time, I mean paper. So once before going to exam, go through this ones. Guys, first I am going to do the process one account. Concentrate. Process one account. Guys, I told you we are going to take three amount columns. One is cost, profit, total. Now listen, everyone. First, we will introduce material, opening stock, to opening stock, to opening stock. Guys, opening stock, total how much it is? 20,000. Total is 20,000. There is no profit in it. So cost also will be. Next, direct material. How much? Everything is cost only. So in that profit will be there. No, not our profit. It is our supplier's profit. For us, it's a cost only. Next, direct wages. 30. Got it. That's it. Now, this will be my prime cost. I want to find out prime cost here because my inventories are going to be valued at prime cost. 90,000. No profit is there. Everything is cost only. Correct? Next, to production. Sorry, 28,000. Everything is cost only. There is no inter-process profit as such because first process is ours only. Next, closing stock. That is by closing stock. How much? 10,000. We know that in the closing stock there is no profit as such. No inter-process profit. Done. Next, guys, by process 2. Shh. Listen. Hey, listen. By process 2. Guys, one thing you have to understand here. What is it, sir? How much was our total cost? 1 lakh. See, I'm not writing it as final amount. Listen, how to do, what to do. 1,18,000. Guys, in this 1,18,000, 1,18,000, what I am doing? I am holding closing stock as 10,000, which means remaining 108,000. Remaining 108,000 is sold to process 2 now. I mean, it transferred to process 2 now. Are we going to transfer it at cost? Are we transferring it at cost? No. Which means try to understand. Cost column I will take 118,000. Cost column I will take 118,000. Guys, the cost of the unit transfer to next process is 108,000. Correct? We are going to transfer it at 33.33% profit. How much? 30. So to the process B, we are transferring at 154,000. 144,000. 144,000. Guys, so here it is. Profit column 36,000. 36,000. Here I will write no to net profit or to profit. Guys, in process account, what I write to profit or loss, that will be relating to that particular process. That particular process, in the profit column, I will write 36,000. Total also will be 36,000. So here the total is 154,000. Here also it should be 154,000 only. Understood? Guys, process 1 is cakewalk. But process 2 is where you might get confused. Listen here. Now, the profit column what we are talking, guys, try to understand. The profit column what we are talking, that is not the profit column of the whole, process. Only this is there. No, here we'll write no to profit. That is the only profit of the process. Whereas this profit column will be for whole organization, where we talk about process 1 profit, process 2 profit, all the profit. But for process 2, transfer price itself is cost. See here, you will understand. Concentrate, don't talk, concentrate, very important. If they give straight away 10 marks and other 4 marks, they might ask some other things like that. Guys, try to understand. Is there any opening stock? Yes? How much? Guys, total 24,000, because they are telling that in that the profit is there. Hey, not our profit. What supplier's profit you are at? Process 1's profit. As an organization as a whole, I have. For me, cost is 24 only. For me, the opening inventory cost is 24 only. The 24 is my whole organization's profit in the 24,000, not process 2's profit. How much it is? 4,000, which means in that for the whole organization, the cost is 20,000. For process 2, for me it is 24,000 only cost. But for the whole organization, it is just 20,000. Done. To process 1. To process 1, guys, they are sending it to us at rupees 144,000. For me, the cost is 144,000 only. But for the organization as a whole, the cost is just 1,08,000. For me, the cost is so much only. Keep that thing in mind. To direct material. So, to material. How much material, guys? Material introduced is 42,000. Wages 30. Remember this. To material, how much, guys? Guys, now it is purchased from the outsider or from your end? Outsider. Outsider. Which means there is no our profit in it, our organization profit in it. For me also cost, for our organization also it's cost only. Next, to labor. Again, there is no profit involved in it. Inter-process profit 30,000. Next, guys, as we are valuing our inventory at prime cost, I am going to compute my prime cost. This is going to play a major role. How much? 2,40,000. 2,40,000. Got it? 2 overhead. How much? 12,000. Profit will be nil because you know why. That is taking from someone outsider. Done now. Next, closing stock is there. Listen here. Now very important. By closing stock. How much they are telling? 12. Guys, 12,000 is my cost, not for my whole organization. 12,000 is my cost, not for my whole organization. Guys. Now you have to value the closing stock. How you are going to value, sir? Guys, when the total cost of mine was 240,000, my closing stock cost is 12,000. When the cost of my whole organization 2 lakh in it, how much is a closing stock? Cost of closing stock. 10, which means in the closing stock, profit involved is not my profit, organizations. At the same time, we are transferring to process 3. How much you are transferring? This is where the important point is at. Guys, try to understand. How much is my total cost? 2 lakh. Hey. Total cost is 2,52,000 for my department. No. Not for the whole cost. Only for my department. For my process too. 2,52,000 is cost only. So that is including of profit. Array, someone's profit I am paying as my cost. No. So for me, the cost is 2,52,000. In that, the goods costing 12,000, I am holding it as closing stock. Which means, what is the cost of goods I transfer to next process? 2 lakh. Guys, I am transferring it to next process at what rate? 25% profit. 60,000. Guys, not 3 lakh. Listen. This is my profit. So here I am going to book it to profit. Only and only my profit. This particular department's profit. That is profit column 60,000. Don't write it here. Don't write it there. Why? Because what we are transferring to next process, there I am going to recover my profit as well as the cost which I paid towards the profit. Here purely my department cost is how much? Relating to sold item, 2,40,000. That 25% I am going to keep as my department's profit. Understood? How much it is? 60,000. Hope it is clear, guys. Hope it is clear. Now, listen here. Guys. Total column also will come as 60,000 relating to that profit. Total column also will come as 60,000 relating to that profit. Now tell me, how much is the total of the total column? 2 lakh? Or leave. Wait. Leave. Tell me the profit here. 1 lakh. Tell me the profit. 1 lakh. In that 1 lakh, guys, 2,000 profit is there in closing stock, which means I'm going to send them at 98,000. This is how you are going to fill the profit column. You are not going to directly multiply and write there 60,000. 60,000 is my profit. Understood? Cost is how much? 2 lakh. How much? 2,02,000. If you take directly only this cost, try to understand. If you take only this cost, what we did in class, but try to understand, this is not my cost. This is over the whole industry cost. I am going to charge profit of 25% on my cost. So my cost is total of this minus, sorry, total of this minus this. My cost, here it is 3 lakh 12. This is how you are going to do the process 2. I hope you guys understood. While computing profit, don't consider for the cost, don't consider this minus this, consider this minus this. And write the profit in the profit column, not in this profit column. Because that is only my department's profit. For the next process, I am transferring it, my department profit, plus I satisfied ego of process 1 also now by paying their profit. Understood? Guys, if you understand, great. If you don't understand, just process and go the, like just by heart and go the process of doing it. End of the day, examiner's favorite question. Shall we go to process 3? Process 3 account. Guys, 2 opening stock. 2 opening stock. How much is the cost? 16. Oh, sorry. Total is 16,000. For me, for third process, 16,000 is cost. But in that 4,000 profit element of the whole company is involved, which means 12,000 is the cost for the whole company. Understood? To process 2. To process 2, they are sending 2,02,000, and as a company they are holding 98,000 profit, not my profit. As a company they are holding 98,000 and total is 3 lakhs. And we are introducing direct material. How much? 60. 60,000. That is paid to supplier, so no profit involved in that. Anything for my profit also, company profit also. To direct labor, 32,000. Got it up? Now this will give me prime cost because I need prime cost to value my closing stock. 3 lakh. Sorry? 1 lakh. 4 lakh 80. 4 lakh 8 by closing stock. No, that will write. Closing stock, how much they have given total? Guys, that is cost of my closing, which means my total column. 8,000. Guys, try to understand. When for me the cost was 4 lakh 8,000. My closing stock was 8,000. For the company, the cost was 3 lakh 6,000. So for the company's cost, how much would be my closing stock? Sorry? 6,000. The profit involved in this, is it my profit or company's profit? Company's profit. Got it? Yes. To overhead account. How much? 1,8. 80,000. Got it? Now try to understand this point again. If at all you didn't understand in process 2, try to understand my cost. I mean, by the way, how much we are sending it at what rate? 25% on cost of sales only, not sales. Now listen, guys, my cost of finished goods is not 3,86,000. My cost of finished goods is 4,88,000. My cost of finished goods is 4,88,000. The same goods for the company 3,86,000. We are least concerned. First I will calculate my profit and I will write it. So 4,88,000 is my cost. Correct? However, in that 8,000 is still with me only. So for me, according to only my process, I am least concerned about the company. Now, according to my process, 4,80,000 is the cost which I sent into 25%. 1 lakh. 1,20,000. So guys, this is not the profit which I am going to write here. Why? Because that is transferring to the our profit plus company's profit. I am going to book my profit first. That is to profit. To profit, how much? 1 lakh. Now I am going to write all the balancing figures. Cost 3,86,000. Profit is 2,22,000. 6 lakh. Now cost will be, guys, it is not process 4 by finished goods. 3 lakh. That is your process 3. Finished goods account I will show from here only. Fine, no? Now try to understand, guys. Finished goods account, opening stock they are telling 60,000, correct? And they are telling profit involved in it is 22,000. So 38,000 is it a cost of finished goods department or a company as a whole? 38,000. Company as a whole. For them just cost is 38,000. Then what is the 22,000, sir? Process 1 profit, process 2 profit, process 3 profit involved in that 60,000 rupees. Process 3, they transferred so much. Correct? Now, guys, here they are taking it in the debit side only, closing stock. Instead of this less and all, we can take it in the credit side or debit side? Leave. Credit side on. Finished goods account. Guys, opening stock is there. How much? 60? In that company's profit is involved is how much? So 38,000 is cost. Correct? 2 process 3. How much is the cost of that for a company? 3 lakh. Profit involved in it. Is it mine? No, company as a whole. How much? Got it? Closing stock they have given. Guys, here while doing closing stock, you should be very careful. 30,000 they are telling here. Guys, hey, 30,000 is valued based on, not on the total prime cost, blah, 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 blah. Based on what is transferred from process 3, that they are telling in the last line, no. Which means Guys, what we transferred in the next earlier process, if that is 6 lakh, if that is 6 lakh, in that 30,000 is involved. Correct? If 380,000 is a cost, how much is that? 19. Sorry? 19,000, which means 11,000 is a profit involved in it. Got it? By sales. Guys, I can transfer to P&L, then there also I can adjust, or here only you can adjust. Here only you can adjust, no worries. What they are telling about sales? Sales they are telling 7 lakh, that is total. What they are telling is total. Got it? Now, guys, how much is the cost? To profit, listen here. To profit, I don't know profit right now. I can't calculate also. How much is it? 4 lakh 18,000. 4 lakh 18,000, which means in that cost is 3 lakh 99,000. 3 lakh 99,000. So how much is the profit involved here? Here also 7 lakh 30. 7 lakh 30,000. So 6 lakh 60 means 70,000. Wait, guys, 70,000 is the total of the total, means here profit is 70,000. Okay, so this is how much? Total, debit side total, 22,000 plus 220,000 plus 70,000. 3 lakh 12,000. 3 lakh 12,000, 3 lakh 11,000. Sir, okay. 3 lakh 1,000. This is how you are going to do the inter-process profit, and I am expecting this in the examination. Hope you guys understood. If you want the working photo, take the working photo. In notes, we have solved in different way, if I am not wrong. In examination, do this. Yeah. Company's profit. Done. Done. Yes. Guys will. Yes. Settle down. Now, guys, we are starting with something called as equivalent units. Something called as equivalent units. Sir, what do you mean by that, sir? Guys. Whatever the question we have seen so far, what we have done was, there was no opening stock, there was no closing stock. Okay, sir. If the question has a opening stock and closing stock, then what's the problem? Guys, opening stock means what? Opening stock means, in that particular process only, opening and closing means it is not yet completed. It is not yet completed, but we started processing it. Closing stock means what? We started processing it, but not yet completed. Which means we started processing, but is it completed? No. At the same time, there will be something called as finished goods. That is, we started processing, we completed it. We started processing, we completed it. Now my question is very simple. Your material, labor and overhead, whether all these three during the period, will it take in the same proportion? During the year, whether material, labor and overhead expense will be there? No. All this opening stock produced during the year, as well as closing stock, will they take in the same proportion? Will they? Will they? No. Why? Because, guys, opening stock is there, no opening stock. Oh, that already material 100% might have consumed. Only labor and overhead might be remaining. Okay. What we produce during the year, it is consuming material, labor, as well as overhead, everything. Closing. Material it might have consumed in full or consumed in half. Which means basically those three are not consuming it in the same proportion. So you can't straight away tell divided by those many number of units, sir. No. Now, during the period, how much material cost you will get to know, how much employee cost, labor cost you get to know, how much overhead you get to know. Now, to calculate it per unit, you can't divide the per unit directly, opening plus whatever introduced minus closing or something like that. Why, sir? Because opening might not be consuming the equivalent or same amount of material compared to what got introduced during the period, produced during the period. Understood? Closing might not be consuming the same material, same labor, same overhead. What is introduced and what is opening stock, same closing stock might not be consuming. So what is the meaning of that, sir? That means you can't take those units directly. So what you are going to do, you are going to convert a opening stock, units, opening stock and closing stock equivalent to units produced. Opening stock and closing stock equivalent to units produced. That to units produced means in opening also units should have produced. Units introduced and produced. Which means from zero we will start, no? Zero material introduced, zero labor, zero overhead. Everything 100% happened during the period only. For that we will compare opening stock as well as. Got it. To do that, we got two methods. One is FIFO. One is what? Leave for your head. Weighted average method. One is FIFO, one is weighted average method. FIFO and weighted average method. What do you mean by this, sir? Guys, try to understand. In FIFO, the assumption is whatever was there in the opening, no, that got produced in full. Remaining whatever is produced in full, that is from the newly introduced units. Whereas in your weighted average, whatever we produced, we are not differentiating between how much of the opening, how much of the introduced during the year. In the weighted average, we are not going to differentiate between how much is of opening, how much is of introduced during the year. Everything is same, no different. We are not going to differentiate between opening as well as introduced. What do you mean by that, sir? Let's try to understand. We'll do one small, we'll take few numbers and we'll do it. Fine, no? Now, opening, guys, let's say 1000 units were there. How many units? 1000 units. Freshly introduced, let's say 10,000 units. Freshly introduced 10,000 units. Normal loss, let's say 10% including opening stock. 10% of input, 10% of input including opening stock or opening WIP. Units transferred to next process. Units transferred to next process, let's say 9,000. How much? 9,000 units. Closing, let's say 200 units. Closing, let's say 200 units. This opening 1000 is there, no? Relating to that, they will give the cost. For this 1000, material cost involved, let's say 1 lakh. Labor, let's say 50,000. Overhead, let's say rupees 80,000. This is cost only and only relating to opening. This cost only and only relating to opening. Now, also they will give cost during the period. Cost during the period. Guys, cost during the period, material, let's say we spent around 12 lakhs. Okay. Labor, we spent around 6 lakhs. Overheads, we spent around, 8 lakhs will take. Got it? Opening is there, no? That they will give in terms of completion. In terms of completion. In terms of material, 100% completed. In terms of labor, 80% completed. In terms of overhead, 60% completed. Closing also they will tell. In terms of material, 60% completed. In terms of labor, 40% completed. In terms of overhead, 40% completed. Like that they will tell. Which means try to understand. First I am going for FIFO. FIFO. For equivalent, what I am going to do is I am going to draw one table. The table is very, very, very important. What I will do is first one small amount column I will take. Okay. That column is nothing but, guys, input column. That column is nothing but input column. Also, I will take one more column called as particulars column. Here I am going to write what is it, etc., etc., etc. Okay. Whether it's in weighted average or FIFO. End of the day, this is the table. Okay. And I will take one more unit column. One more unit column. And I will take equivalent units column. Equivalent unit column. Three things are there here. That is, one is overhead. Generally, overhead and labor will be in the same percentage. That time you can take only two columns. One is overhead, one is material, one is labor. Now, there also I am going to split again to percentage and in terms of units. Percentage and in terms of units. Percentage and in terms of units. First I am doing as per FIFO I told. Now, our table is dancing. Particulars, guys. Units, equivalent units. Equivalent units in terms of material, in terms of labor, in terms of overhead. Guys, percentage, equivalent units. Percentage, equivalent units. Percentage, equivalent units. This equivalent units only for the cost of this particular period. Cost for this particular period. See what I am going to do. Input. Guys, we already had opening. How much? 1000 units. 1000 units. Introduced. How much? 10,000 units. Correct? Now guys, transfer to next process. Guys, concentrate here. How much we have transferred to next process? 9,000. Guys, what is the assumption? In that 9,000, first from the opening 1000 units, remaining 8,000 is from the freshly introduced. What is the assumption? First whatever is produced, that will be of opening. Remaining is out of freshly introduced. Got it? Now, guys, opening. Material wise, it is already 100% complete. Do you think this year's material, even 1 rupee material, it will take? No. Why? It has already taken 100%. So this year opening will never use a 1% of material also. Labor. Last time it is already taken 80%, which means during this period it will take just 20%. That is 1000 into 20%, 200. And one more thing guys, if they don't tell material wise how much it is taken, percentage, then always and always it is 100%. Because generally we will introduce all the material, then we will process it. No. So material wise we are going to assume it is 100% introduced. If the opening they don't tell how much percentage, then 100% is already introduced. During the period, 0. Freshly introduced, any of 100. Closing stock, 100. Not 0. Why? Closing stock we are going to assume that is out of freshly introduced unit. Why sir? Opening is already produced now. Overhead wise, it is already 60% complete, which means now it will take 40%, which will come to 400. Now, going to freshly introduced. Guys, it was there earlier? No. From the scratch we started and we completed, which means it is taking 100% of material this year, 100% of labor this year, 100% of overhead this year. 8,000, 8,000, 8,000. Got it? Now, normal loss. Normal loss, they are telling 10% of the units introduced including opening stock, which means 1,100 units. Always remember guys, question might tell whatever it is, always and always equivalent units of normal loss should be nil. Why? Otherwise the cost will get distributed to that also. No. Normal loss always and always. Question they might tell normal loss is material 50% complete. Still you should take equivalent unit as 0. Got it? Abnormal loss, if anything is not given, then 100, 100, 100. Otherwise, whatever they have given, that percentage. If they don't give anything, how many percentage of scrap? 100, 100, 100. If at all they give, then take that percentage even for abnormal gain. Abnormal gain is there, that will be in negative numbers. Abnormal gain is there means negative numbers. Keep that thing in mind. Okay. All those things you will understand why we are doing this. Closing stock. Closing stock, how many units they are telling? 200 units. Yes or no? Guys. Closing stock is nothing but part of what we introduced during the period. How do you know, sir? FIFO. What is the assumption? Whatever was there in the opening, that was already processed and finalized as a finished goods or a transfer to next process. Here in WIP it is remaining means that is what is introduced during the period, which means when we introduced it was everything was 0, 0, 0. Now material wise if it is 60% means during the year how much material is used? 60% is also used during the period only. 120. Labor 40% also used during the period only. 80. Overhead 40% is used during the period only. 80. Got it? Now try to understand. We introduced 11,000 units in total. We introduced 11,000 units in total. Correct? But if you see how much count you are getting, 1000, 10,300 you are getting as a count. Where the hell did 700 go? Abnormal loss. That is abnormal loss. Got it? Guys, as they haven't told anything about abnormal loss, remember one thing. Either the balancing figure will be abnormal loss or the balancing figure will be your closing stock, closing WIP. You should think whatever given in the question based on that. Now, abnormal loss, if some percentage they give, take that only. Otherwise, take it as 100%. Got it? Got it? Now, this is 700, 700 and 700. Now I got to know the equivalent units for the material, equivalent units for the labor, equivalent units for the overhead. 8,000, 120, 700, 8,000, 820, 8,000, 820, 200, 8,000, 8,980, 8,980. Here it is 9,180. This is your equivalent units. Got it? Now, what you are going to do, sir? Guys, try to understand this. Material, labor, overhead. I am going to allocate a cost now. I am going to allocate a cost now. Cost during the period. Cost during the period. Guys, how much is the cost of material during the period? They have told now. 12 lakh, 6 lakh, 8 lakh. Correct? 12 lakh. 12 lakh, 6 lakh, 8 lakh. Got it? Now, guys, equivalent units. As per material, how much is the equivalent units? 8820. Labor 8980. Overhead 91. Now, how much is cost per equivalent unit? Cost per equivalent units. First one 136.05. Next one 66.82. 87 point. Guys, sometimes they don't differentiate and give material, labor, overhead. They will give total cost. And listen here, from the normal loss, if at all you are getting any scrap recovery, that should be reduced from the cost of material of the period. From the normal loss, guys, from the normal loss, if you are getting any, from the normal loss, if you are getting any, scrap recovery, you are getting any scrap recovery relating to normal loss, you should reduce it from the cost of material during the period. If the total cost is given, then total cost. If that split is given, material, labor, overhead, scrap recovery of normal loss should be reduced from where? Cost of material during the year. If at all they would have given, you would have reduced from here, 12 lakh. 12 lakh minus scrap recovery. Now, this is cost per unit, cost per equivalent unit. Now, guys, you will understand why we did it now. If I tell the next step, you might not understand, but now we will understand. What do you mean by that, sir? We will understand anyways. Let's see. Okay. Let's say this is process 1 account. Process one account, units, rate, total, per unit. Okay, rate means per unit. Got it? Now, to opening stock. To opening stock. We know that 1100 rupees, 1000 units are there. Units wise, 1000 units are there. Yes or no? Yes or no? And how much is the total cost here? Material, labor, overhead, how much? Together. 1,50,000 plus 80. 2,30,000. I will write 2,30,000, which means 230. Correct? Correct? No doubt in that. Simple, sir. Next. To material. That is what we introduced during the year. 10,000. Correct? 10,000. And how much was the cost of that? To material introduced during the year, guys? 12 lakh. Sorry. 120. Correct? To labor. Unit column you won't get, rate column you won't get. You know how much is the total labor during the period. 6 lakh. Correct? To overhead. To overhead. Unit column won't come, rate column won't come. Overhead amount will come to rupees 8 lakh. Overhead amount will come to rupees. Got it? Now the real fun starts. By normal loss. Hey sir, what is there in that, sir? Real fun now. 10% of the units introduced, which will come to 1,100. Units wise, scrap recovery is not there, sir. If the scrap recovery is there, amount column also would be there. Scrap recovery is there, not there, so rate and amount nothing. If the scrap recovery was there, you would have taken it. Now try to understand. By process 2, you know number of units transferred. 9,000, no? Total units transferred to next process. 9,000. By process to 9,000, you know. Do you know the rate? Do you know the rate? Sir, last time what we did? Debit total minus A. That we did because there was no opening stock, there was no closing stock. Whatever the cost was there, everything was relating to the units produced during the period. Is this same for opening stock, different cost? Now, by abnormal loss. By abnormal loss. How many units are there? 1,700 units. 7. That's why abnormal loss. By closing stock, how many units? See, not equivalent units, I am asking normal units. 200. Closing stock is, guys, do you know the rates to write here? You don't know. So what you are going to do, sir? Now what we did there will come to help. First, process 2 we are transferring, no? For that, how much will calculate? Process 2. Guys, material wise. Listen here. Material wise, for the process 2, for opening stock, first we'll take the cost for the period. Material, see, whatever transferred to the Concentrate. Whatever transfer to the next process is there, no, that has two things. What is it? Opening stock introduced. Opening stock and introduced. Guys, first material wise, for opening stock it is equivalent units are 0 into rupees 136.5. 0 into 136.5. Whereas for introduced it is equivalent units are complete. For material equivalent units 8,000. For material equivalent units are how much? For material transferred 8,000, no. So 8,000 into rupees 136.5. Sorry? 10,92,000. Guys. For opening, I agree, material during the period is not there. But opening cost was there, no. How much? 1 lakh. Got it. So what we transferred in the next process, relating to that 1,000 unit, material cost is 1 lakh. Relating to that remaining 8,000, material cost is 10,92,000. This is all relating to material. Shall we go to labor? But amount is same. 10 lakh? 88,400. 10 lakh 88,400. Hope you got it. Going to labor. Guys. For labor, for that 1,000, equivalent units are 200. Correct? 200 into what is the labor cost? 66.82. Will come to. Sorry? 13,364. Relating to this 8,000 units, labor is again 8,000 only equivalent into 66.82. 5 lakh? 34,005. Got it? Plus opening cost. Guys, of course, for newly introduced, opening cost what? Last year it wasn't there only. Why the cost will come? But for the whatever was there, for that we already incurred 50,000, no? So, labor cost would be what? 1,63,000 divided 63,364, 5,34,560. That 1 lakh was for material. Got it? Next going to overhead. Guys, overhead first one. Equivalent units are how much? 400 units. And what is the rate per equivalent units? 87.15. Sorry? 34,860. Done. For this one, equivalent units are 8,000 only. 8,000 into 87.15. 6,97,000. Got it? Plus opening. For this one nil, but for this one we already incurred a cost of 80,000. Already incurred a cost of 1,14,860 and 6,97,200. Got it? Now guys, add all these things. 1 lakh plus 10 lakh 88,000. That will be total of material cost relating to what we transfer to next process. 11 lakh 88,400. Labor will be this one 8 lakh 8 lakh 12,000. Total you tell, no? 3 totals. $25 lakh 90 384. This is what the amount we are transferring to next process. How much per unit? 288.71. Got it? This is what we transferred. Same way for abnormal loss. Guys, for abnormal loss, how many units abnormal loss are there? 700. Material, labor, overhead, everything is same. Equivalent units. Because no other percentage is given. So, 700 into, what is the rate per equivalent units of material? 136.05, no? 136.05. That is material. Labor also 700 into rate is 66.82. For overhead also rate is 87.15. 700 into 87.15. Two lakh 3,042. 014. How much per unit? Somewhere same only it should come. This is happening because in the transfer to next process, opening cost was different. In this, only current year cost will be there. Closing and this will come equal. Provided everything is used equally, but here in closing everything is not used equally. As per material, how much is the equivalent units of closing? 120. Sorry, 80. Sorry, 120. For material equivalent units is 120. For labor and overhead it is 80. Which means 120 into rupees 136.05 plus 80 into rupees 66.82 plus 80 into rupees 66.82. Sorry, 87.15. Sorry. Yes, madam, tell. 644 shall I take? Yes. Now if you see the total amount other than this rounding of errors, it should match. Just tell me total debit how much is there? 28,30,000. 28,30,000, no? This total you tell. $28 lakh. That 42 is due to rounding off error. Hope you got to know why we have done so much drama there. Because you can't charge the same amount to the opening stock, as well as produced, as well as closing, as well as abnormal. For each and everything, we calculated at different rates. So this is known as calculation of cost per equivalent unit, and this is known as allocation. Guys, here I have taken roughly, but in class note, we have taken proper table wise. In examination, presented that way. Got it? Yes. Now, same question. What if we do it under equivalent units? Sorry, weighted average method. Last concept of process costing, we'll do it and we'll close it for the day. Tomorrow afternoon only we'll start with JPBP. 1:30 I told, no? Afternoon 1:30 will start with JPBP, hardly half an hour it is. 2 it will be, 2 to 4:30 will take marginal, 4:30 after that will take the standard or something like that. Budget. Done. Tomorrow we'll try to wind, we'll try to, tomorrow whatever the cost it is, we are going to wind up the marathon. Give me a second. Sorry, tomorrow no class. Marathon is there, you can come. That is not more than regular class. I mean regular class in the sense will be there for 6 to 7 hours. Now guys listen. Shh. Hey, concentrate now, please concentrate. Hey, concentrate. Here in the weighted average, we are not going to assume that whatever was there in the opening that got produced first. No, we are not going to assume. Sir, in the question how to decide weighted average or FIFO, they will only tell. If they don't tell, just check for opening stock any information they have given, like material wise how much complete labor, etc. If they have given, then go for FIFO. They haven't given, just opening cost they have given, material cost how much, labor how much, overhead how much, then go for weighted average. Now concentrate here. Madam, concentrate. Guys, transfer to next process is there, no? Transfer to next process is there, no? We are not going to differentiate between out of introduced how much, out of introduced how much, out of opening stock how much. Then what you are going to do, sir, I will tell. Another 5-10 minutes. Concentrate. Guys, concentrate. Now, we are not going to differentiate between out of opening how much, out of introduced how much. All we are going to write is, boss, how much you transfer to next process? 9,000 units. To transfer to next process, it should get completely over. It should get completely over means it has consumed 100% of material, 100% of labor, 100% of overhead. 9,000, 9,000, 9,000. Normal loss, you know that, 0, 0, 0, 0. Closing stock, 200 units or 300 units? 200 units. 200 units. Here also don't take now 100, 100, 100. Why? Because if it is 100, 100, 100, why the hell it will be in closing? It will be transferred to next process now. So closing, material wise it is 60, 40, 40, 120, 80, 80. Abnormal is how many units, guys? See, total we introduced 11,000 units. 11,000 units. But there is a normal loss was how much? 1,100, no? 700 units is missing. So that is your abnormal loss. And as the question is silent, abnormal gain and abnormal loss, you are going to take it as 100%. 700, 700, 700. Now going for equivalent units, material 9,820. labor 9,780, overhead 9,780. Got it? Okay, sir, you did this. Next what? Next, cost per equivalent units. Guys, how you merged your opening stock as well as introduced during the year as a one. Here also cost you are going to merge. What do you mean by this, sir? Guys, there is a material, there is a labor, there is a overhead. Guys, opening. I am going to take opening. Hey, opening material cost was how much? 1 lakh. Labor 50,000. Overhead 80,000. Correct? Correct. During the period. During the period, material we introduced 10 lakh rupees. Labor we introduced 12 lakh. 12 lakh 6 lakh. Labor 6 lakh, overhead 8 lakhs. Material 12 lakh. Guys, if at all the scrap recovery is there, that should be reduced from the cost of material here. Scrap recovery relating to normal loss. Got it? And also in process account, you should write it. Amount column. Now, 13 lakh, 6 lakh 50,000, 8 lakh 80,000. So, scrap recovery is there in case of FIFO. We should reduce from the material cost. We agree. Out of opening material cost or out of during the year? During the year. During the year. Now, equivalent units. Guys, material equivalent units are 9820. For labor 9780. For overhead 9780. Cost per equivalent units 132.38. Next one 66 point. Sometimes they, instead of weighted average, they use the word called average also. Keep that thing in mind. Instead of weighted average, they use the term called average also. Sometimes keep in mind. Next one 90. 90. Okay. Now, guys, this is cost per equivalent units. Now, cost allocation of, see, this is what? Finish. Now, cost allocation as per weighted average is also easy. Transfer to next process. Transfer to next process. Guys, earlier transfer to next process, what we did? Opening stock per equivalent unit, how much? Plus what we already incurred. During the year, only how much is equivalent unit, because nothing was incurred earlier. Like that only we did know for everything. Here need not to do that. Why? Because opening cost is already added to each and every unit. Which means transfer to next process, we got 3 costs. Material, labor, overhead. Material wise, equivalent units transferred to next process is 9,000. Labor wise also 9,000, overhead also 9,000. Correct? That is 9,000 unit, 9,000 units, 9,000 units. And guys, recovery rate for material 132.38, for labor 66.46, for overhead 90. First one, sir. 11,91,400. For 8. 5 lakh. 8,10,000. Transfer to next process is how much, guys? 25 lakh. Not 480. Okay, this one is how much? 560 only. Next. Transfer to next process is done. Abnormal loss. Sir, last time we added opening cost, no sir. That got adjusted here already. No need to add. Which means in abnormal loss also opening stock thing is there. Closing stock also opening stock thing is there. Transfer to next process also opening stock is there. So abnormal loss, again 3 will be there. Which are those? Material, labor, overhead. Correct? Guys, material equivalent units are how much? 700, 700, 700. Correct? Everything was 700, 700. $60? Total. Hey, I will tell one thing. Try to understand the concept. Don't compete for telling numbers. How much? 180? If you are this fast in other things, you wouldn't be in this situation. Where you want to be fast, there you are not. Huh? Correct. Abnormal loss is done. Transfer to next process is done. Closing stock. How many units? Labor? Hey, equivalent units. What? 200, 200, 200. Your head though. 120, 80, 80. No, my mistake. I bought the topic, no. 886, huh? 317. 7,000 total. Sorry? Still you won't get answer. Huh? Got it? Shall we go to the process account? Guys, listen. Debit side, no changes. Credit side, normal loss, no changes. But transfer to next process, these things. Debit side total, by the way, I erased it. 28,30,000, no? Now, guys, transfer to next process, 25,99,560. 25,99,560. Abnormal loss, 2,02,188. Closing, 28,403. 30,000. Rounding off difference. This is what you are going to do under weighted average method. Hope you guys it is clear. And when doing the table, what I told, please keep in mind. material wise, if they don't give the percentage, always and always 100. If the abnormal loss, how many percentage it is completed if they don't give? 100, 100, 100. If they give the respective percentages, normal loss always and always 0% for everything. Abnormal gain means whatever abnormal loss we did, same thing but negative amount. And in case of FIFO, equivalent unit will calculate plus what we incurred. That is only for opening we will add. Whereas in weighted average, we'll add the amount and then we'll divide. Okay. Here we'll divide, we'll calculate, then we'll add. And if the scrap recovery is there, if they gave only one cost, they don't give material, labor and all, only one equivalent unit, in that scenario, reduce it from the total cost, scrap recovery relating to normal loss. If at all it is, division is given, then reduce it from the material cost. One. Also, don't forget that the material cost is what is incurred during the year, not from the opening material cost. Okay. With that, we have completed process costing. Now we are left with JPBP, standard, marginal, budget and budgetary, starting tomorrow at 1:30. Okay. Tomorrow we'll try to wind up your whole costing marathon, which might come. Take, sir. Hey, anyhow, you will get in YouTube now. Take screenshot. So tomorrow, if you come, then finish. No, whole 20 hours will be finished. I think it is coming for today was 4th day, no? So around 13 hours is already done. Tomorrow, other 5 hours, around 18 hours you can expect. 18 hours means it will be in depth only, because we have seen a sums also. Thank you. Now we will be starting with the JPBP. That is, actually it was supposed to be a separate unit, but they have given along with the process costing only, but no problem. What do you mean by JPBP, sir? Guys, generally what happens is, sometimes we'll start one process. Okay. We'll give the input, material, labor, overhead, everything. Okay. After some point, generally what happens is, the output what we get after some point, that will be different product. We won't get a single product, we get a different products. Now, that we call it as joint products. That is, same process, but after some point, we get a different products. Now, those different products, which are part of a same process, that we call it as a joint product. Now, guys, the point at which the three different products happens, no, two or more products. Now, that point we call it as split off point. That point we call it as split off point, and whatever the cost we incurred till the split off point, whatever the cost we incurred till split off point, now that cost we call it as joint cost. That cost we call it as what? Joint cost. Hope it is clear. So from introduction of the material, labor, overhead till the split off point, whatever the cost we get, now that cost is joint cost. Now at the split off point we will get different products. No, now those products are known as joint products. Now those products are known as joint products. And guys, sometimes what happens, along with the joint product, let's say 3 joint product we get, along with that 2 other products also we get, but it doesn't have enough value. Our intention is not to produce joint product. That particular product, but that is part of process. We can't avoid it. Now that particular products, we call it as byproduct. Those products we call it as what? Byproduct. And guys, these byproducts are basically wastage kind of thing, which is part of your process. Your intention you don't have. For example, when you are processing crude oil, your intention is to get either the petrol and diesel. But sometimes you might get other products also, like kerosene and all. Now that is your byproduct. Got it? Now, fine, sir. Then this joint cost, how to allocate to joint product and byproduct, sir? Because it is not a single product. No. If it is a single product, we would have told whole joint cost is that particular product's cost. But now it is not a single product. We have different kind of units. In that scenario, what we should do, sir? Guys, very simple. All we have to do is split it. On what basis? Different basis. However, what about the cost relating to byproduct, sir? Here you should check, guys, whether byproduct has value or no value. Whether byproduct has good value or no value. Let's say byproduct has a good value. Then treat it just like any other joint product. Treat it like a main product only. Treat it like a main product only. No, sir, byproduct doesn't have enough value. In that scenario, what we should do? In that scenario, guys, find out the net realizable value of byproduct. Find out the net realizable value of byproduct, and after finding out net realizable value of byproduct, reduce it from the joint cost. Reduce the NRV of byproduct from joint cost. Yeah, like scrap. Now we got net joint cost. No, this one allocate only to the joint product. This one allocate only to the joint product. Even wastage is there also. You should do like this only. Hope it is clear. What you should do? Find whether byproduct has enough value or no. Sir, in question, how to find it out, sir? They will give in the question. How to treat the byproduct. Now, if they treat byproduct like a main product, treat it like a main product, treat it like a waste product, that is NRV, then treat it like a NRV, reduce NRV of byproduct from the joint cost, you will get the net joint cost, allocate it only and only to the joint products. Got it? Now, guys, it's not something like few products will be there. Although those are joint products, part of split off we got 3 products. No, now there could be a possibility of producing it further. Processing it further. Now, whatever the cost we incur to process it further, no, that we call it as further processing cost. That we call it as further processing cost. For example, you have given an input of milk. Now, in that milk, let's say curd will come, paneer will come, cheese will come. Now, curd could be further processed into ghee. Correct? Curd could be further processed into ghee or butter. Now, the cost what we incur to transfer or divide that curd into butter or ghee. Now, that cost we call it as a further processing cost. Whereas the cost what we incurred in the joint process, that we call it as a joint cost. Now, sir, majority of your JPBP questions will be relating to whether you should further process it or no. Whether you should further process it or no. How you will take a call whether to be further processed or no, guys? All you have to do is you should check how much extra benefit I get by further processing. How much extra benefit I get from further processing. Point number 1. You should compare it with further processing cost. You should compare it with further processing cost. Now, the benefit what you get by further processing, that is additional revenue, if that is more than cost, further process it. If that is not more than the cost, don't further process. Simple, guys, try to understand. Let's say we got 1000 kg of butter. We got 1000 kg of butter. Now, if we sell this 1000 kg of butter in the market, let's say 400 rupees per kg is there. 400 rupees per kg is there. Now we have one more option. What is it, sir? To further process this butter into ghee. Further process this butter into ghee, guys, let's say you can further process it into 800 kg of ghee. 800 kg of ghee, if at all you further process into ghee, around 700 rupees per kg you can get. Around 700 rupees per kg you can get. Now to further process this, let's say the cost what we are incurring is 1 lakh. The additional cost what we are incurring is 1 lakh. Now the question is whether to further process it or no. Very simple, guys. If at all I further process, how much will be my revenue? 800 into 700 rupees, 5,60,000. If at all I don't further process, how much would be my revenue? 4 lakh. What do you mean by this, sir? What I mean is here 1,60,000 is your incremental revenue. 1,60,000 is what? Incremental revenue. Now, guys, to generate this incremental revenue, how much incremental cost you are incurring? 1 lakh, which means it is giving you additional benefit of 60,000. Further process it, because to generate extra revenue of 160,000, you are incurring an extra cost of just 1 lakh. That doesn't matter. End of the day, butter is getting produced. That is not even a question here. Question is whether butter to be further processed or no. Now, sir, what if the joint cost was 2 lakh? Then additional cost is 2 lakh, additional revenue 160, 40,000 loss, it will be extra loss. So don't further process. Decision will be taken this way, whether to further process or not to further process. All you have to do is find out how much is your incremental revenue. One more point keep in mind, guys, while computing the incremental revenue. Listen, if these are uniform, that is 1,000 and 1,000, then you would have taken 1,000 into difference of this 300. But here, these output only is changing. Don't take straight away 800 into 300. The answer will go wrong. Got it? So whenever you should check units are same or no. If it's same, then just take the changes in prices. You will get incremental revenue. If the units are changing, you should do like a normal one. Sir, what do you think? Which is best? Best is do always and always units into price. No risk only. Got it? Now, sir, now you told no, sir, joint cost we should allocate to the different joint products. On what basis we can allocate? Guys, different basis you can allocate. First one is physical quantity method. Physical quantity method. Here what you will do is in the ratio of units produced. You are going to do it. For example, there are 3 joint products A, B, C. Okay. A 20,000 units. B 20,000 units. C 10,000 units. A 20,000 units. B 20,000 units. C 10,000 units. Guys, let's say joint cost is coming to rupees 5 lakh. Joint cost is coming to rupees 5 lakh. Now try to understand. We should split the joint cost in the ratio of the quantity. That is, ratio is 2:1, which means for this 2 lakhs, and for this 1 lakh. If at all byproduct was there, what we should have done? Take the NRV of the byproduct, reduce it from the 5 lakh, Then divide the remaining cost into A, B and C. Got it? If the value was there, then treat it as one more joint product. No, that's what. This is one method. Generally, we don't use it. One method. Next method is average unit method. Average unit method. Now, average unit method means what we are going to do is ditto only, but here we are going to find out a unit cost. That is 5 lakh divided by how many units we produced? 50,000 units, which means per unit 10 rupees. Here 20,000 into 10, 2 lakh, 20,000 into 10, 2 lakh, 10,000 into 10, 1 lakh. That is your average unit cost method. Weighted average method. Weighted average method means, guys, let's say they tell A is there, no? A consumes cost, or A is 2 times compared to B. B is, or A is 3 times compared to B. C. 3 times compared to C. B is 2 times compared to C. Now what I am going to do, I am going to take equivalent units. Weights. These are weights for C1, for B2, for A 3. Now this will be 60,000. This will be 40,000. This will be 10,000. Now in this ratio you are going to divide it. Or let's say total is how much, guys? 1 lakh 10,000. Now 5 lakh divided by 1 lakh 10,000. 4.54 into 60,000 into 40,000 into 10,000. I will get for A, B and C based on the weights allocated to them. Next is selling price method. Guys, here the ratio what we take is based on the selling price of the product. For example, selling price of A is 10 rupees per unit. Selling price of B is 20 rupees per unit. Selling price of C is 30 rupees per unit. In that case, I will find out a sales value of A, B and C. A, B and C. That is 20,000 into 10, 2 lakhs. B, 4 lakhs. C, 3 lakhs. Now I am going to divide that 5 lakh in this ratio. 2:4:3. Now that is what, guys? Selling price method. Got it? Got it? See here. XY Limited manufactures a product A which yields 2 byproduct B and C. Actual joint expense of manufacturing for a period is 8,200. Profit of each product as percentage of sales are 33.33, 25 and 15 respectively. Subsequent expenses, which means further processing cost, for A is so much, B is so much, C is so much. That is 450, 325, 150. Sales amount they have given. Apportion the joint cost. Guys. Here it is very easy. How, sir? Do you know the sales? 6,000, 4,000, 2,500. Guys, if you see for B and C, they have enough value. Good value they got, which means we are going to treat it like a joint cost, joint product only. 6 lakh, 4 lakh, 2 lakh, 50,000. And by any chance, do you know the profit? Yes. How much they are telling? 33.33 on sales. 2,000. 25%. 1,000. 15%. Just there. That's it. Now, don't you think I will get a total cost? Sales minus profit will give me total cost now. How much it is? 4,000, 3,000, 2,125. In the total cost, don't you think I know the further processing cost? Total cost includes 2. Joint cost, further processing cost. Don't you think I know the further processing cost? They have given it as 450, 325, 150, 3000, 550, 2006, 75, and 1009. Finish. This will be your joint cost. Got it? Got it, guys? Which one we have done? A chemical processes yields of 60% of material introduced as a main product A, 15% as B, 20% as C, 5% as a wastage. The ratio of absorption of raw material labor in the process of product is as follows. 1 unit of product C requires half of the raw material required for 1 unit of B. 1 unit of product A requires 1.5 of what is required for C, which means for the raw material, guys, if C needs 1 product, 1 kg of raw material, B needs 1 unit of C requires half of the raw material required for 1 unit of B, which means 2. If B needs 2, then only A needs 1. Got it? Done. A needs 1.5 of what is required for B, that is 3. So the raw material ratio is 3:2:1. Product A requires double the time needed for the production of 1 unit of B and 1 unit of product C. Product C requires half the time required for the production of 1 unit of B. Guys, if C requires 1 hour, B requires 2 hours. B requires 2 hours, C requires 1 hour, half of the what is required by B. A requires double the time needed for the production of 1 unit of B and 1 unit of C. For 1 unit of B you need 2 hours, means 1 unit of C units 1 hour, which means 3 hours. A needs double of this, 6. The ratio for labor is 6:2:1. Overheads are absorbed in the ratio of 6:1:1, they are telling. Got it? Now, cost of input. Material they have given. Distribute the above products. Listen here. First let's do material. Yes, guys, 1000 units. 1000 units. I am going to split into 3. I mean, in fact 4, but 4 I am not doing because waste. Any of waste should get apportioned to all the units in the respective ratio. Now, A 60%, that is 600. B 15%, that is 150. C 20%, that is 200. Sir, what about that 50, sir? Let it get distributed among this only. Okay. Now, first material. Guys, we know the weights. Do we know the weights or we don't know the weights? We know the weights. 3, 2, 1. 1800, 300, 200. Total 2000. Guys, 4600 divided by 2300. Rupees 2 per equivalent units. Correct? So, in case of A, 1800 into 2, 3600. In case of B, 300 into 2, 600. In case of C, 200 into 2, 400. Just check whether 4600 got distributed or no. So material is 3600, 600, 400. Got it? Understood? Now shall we see the labor? Labor, guys, I am going to change the ratios. I mean weights. Labor is 6, 2 and 1. 6, 2 and 1. 3600, 300, 200. 4100. 4100 divided by 4100 is rupees 1 per equivalent unit. Here equivalent unit is 3600. So 3600 1 into 1 is 3600. 300 into 1 is 300. 200 into 1 is 200. Got it? If at all waste is generating any revenue, that you should reduce it from the cost. Next is overheads. Guys, for overheads, see 3600, 300, 200. For overheads, what is the weight? For overheads, the weights are 611. That is 3600, 150, 200. Total come to 3950. 6000 divided by 3950. Rupees 1.52. 3600 into 1.52.
5468.
Oh, wait. The ratio they only have given. Not per unit it is. Hey, try to understand. 6:1:1 is not per unit. Overall ratio they have given. So directly divide this in that ratio. 6:1:1. 6000 divided by 8 into 6. 6000 divided by 8 into 1. 6000 divided by 8 into 1.
4800, 600.
800 or 500? Hope this is clear, guys. Sorry? Wait. I have taken what to tell? Both. Till marathon gets over, I am not going to have lunch. Like Bahubali movie. Correct. Poster is correct. No. I mean, I took a class till 12:30. No, so. Now, this is done now. Next up. Guys, here one more question is there. Coke, coal tar, benzol, sulfate of ammonia, gas. Total 2000 tons we are getting a yield. The price per coal is 800 per ton. Direct labor and overhead is at split off are 40 and 60 respectively per ton of coal. Okay. Calculate the material, labor and total cost of each product. Guys, basically joint, see, for one yield in kg of recovered in products per ton of coal. So per ton you will be able to recover so much. Okay. Now, guys, what you are going to do? Unit method you are going to use. That is, total cost of material is how much? 1 ton will cost you 80. So 80 should be divided in this ratio. 80 should be divided in this ratio. Next is labor. That should be divided in this ratio. Like that. In the basis of physical unit method, you are going to allocate it. That's it. Not much special. Go through it once. Listen here. A factory engaged in the production of chemical X. In the course, byproduct Y is produced, which after a separate process has a commercial value. What value? So what you should treat Y as? Joint product. Following are the information. Joint expenses, material 10,000, 4,000, 2,500. Separate expenses, that is further processing cost for X as well as for Y. Further processing cost for X is how much, sir? 4,500, 5,900. For Y, how much, sir? 5,300. Got it? Sorry, 6,300. The output for the month was 150 quintals of X and 50 quintals of Y. 1 quintal is equal to 100 kg. 1 ton is equal to 1000 kg. 1 metric ton is equal to 1000 kg only. Ton and metric ton are same. 1 liter is equal to 1000 ml. 1 kiloliter is equal to 1000 liter. 1 kiloliter is equal to 1000 liter. The selling price of Y is 200 per quintal. The profit on product Y is so much. Prepare an account to show the cost per quintal of X. Guys, here one thing is very clear. They have given information of Y the more, which means, do you know the selling price of Y? 200. How many units of Y is there? 50 quintals. So guys, sales of Y will be how much? 50 into 200. 50 into 200. 10,000 minus. Do you know the profit? Yes, we know. How much? 33.33 on cost price, which is 25% on sales price. 2,500. So total cost we got to know 7,500. And guys, we also know the further processing cost. Out of total cost, if we reduce further processing cost 6,300, we get 1,200 as a joint cost. So if the joint cost of Y is 1,200, when the total joint cost was 16,500, if the joint cost of Y is 1,200, joint cost of X will be 15,300. Joint cost of X will be 15,300. See here, joint expense account. All the expenses are debited. So 15,300 allocated to X and 1,200 allocated to Y. Product X. These are further process. These are joint cost. Transfer to cost of production after producing. Y also same. You are going to do this way. Hope it is clear. How many questions are there in this? $40? In which question we are in? 40? Eight more questions. In a manufacturing main product A, the result waste material into two byproduct B and C. Using reversal cost method of byproduct, prepare a comparative P&L of the three product. Total cost A, B and C up to separation point is 68,000. This is nothing but your joint cost. Correct? Sales A 164, B 16,000, C 24,000. Estimated net profit percentage to sales value. Estimated selling expense as a percentage of sales value. Cost after separation is so much. Guys, you know the sales. 164, 16, 24. Correct? Now, Forget about A. A will be the residual now. Just like the earlier question only. You know the selling price. From that, can you reduce the profit? Easily. If you reduce the profit, you will get a total cost, isn't it? If you reduce the profit, you will get total cost. So total cost of B will be 16,000 minus 20%, 12,800. Correct. For C will be 16,800. Now, this is your total cost. In the total cost, we got three costs now. What are you talking, sir? Yes. 1. Selling expense. 2. Further processing cost. 3. Joint cost. Now, guys, selling expense is how much? 3,200, 4,800. Now, out of total cost, guys, that is your selling expense. Further processing for A is how much? Sorry, B is how much? 4,800. C is 7,200. Guys, from the total cost, if I reduce these two, don't you think I will get a joint cost? How much? First one? That is of Zuka. So they started doing this also now. Free along with bag. Which bag? Backpack. Backpack. Along with everything, they will give it free. Huh?
For C, 4,800.
4,000 and B also 4,800. Guys, out of joint cost, total joint cost, around 9,600 is relating to B and C, which means out of 68,000, 58,400 is relating to A. 58,400 is relating to A. Got it? Now, they asked you to find out comparative P&L. Now, A, B, C I will take, A sales I will take, joint cost I will take, I know cost after separation I will take, I will selling price I will reduce, I will get to know the total cost. From total cost, if I reduce sales, I will get the profit. Hope 42nd is clear. Yes. 43rd. The progressive manufacturing company manufactures one main product, two byproducts. Data for the month. Main product is there, two byproduct, A and B. So manufacturing cost, after separation they have given, admin cost they have given, ratio of distribution of selling cost, net profit in sales. Now, guys, you know the total sales, correct? From that, you are going to reduce the profit. You are going to reduce the profit. Guys, you know what is the best part here? Do you know what is the best part here? You don't know. You don't know how much is your selling cost. How the selling cost should be distributed among A, B and main product, you know. But you don't know how much is a selling cost. Very simple. What we can do, sir? Guys, first, this is JC. Correct? This is JC. This is further processing cost. Administration cost also I know. Except one cost, I know all the cost. If I get to know the total cost, if I reduce all other cost, don't you think I will get a selling cost? So what I will do? And the total, this thing, selling. That's why we can't do that. minus we have to do. See what I will tell. Now if at all you directly divide it in the ratio before calculating total cost, what happens? JC also will get divided in the same ratio. Got it? So listen here. Profit 20% of 150,000, 30,000, 15% of 12,000, 1,800, 10% of 7,000, 700. Got it? And always remember, whenever you are going to do the JC, this unit cost, batch cost, always take the units to be produced, not the units to be sold, because this cost will be incurred for the production, not for the sold. Because if they give two unit sales as well as produced, if they ask any question on this, you should take produced, not sold. Now guys, you know the total profit 30, 32, 500, 32,500. You know the total sales 1,69,000. Difference 1 lakh. This is your total cost. In the total cost, joint cost is 75. Further processing cost is 1,800, 2,200, 4,000, 27,000. Administration cost is 14,500. Guys, 136,500 minus 75,000 minus 27,000 minus 14,500. Sorry. Now the 20,000 is your selling cost. Now the 20,000 is your selling cost. Now guys, 20,000 into 85%, 17,000. That is relating to main product. 2,000 is relating to A and 1,000 is relating to B. Got it? Now, guys, 17,000 is relating to main product, 2,000 is relating to A, 1,000 is relating to B. Now try to understand. You know the total cost, or in fact, you know the sales. Correct? From that, if you reduce the profit, you will get the total cost. In that, you know how much is the selling cost of A, selling cost of B, selling cost of C. I am telling individually. Minus admin cost, minus further processing cost. You will be left with joint cost for A, joint cost for B, joint cost for C. Simple. You are going to do that way. Hope it is clear. Clear? Shall we go to the next one? In a factory producing JP of two varieties, the following data is extracted in the books. Sales of product X and Y, direct material, direct labor, variable overhead is 150% of labor, fixed overhead is 2 lakh. The analysis of the sales reveal that percentage of sale of product X is 66.67. Which means out of total sales, X is sold to the extent of 66.67, which means can I tell around 5 lakh is X. 5 lakh is X. Y will be 2,50,000. Got it? Now, management contemplates that process further joint product so that they could be sold at a higher rate. Facilities for this is also available. The additional expenditure in total sales anticipated at a higher selling price are given below. Make the recommendation. Guys, if at all we further process, X we can sell at 6 lakh, Y we can sell at 3 lakh. However, to do further processing, you have to spend 70,000 on A, 28,000 on B. Now, all I have to do is find out the incremental revenue. Incremental revenue of X is 1 lakh. Incremental revenue of Y is 50,000. Got it? Incremental cost of X is 70,000. Incremental cost of Y is 28,000. So around 30,000 and 22,000. 30,000 and 22,000 are profit after, profit because just for further processing, not the profit after, because you don't know the joint cost. See, when you did for 5 lakh and 250, there also profit will be there, no? There also profit will be there. Here, 30 and 22 is profit just because you further process, not the total profit. But still, it is profit only, no? Addition profit, no? Whether you will further process or no? You will further process. Better further process X as well as Y. X as well as oh. Guys. Variable overhead is also there, no? That we left, no? Variable overhead. Guys, they are telling it is 150% of labor. If labor increases, variable overhead also will increase. That is 30,000 in this case, 12,000 in this case. Yeah, now when you further process again you will incur labor. Again you will incur. Once you incur labor, again you will incur overhead. So here it will be 1 lakh. Here it will be 40,000, which means X is not giving you any further revenue profit, because further revenue is also, incremental revenue is also 1 lakh. Incremental cost is also 1 lakh. B, incremental revenue is 50,000. Incremental cost is 40,000. So guys, it's left to you. Sorry, X and Y. It's left to you whether to further process X or no. Because if you further process also no use. If you don't further process also no use. What do you think? What we will do? Will not. Why to take risk for doing nothing? If you want to get that market share by further processing product, you will go for. No sir, I am okay with the market which I have for this particular product. For example, petrol. If you want to acquire a petrol market of white petrol, you will further process. No sir, I am fine with this retail petrol. Like that. This is how you are going to do it. A vegetable oil refining company obtains 4 products whose cost details are: joint cost for 4 product 8,29,600, output of A 5 lakh liters, B 10,000 liters, C 5,000 liters, D 9,000 kgs. Further processing cost for A, B, C and D, which means C is not further processed at all. The product can be sold as a intermediates at a split off point without further processing. Calculate the product wise. See here, there they didn't explain what the hell is NRV in the methods and all. They are asking a question on NRV. Guys, NRV is very simple. NRV is very simple. You are going to calculate NRV this way. Sales after split off. Sales after split off minus further processing cost, and after split off, whatever the additional cost we incur, no, selling expense, further split off cost, whatever it is, everything will reduce. Then we will get to know sales value at split off point. including profit, because this includes profit. This is not a joint cost now. Why? From NRV for NRV sales after split off, we reduced just cost, we didn't reduce profit. Now this is NRV. This is NRV. Now if you divide it in this ratio, that is NRV. See, I will tell. Guys, sales after split off is how much? Selling price after split off. $1.84, 8, 6.4, 26.67. A, how many liters are there? 5 lakh. 5 lakh into 1.84. 9 lakh 20,000. Guys, here they have given 6.4. Sometimes they don't give here. This only you should consider because C is not further processed. 8 into 10,000. 6.4 into 5,000. 26.67 into 9,000. 2 lakh 40?
1,030.
13. Ignore because it could be like 26.66667. Somewhere it will be 2 lakh 40,000 minus, guys, further processing cost 2 lakh 40, 48,000 nil 8030. Oh, 30 they have given, then take it as 30. 030. Okay. Now, if at all you had an additional selling cost, that also should be reduced. Whatever is there after further processing cost, that cost you reduce. Now I will get a NRV. NRV of A will be 6 lakh 80,000. NRV of B will be 32,000. NRV of C will be 32,000. NRV of D will be. So much you are getting. How much? 2 lakh? 2 lakh. That is the product is getting in kgs. That's not a problem. Done now. Now we got a NRV. Now JC we will divide in NRV. Guys, total is how much here? 9 lakh 76,000. I don't know. Someone has taken the recorded cost accounting. In class, if you remember, while solving this joint cost allocation, I didn't write. What I did, you know? A, B, C, D. I wrote like this. Joint cost for A, what I told. Guys, total joint cost is 8,29,600. Total NRV is 9,76,000. Divide it in the NRV ratio. That is 8,29,600 divided by 9,76,000 into 6,80,000. How much? 5,78,000. I told this. Should I write this also? Easily understandable, no? Total joint cost divided by total NRV into the NRV relating to that particular product. Literally that particular person told in this, asked in discussion portal, how did you get the 5,78,000? The problem is not that. Before that, literally around 30 doubts that particular person has asked. In the whole recorded access, all others together 10 to 12 doubts. In the gap of 1 week. And in one question it will come. 16 2 by 3 percentage. Sir, you told 16 2 by 3 as 16.6666. Literally, I told that 6666 just to make sure the round off errors won't come. He wrote, sir, you told 16.6666. How many times I told 666666? That also he wrote. Sir, you wrote 16.66666667. But sir, 162 by 3 is not 16.66. No, sir. How I can tell that 2 by 3 means 0.67 now? I don't know. Sir, if at all you are watching marathon, big fan. My mental peace went for 2 weeks. It went on spin. Still it's there. Still other 10 doubts are unsolved. First time I am not solving doubt of few students here. I can't. Frustrated. God, sir. I don't know. That might not be student also, to be frank. I will tell why. Random. Nowadays, you don't know the competition, how it is. Just want to spoil your competitor's mental peace. Go, buy some class. Randomly you turn on. He's telling something 16.67. Pause. How 16.666667? Because I got so frustrated. Team got so frustrated. I took the number, his number, and I asked him, give my number. I called that person. He cut the call. Called again, 2-3 times, 2-3 different days we tried. Cut. So I don't know whether there is really a student. Then Karthik sir also wanted to have fun. He also tried. I don't know. But I'm telling you, if at all it's a competitor, very bad game you are playing. Why you want to spoil my mental peace? Spoil the owners. No, I will give the number of Christopher sir, Arjun sir, Pradeep sir, the directors of ArivuPro, Matthew sir. You go and spoil their mental peace. I have nothing to do, sir. I'm just a daily wage worker here. Huh? You are also? Huh? Where? ArivuPro. Correct. Edit. What to edit? I spend here 10 hours. That doesn't mean that I am also part of the management. Guys, next one. 829,600 divided by 9,76,000 into 32,000.
25,500.
25,500. 25,500. 8,29,600 divided by 9,76,000 into 232,000.
1,97,200.
1,97,200.
200.
This is your joint cost. $829,600 divided by 976,000 into 32,000. It will come different numbers, I feel. $27,400 or 200? Will the total will match with it will. Now you got a JC. You are going to take a sales now minus JC. You will get the profited split off. Now try to understand, guys. What they are asking. Calculate the. See, I hope you understood how to do it under NRV. Calculate the product wise profit allocating JC on NRV. Done. Allocating JC. So JC is done. Now sales, guys. For A, 920,000. For B, 80,000. For C, 32,000. For D, 2,40,000. 30 minus JC 5,78,000, 27,200, 27,200, 1,97,200 minus further processing cost 2,40,000, 48,000, nil 8030. May I know the profit for A, B, C, D?
A
A
6 lakh 80,000.
6,80,000. Huh? 6,80,000.
32,000.
Yes, 6,80,000. What nonsense you are talking? I thought you were smart enough to ignore that. Hey, nonsense. Joint cost and sales. Why are you even adding? Didn't write the 1,02,000. 4,800. 4,800.
34,800.
Huh?
34,800.
34,800. Now this is profit. Compare the profitability of the selling price with and without further processing. Guys, without further processing, you are going to sell A at 1.2. See this NRV I am going to erase now. Fine, no. A, you can sell it at 1.2. How much is 5 lakh into 1.2? 6 lakh. B, 4 into 10,000, 40,000. 5,000 into 6.4, 32,000. 9,000 into 24, 2 lakh 16,000. 2 lakh 16,000. Now, guys, only joint cost will be there. Further processing is not done, so no further processing cost. So profit of A will be 6 lakh minus 578,000, 22,000. B will be 40,000 minus 27,200, 12,800. C will be 32,000 minus 27,200, 4,800. D will be 216 minus 197,200, 18,800. Got it? Now also they might ask how to maximize the profit here. We should check whether everything should be further processed or few things should be sold in the beginning only. All we are going to check is the test additional revenue, how much we are able to generate. Guys, A, how much is incremental revenue? 3,20,000. B, 40,000. C, nil. D, 13,009. 23,900 or 13,000. Got it? This is your incremental revenue. You understood what I did? Revenue before further processing, revenue after further processing. Difference is incremental revenue. Incremental cost, further processing cost, 240,000. 24,000. 30. And incremental cost here is 8030. Guys, first one is giving me incremental profit of 80,000. Second one is giving me loss of 8,000. Third one, anyhow, we don't have choice at all. D is giving us 16,000 additional profit. So what we are going to do? A, further process. B, don't further process. C, you don't have choice. D, further process. You are going to take the call on this basis to maximize the profit. Got it? Hope it is clear, guys. All other things Nothing new special things will be there. Now kindly go through the remaining questions once. Okay, kindly go through the remaining questions once on your own. Fine. No. With that we have completed your methods of costing. Now we are going to jump into major part of your paper, that is techniques. Marginal costing, standard costing, budget to end budgetary control. Got it? Yes. Now we'll be starting with the marginal costing. Okay. Basically, guys, one thing you have to understand, this is not a method of costing. It's a technique of costing. What do you mean by method of costing? Method of costing is all about ascertaining the cost. Here, it is all about decision making. Marginal costing, standard and budget, it's not about ascertaining the cost. It's all about decision making. Okay. So, marginal costing is nothing but a technique of costing, which helps management in decision making. Which helps the management in decision making. What is the difference between other costing and marginal costing in decision making, sir? In the marginal costing for decision making, only and only marginal cost is considered. Only and only marginal cost is considered, that is variable cost is considered. Whereas fixed cost is considered as a irrelevant cost. Fixed cost is considered as a irrelevant cost. That is sunk cost. What we have, see, we have already incurred, no? Whether you further produce, with you don't further produce, whether you sell, whether you don't sell, end of the day that is already incurred. Whether that can you avoid, can you do anything to that? No. So literally that has nothing to do with the decision making. For example, now ArivuPro people, let's say they are planning to start one evening batch. Now to start evening batch, let's say their faculty will charge, let's say 2000 per student. Okay, faculty will charge 2000 per student. Now try to understand, students will pay, let's say 4000 per subject. Now rent is there, no? Rent for running a batch, not for this particular batch, for running in 1 month. Let's say ArivuPro incurs 3 lakh rupees of rent. ArivuPro incurs 3 lakh rupees of rent. Now my question is whether to run the batch or no if the 30 students comes. Yes, run or no? If anyone thinking no, sir, why? Because the revenue is 30 into 4, 1,20,000, whereas faculty cost is 30 into 2, 60,000. So only 60,000 is remaining, whereas the rent is 3 lakh. So you will incur a loss of 240. You are thinking in a wrong way. Why, sir? Guys, whether you run the batch, you don't run the batch, you have to pay this rent. Whether you run the batch, don't run the batch, you have to pay this rent of cost 3 lakh, which means this has nothing to do with the decision making. This has nothing to do with the decision making. Decision making will be purely, boss, extra cost, how much you will incur? 2000 per student. Because of that extra revenue, how much you make? 4000. Additional 2000 per student you are able to make, which means run the batch. Profit it is. Now management, do you think they considered 3 lakh for decision making? No. Now this is your marginal costing. However, guys, 3 lakh is fixed, I agree, but you have to incur, let's say if you don't run the evening batch, the rent our landlord is charging is 3 lakh. If you run the evening batch, What they are charging is 4,50,000. Now, the 1,50,000 extra fixed cost is there. No, that is relevant. That is relevant because if you run, you will incur. If you don't run, you won't incur. That is relevant cost that should be considered for decision making. Got it? So guys, cost you can divide into two: variable cost and fixed cost. Variable cost, basically marginal cost is variable cost. No, variable cost has impact on decision making. Fixed cost will be treated as sunk cost and relevant cost. In first case, it was sunk cost 3 lakh. It has no impact on decision making. In the second case, that 1,50,000 was relevant cost because it has an impact on your decision making. Got it? Guys. One more thing you have to remember about marginal costing is only variable costs are considered for computation of cost of production under marginal costing. So the value of inventory includes only and only variable production cost. Guys, in the marginal costing, only and only variable production cost is considered for calculating the cost per unit. Whereas in the absorption costing, total production cost including fixed production cost will be considered. In the absorption costing, total production cost including fixed production cost will be considered. Guys, generally for marginal costing, where the inventory won't be there, opening stock and closing stock, decision making table will look like this. What is it, sir? Sales minus variable cost, we call it as contribution. Contribution minus fixed cost, we call it as profit. Sales minus variable cost, we call it as contribution. Contribution minus fixed cost, we call it as profit. Got it? Now, guys, contribution means a portion of sales. A portion of sales which will recover a fixed cost and give you profit. A portion of sales which will recover a fixed cost and gives you profit. That is your contribution. And guys, and contribution, if at all it is positive and there is no relevant fixed cost except the project. If the contribution is negative, which means your sales is less than variable cost, reject it. As simple as that. Now, guys, there is something called as contribution percentage. Also, we call it as PV ratio. There is something called as contribution percentage. Also, we call it as a PV ratio. Now, contribution percentage or PV ratio, how to arrive at it, sir? Contribution in proportion of sales. That is contribution by sales into 100. Contribution by sales into 100. Sir, if the sales is 100%, if the contribution is 60%, what is this 40%? That is your variable cost percentage. That is your variable cost percentage. Got it? So variable cost percentage is variable cost by sales into 100 or 1 minus PV ratio. 1 minus 0.6, 0.4. That is your variable cost percentage, not rupees. If you multiply the variable cost percentage to sales, you will get it in rupees. Now, guys, always and always you should remember one thing. Variable cost will vary with the units, not with the selling price. Variable cost will vary with the units, not with the selling price. Now let's say ArivuPro people are charging 4,000 per student. Faculty cost is how much? Let's say 2,000 per student. 50%? Yes or no? Now, if the students are 50, faculty cost will be how much? 1 lakh. If the students are 100, faculty cost will be how much? 2 lakhs. Basically, it is varying with the number of students. Let's say ArivuPro people gave a offer. Per student, they are going to charge 3,000. Does that mean that they will reduce it to faculties also? Will the faculties be okay if they reduce it? So try to understand, variable cost has nothing to do with the selling price. Variable cost will change only and only with the change in the output, not with the change in the selling price. This, for decision making question, this is going to play a very crucial role. Sometimes they don't give information. All they will tell is last year number of units sold and this year number of units sold is same. Which means although this year's variable cost they won't give, last year's variable cost is only this year's variable cost. But this year's sales will be different. Why? Selling price is different. That doesn't mean that variable cost in rupees also will change. That won't change. In percentage it will.
Contribution is portion of sales towards recovery of fixed cost, which means that is after the break-even point.
No. Break-even point means after recovery of every cost, including fixed cost. Contribution is just by sales portion which is recovered, variable cost. Fixed cost is yet to be recovered. Whatever remains after recovering fixed cost, that is your profit. Now, guys, there is something called as break-even point or a break-even sales. Break-even point or a break-even sales. What do you mean by this, sir? Guys, break-even point or break-even sales means, break-even point or break-even sales means the portion of sale, or if you make so much sale, the amount of sale which gives you no profit, no loss. Which gives you no profit, no loss. That is your break-even. Only recover the total cost. So break-even point is the point. If it is in rupees, then total sales is equal to total cost, where profit or loss will be zero. If it is in units, if you sell so many units, your total sales will be equal to total cost. Total sales will be equal to total cost. That is your break-even sales or break-even point. Got it? Now, so always you should remember one thing. At the break-even point, sales is equal to cost. At the break-even point, sales is equal to cost. Can I also tell, guys, contribution minus fixed cost should give me 0. Which means, can I also tell contribution is equal to fixed cost? Can I also tell it as total contribution is equal to fixed cost? So can I tell it like this? Contribution per unit into units sold is equal to fixed cost, or unit sold is nothing but break-even point in units. No, then only fixed cost is equal to contribution. Can I tell break-even point is equal to fixed cost divided by contribution per unit? Can I tell that break-even point is equal to fixed cost divided by contribution per unit? I will get the break-even sales in terms of units. Break-even point in terms of units. Guys, can I also tell sales into contribution percentage will give me contribution? Can I tell that sales into PV ratio will give me contribution? Yes. Now, instead of contribution, can I write it as break-even sales into contribution percentage, that is PV ratio, is equal to fixed cost? Can I tell break-even sales in rupees is nothing but fixed cost divided by PV ratio in percentages. So if you divide it by the contribution rupees, you will get it in terms of units. If you divide it by the contribution percentage, you will get it in terms of value. Guys, however, sir, why to remember so much formula? You can do that table. Sales you take, minus variable cost you take, contribution you get, minus fixed cost, take profit as 0. Now, few times you might not be knowing the total sales. Then take total sales as X. Variable cost, some percentage of X. Contribution, some percentage of X. That some percentage of X minus fixed cost is giving you 0. Find out how much is X. You want break-even point in terms of units. Take unit as X. Selling price you will be knowing. Let's say 10 rupees. 10x will be sales. Variable cost, let's say 6 rupees. 6x will be variable cost. Contribution will be 4x. Minus fixed cost. Let's say 10,000 is fixed cost. Profit is 0. Break-even point. Now, 4x is equal to 10,000. X is equal to 2,500. That is, in terms of units, it is 2,500. Got it? You can do like that also if you don't want to remember the formula. Done, sir. Next is something called as cash break-even sales. What is it? Cash break-even sales. What do you mean by cash break-even sales, sir? Sales at which revenue will be equal to cash cost or cash expenditure. That is your fixed cost I was telling, no? Yes. Guys, in the fixed cost, don't you think depreciation will be there? Whether depreciation is a cash expenditure, it's a non-cash expenditure. Now, excluding depreciation, how much cost you have? That will be your cash expenditure. Now, by making how much sales you can recover your cash expenditure. That is your break-even sales. Which break-even sales? Cash break-even sales. Cash break-even sales, which means you are going to consider only and only cash expenditure as a fixed cost, not as a total fixed cost. Now there is something called as margin of safety. Something called as margin of safety. What do you mean by margin of safety, sir? Guys, margin of safety means sales over and above. Sales over and above break-even sales. Sales over and above break-even sales, we call it as a margin of safety. We call it as what? Margin of safety. Let's say the total sales is 10 lakh. Break-even sales is 7 lakh. 3 lakh is your margin of safety. 3 lakh is your margin of safety. Guys, can I write it something like this? Let's take one example. I will show something for you guys. Listen. 2 levels of sales you tell. Sales you tell. One. Let's say 10 lakh. Okay. Variable cost, can I take it as 4 lakh? Contribution, can I take it as 6 lakh? Yes. Guys, fixed cost, I am going to take it as 6 lakh. So profit will be 0. What do you mean by this? What is that? 10 lakh now. So 10 lakh is a break-even sales. Guys, how much is a PV ratio? PV ratio is 60%. PV ratio is 60%. Got it? Now, let's say now my sale is 15 lakhs. My sale is 15 lakh. Guys, what is this 5 lakh? Huh? What? What? Sales over and above the break-even sales is what? Correct. Now, variable cost is 40% of sales. That is 15 lakh into 40%. Contribution. Profit. Clear? Clear? Guys, one thing you have to remember here. How much is the change in contribution? How much is change in profit? One thing you have to remember, change in contribution will be equal to change in profit where the fixed cost is not changing. Change in contribution is equal to change in profit. Guys, listen here. Can I tell at margin of safety, that is rupees 5 lakh, at rupees 5 lakh, contribution is directly equal to profit. Can I tell it or no? Easily I can tell. Why, sir? At break-even point, fixed cost is already recovered. After break-even, whatever you earn, in that variable cost will go, I agree. But remaining whatever is there, everything will be towards profit. So, can I write it as at margin of safety, contribution is equal to profit. Margin of safety itself is changed, no, madam.
Change is 9 lakh minus 6 lakhs.
At margin of safety, contribution of margin of safety is equal to profit. Correct? Now, guys, can I write it as contribution of margin of safety is equal to profit? Can I write contribution of margin of safety as margin of safety into PV ratio? 5 lakh into 60%, 3 lakh will be equal to profit. Can I write margin of safety is equal to profit by PV ratio? Can I write margin of safety is equal to profit by PV ratio? Guys, margin of safety is nothing but sales over and above break-even sales. That is break-even sales plus margin of safety. That is sales minus break-even sales. Or contribution of margin of safety is equal to profit. Margin of safety into PV ratio is equal to profit. Margin of safety is equal to profit by PV ratio. This last formula is there, no? Margin of safety is equal to profit by PV ratio. One of the major one. Got it? Got it? Guys, I want to show you one more magic also. Tell me on sales level, madam. Tell me one more. Tell me variable cost, how many percentage shall we take? Two lakh? Very good. Fixed cost won't change with the sales. In the marginal costing, fixed cost is considered as a periodic cost. Now, how much is profit? 1 lakh 50? 2 lakh? Guys, how much is the change in contribution? 1 lakh. How much is change in profit? 1,40,000. 1,40,000 and 1,40,000. Change in sales. PV ratio is 70%. Agree? PV ratio is 70%. Agreed? Guys, how much is change in sales? 2 lakhs. How much is PV ratio? 70%. Which means how much is the amount? 140. How much is profit? 140. Which means one thing you have to remember here. If in the question, if they give 2 profits, 2 sales, change in profit is as good as your change in contribution. In the question, if they give you change in profit, that is 2 sales, 2 profit they will give. Using that easily you can find out a PV ratio. How, sir? Change in profit 1,40,000. Change in sales 2 lakhs. How much is PV ratio? Understood? Understood. So PV ratio, one more thing you have to remember, sometimes they will give 2 different years profit and sales. Always remember that only that much they will give. They will give 2 sales, 2 profit. That time what you should do, PV ratio is nothing but change in profit is as good as change in contribution. So change in contribution divided by change in sales is PV ratio. Change in profit is change in contribution. So PV ratio, one more important formula, that is change in profit divided by change in sales. Sir, if the closing stock is there, opening stock is there, how the marginal costing income statement will be there? How the absorption costing income statement will be there? Guys, very important, concentrate. We'll take sales. Under marginal absorption, sales won't change. Whether you use marginal, whether you use absorption, whether customer is going to give you more or less, or they will give same only. Same only. So sales won't change. But in absorption, try to understand what we are going to take. We'll take direct material, direct labor, direct expense, plus production overhead. We are going to take both variable as well as fixed. Both variable as well as fixed. But one thing you have to remember, variable and fixed will be absorbed in general basis. However, variable, if they don't give the budgeted different, then variable absorbed and actual will be same. Whereas fixed overhead also will be absorbed. Now, direct material, direct labor, direct expense, variable production overhead, fixed production overhead, absorbed. Variable production overhead absorbed will give you what? Cost of production. Cost of production. For that I am going to add opening stock of finished goods, closing stock of finished goods. Of course, when I know the cost of production, I am going to value my inventories, closing stock at which one? Cost of production only. Now I will get how much is my cost of goods sold. How much is my cost of goods sold? Now, guys, if at all I under absorbed, I have taken less expense. Add it to cost of goods sold. Basically, the absorption, under absorption, over absorption should go to cost of sales, not to the cost of production. So, under absorption, add it to cost of goods sold. Over absorption, reduce it from cost of goods sold. We'll get the cost of sales. Now, from the sales, if I reduce cost of sales, I will arrive at a profit. However, in the cost of sales, remember one thing, your selling and distribution overhead will be there, administration overhead will be there. Selling and distribution will be there, administration will be there. That will give you profit or loss. This is under which method? absorption. What we are going to take? First take sales and all park it somewhere. Now going to cost, direct material, direct labor, direct expense. Variable production overhead absorbed, fixed production overhead absorbed. However, variable production overhead will be absorbed will be equal to actual if there is no difference in budgeted and actual. Done. I will get cost of production. For that, I will add opening stock of finished goods minus closing stock of finished goods. Here, while valuing, we should consider cost of production per unit. Done. For that, you will get cost of goods sold. For that, if you add under absorbed overhead, because you showed less expense earlier, remaining expense you charge it here. Less over absorbed overhead, because there you showed more expense, add it, will give you cost of, will give you nothing. For that, add admin overhead, add selling and distribution, you will get a cost of sales. From sales, if you reduce cost of sales, you will get profit. Got it? Now going to marginal. Sales, let it park there. Now we should consider only and only variable production cost. Direct material, direct labor, direct expense, and variable production overhead. Variable production overhead will give me cost of production. Should not consider the fixed production overhead, only and only variable production overhead. For that, add opening minus closing will give me cost of goods sold. Cost of goods sold. Now for the cost of goods sold, if I add all other variable overheads, variable admin overhead, variable selling and distribution overhead, I will get the total variable cost. Total variable cost. From the sales, if I reduce total variable cost, I will get contribution. From the contribution, guys, if I reduce the fixed cost, including production overhead, fixed production overhead, fixed selling overhead, fixed admin overhead, you will get the profit. But one thing you have to remember here, when taking fixed cost as per marginal, we are least concerned about how much we absorbed. It should be based on the periodical cost. 1 year means 1 year expense. 3 months means 3 months expense. Got it? That is under your marginal. Under absorption, what we will do, guys? Sales, park it there. Direct material, direct labor, direct expense. Variable overhead related to production absorbed. Fixed overhead related to production absorbed. You will get the cost of production. For that, add opening stock of finished goods minus closing stock of finished goods. While valuing closing stock of finished goods, you should consider cost of production. Done. Now we arrive at a cost of goods sold. For that, add under absorption of overhead minus overhead of over absorption of overhead will give you cost of. For that, add admin overhead, add selling and distribution, both variable as well as fixed, will give you cost of sales. From sales, if you reduce cost of sales, will give us profit. That is under absorption costing. Now, going as per marginal, direct material, direct labor, direct expense, variable factory overhead, that is variable production overhead, will give me cost of production. Add opening minus closing, here valuing inventory based on cost of production, will give me cost of goods sold. For that, I will add all other variable overheads. variable admin overhead, variable S&D. I will get the total variable cost. From the sales, if I reduce total variable cost, I will get the contribution. From the contribution, if I reduce the fixed cost, I will get the profit. Fixed cost includes fixed production overhead, fixed admin overhead, fixed selling and distribution overhead. Got it? Guys, in your study material, somewhere there should be one question based on this absorption. Can you just check and tell me in which page it is, please? Illustration 1 itself. Shall we see? We'll get a clear clarity about this. Maxwell Limited produces a single product, Boost. The following figure related to Boost for the period is as follows. 50% capacity 400 units, 100% capacity 800 units. This for the whole year. Sales 8 lakh, 16 lakh. How much would be the selling price? 2000. Got it? Yes. Give me a second. Done. Now, this is your selling price done. Production cost they have given at 50% how much, at 100% how much, variable and fixed. Selling and distribution also they have given like that. Guys, always remember only production cost will be absorbed as per this. The normal level of the activity is 800 units, which means the absorption will take place on the basis of normal units. So normal output is 800 units. Fixed costs are incurred evenly throughout the year and actual fixed costs are same as budgeted. There were no stocks of Boost at the beginning of the year. There is no opening stock. In the first quarter, 220 units were produced, 160 units were sold. What would be the fixed production cost absorbed by Boost if absorption costing is used? Guys, how much is the budgeted fixed cost? 1,60,000 for a whole year. Correct? How many units? 800 units is a normal output, which means per unit we are planning to absorb 200 rupees 200 per unit is a absorption rate. 200 per unit is a absorption rate. Done. What would be the under recovery or over recovery of overhead during the period? Guys, first, in this particular quarter, how many units we have produced? 220. We are recovering 200 rupees per unit, which will come to rupees 44,000. This is absorbed overhead. Actual overhead is how much, guys? Actual and absorbed, actual and budgeted, both are same they are telling, but don't take 160 here. Why? 160 is for whole year, we are taking quarter year. Actual overhead is 40,000. Moral of the story, 4,000 is over absorption or under absorption? Over absorption. So what would be the over recovery? 4,000. What would be the profit as per the absorption costing? As per absorption costing, listen here. First we'll take the direct material, direct labor, direct expense, variable overhead as well as fixed overhead. Guys, they have given production cost directly. We don't have to take direct material, direct labor, direct expense. They only have given. Variable, guys, 320,000 for 400 units. How much per unit? 800 or 80? 800? Now guys, try to understand. Variable cost is 800 per unit. Now, variable production overhead or variable production cost. 220 units we produced. 800 per unit. How much it is? Sorry? 1,76,000. fixed production overhead or fixed production cost. Guys, 220 units into absorption rate we already calculated 200. 44,000. 180, 220,000. This is your cost of production. Cost of production. Add opening stock, it's not there, minus closing stock. Guys, closing stock will be valued on the basis of cost of production. 220,000 to produce 220 units. 1 unit rupees. 1000 1000 no. Now how much is a closing stock? Out of 220, 160 was sold, which means 60 is remaining. 60 into 1000. This will give me cost of goods sold 160 thousands. 160 thousands. Now for this cost of goods sold, here only I will show over absorption is there, that I should do what? Reduce it or add it. Subtract it. Over absorption. Reduce it. Now selling and distribution, guys. Selling and distribution, try to understand. Per unit how much is variable? 1,60,000 divided by 800. Sorry, 400. 400 which means here minus S&D. If you remember, I told you one thing. After COGS, everything will be admin overhead, selling and distribution, everything will be for number of units sold. 1,60,000 divided by 400 units, how much? For opening stock, closing stock, closing stock. Cost of goods sold is for cost per unit sold. After that, whatever you do, for division you should take units sold. Till cost of production you should take units produced. After that, units sold. I told it in cost sheet if you remember. Guys, 400 per unit. How many units you are selling? 160. 160 into 400. 6 lakh. Sorry?
64,000.
Correct? 6,64,000. Fixed overhead, guys, 2,40,000 for whole year. Per quarter it is 60,000. I told no, this and all we don't apportion, absorb. We absorb only and only production overhead in this kind of questions. Now how much is my total cost? Of course, under absorption of over absorption of 4,000 should be reduced. 160,000 plus 120,000. 2 lakh. How much is my sales? Sales will be 2,000 into 160. 2,000 rupees is the selling price. 160 is the unit sold. 3,20,000. So profit as per absorption method is 40,000. Profit as per absorption method is 40,000. Now, how much is the profit as per marginal costing method, sir? Here nothing, no drama, nothing, straight away. Variable production cost will be taken. How much per unit we have calculated? 320 divided by 400. 320 divided by 4 basically. Sorry, 3,200 divided by 4. 800. 800. That was my variable cost. Guys, how many units I am producing? 220 units. 220 into 800. 1 lakh 76,000. If you know, this only will be our COP also. 1,76,000. Opening stock is there? No, not there. So closing stock. Guys, 176,000 we incurred to produce 220 units, which means per unit it is 800. Closing stock is 60 units at the rate of 800. 48,000. How much is your COGS? 1 lakh 28,000. For this, I am going to add all other variable overheads. Basically, here only selling and distribution. 160,000 divided by 400, 400, no? So 400 rupees per unit, right? So how many units I am selling? 160 units, 160 into 400. 64,000. 64,000. This will give me total variable cost. 192,000. Guys, sales is how much? Sales we calculated, no? 3,20,000, no? Sales is 3,20,000. From that 192,000 is my variable cost. Will give me contribution. 128,000 minus fixed cost. Fixed cost includes production fixed cost as well as selling and distribution. Everything is considered as periodic, which means what total 4 lakh is considered as periodic. 4 lakh for a whole year, per quarter it is 1 lakh. 28,000. In that one, how much we got? 36,000. Here we got 28,000. What is the reason, sir? Reason is nothing but valuation of closing stock. There the value of closing stock will be more because closing stock includes variable production cost plus fixed production cost. Here the value of closing stock will be less because cost per unit includes only and only variable production cost, not the fixed production cost. So always and always remember one thing. The reason for the difference between, oh sorry, there it was 40,000, no? So their closing stock was 52,000. 60,000. Here 48,000. 12,000. That's the reason. So always remember your marginal costing and absorption costing gives you different figures. The only and only reason is valuation of closing stock. Valuation of closing stock. Hope it is clear. Like that, if the different questions are there, go through that once, guys. Now, sir, that break even and all what you told, no? That break even and all what you told, no? That break even is for the single product. But guys, what if I am doing multiple product? Okay, do sir. We'll do it like a normal one. No. Why? Fixed cost will be 1. For example, if ArivuPro people are doing only CMA batch here, rent is so much, sir, fixed cost. CMA batch student cost is so much, variable cost is so much. How many CMA students we want in a class so that we will break even? That is, we'll make no profit, no loss. Same building. CA students are there, CMA students are there, ACCA students are there, CS students are there. Now, how many CA, CS, CMA, ACCA students together will break even this cost? So I can't consider only and only CMA batch here. So what I should do, guys? Normal break even point, what is the formula if you want in units? Fixed cost divided by contribution per unit. If you want it in rupees, fixed cost divided by PV ratio. Guys, here, combined break even in terms of units, combined contribution per unit, not contribution per unit, it will be combined contribution per unit. In case of you want it in sales value, then fixed cost divided by combined PV ratio. Fixed cost divided by combined PV ratio. Now, sir, how to calculate the combined contribution? Guys, I am going to take the weighted average of the contribution. That is Sales mix they will give, no? For example, what they will tell is, if the 10 students are there, 5 students are CMA students, 3 students are CA students, 1 student is CA student, 1 student is ACCA student. Now that is my sales mix in units. That is my sales mix in units. Now I will calculate one CA student will give me how much contribution. One CMA student will give me how much contribution. One ACCA student will give me how much contribution. One CMA student will give me how much contribution. Now I will multiply that ratio with the contribution per student. For example, let's say CA or CMA, CA, CS, ACCA. Okay. Contribution per unit. Contribution per unit. Guys, contribution per unit in CMA, let's say 4,000 rupees. CA, let's say 3,000 rupees. CS, let's say 5,000 rupees. ACCA, rich people course, let's say 10,000 rupees. Now, ratio. That is, if 10 students are there, 10 students are there, how many students will be of CMA student? Let's say 4, 3, 2, 1. In 10 student, 1 student will be ACCA student, 2 student will be CA student, 3 students will be CA student, 4 student will be CMA student. Now, combined contribution, how we can check, sir? 4,000 rupees into 4 plus 3,000 rupees into 3 plus 5,000 rupees into 2 plus 10,000 rupees into 1. All divided by how many students are there in total? Observation 10. How much it will be? Combined contribution is 4,500. Okay. Now let's say, guys, our fixed cost is 45 lakhs. Fixed cost is how much? 45 lakhs. Now try to understand my break-even point, that is combined break-even point in units will be, in units it will be rupees 45 lakh, that is total fixed cost, divided by combined contribution 4,500. How much it will be? 1,000 students. Guys, we want 1,000 students in total. Sir, how many CMA students? 1,000 in the ratio of 4:3:2:1. 400 should be CMA students, 300 should be CA students, 200 should be CS students, 100 should be ACCA students. Now this is, guys, in terms of units. If they ask in terms of value, these units into sales price, if I do, I will get in value. However, this is combined contribution. Combined contribution. Got it? Now, sir, if I want it in amount, I want combined PV ratio. No. If I want it in amount, I want combined PV ratio. Then what I want? For combined PV ratio, I don't take the sales mix in terms of units. I will take the sales mix in terms of amounts. I don't take the sales mix in terms of units. I will take sales mix in terms of amounts. See, weight 1 into PV ratio 1. Okay, that is ratio of the unit sold into selling price will give me sales. Will give me sales. Sales into PV ratio will give me combined PV ratio. Guys, I will show it like this. Listen. Sales is there. let's say ArivuPro sales is 10 crores. ArivuPro sales is 10 crores. Ratio. I'm not telling units, I'm telling amount. Ratio. Guys, ratio, let's say CMA, CA, CS, ACCA. Sales ratio will be, let's say, 5 is to 8 is to 3 is to 5 or 6 or 4. 4 would be good. 13, 16, 20. No, 20, no total. In question only, we don't make complicated. In the answer, why to take complicated numbers? 19, 18 and all. Huh? Wait, that will do. Wait. Now, what they are telling you, guys? What they are telling you, fees for CMA students, let's say 60,000. Variable cost, let's say 40,000. Contribution is how much? 20,000. PV ratio is how much? 33.33%. CA students, fees, let's say 60,000. Okay. Variable cost, let's say 50,000. Now the contribution is how much? 10,000. 10,000 divided by 6. 16.67%. 1 by 6. CS students, let's say fees is 60,000. Cost is 30,000. Variable cost. PV ratio 50%. ACCA, let's say fees is 1 lakh. Cost is 60,000. 40. Now I got PV ratio. Now what I am going to do is, first I am going to find out how much is the sales over here. How much is the sales over here in this 10 crore? Guys, 10 crore into 5. 5 divided by 20. CA. 10 crore divided by 20 into 8. One crore 50 lakhs. Next one. Got it? Now PV ratio. PV ratio of CMA 33.33. Can I take it as 0.33? PV ratio of CA 0. PV ratio of CS contribution 8,33,333. Four lakh into 1 by 6. Sorry, 4 crore into 1 by 6. 80 lakhs? No. 75 lakhs? No. 62 lakh 50,000. How much? 75 lakhs. 80 lakhs. Correct? May I know the total contribution, please? Eh? What nonsense. You got problem with calculation now. 2 crore. That is your combined contribution. Divide by combined sales is 10 crore. Which means your combined contribution percentage is 23 percentage. 23 percentage. Now if we divide fixed cost by 23 percentage, I will get to know the break even sales. That break even sales, if I divide it in these ratios, I will get to know how much should be the break even sales for CMA, CA, CS, ACCA. Now guys, if I divide it by the selling price, fees per student, I will get to know how many students of CMA is required, CA is required, CS is required, ACCA is required to make the break even. I hope you guys understood how to do when the multiple units are there in the question. And there is something called as indifference point also, guys. What do you mean by indifference point, sir? Guys, indifference point means there is no difference. Hang. What is it? There could be indifference cost, indifference profit. What do you mean by that, sir? Two levels will be there, two different. Altogether, both are different only. Product A is different, product B is different. Selling price is different, variable cost is different, fixed cost is different. But if you sell or if you produce some units of product, the cost of A and cost of B will be same at X number of unit. If you produce some X number of units, cost of A and cost of B will be same. That is indifference cost. If you sell some Y number of units, profit of A and profit of B will be same. That is called as indifference point at profit. Indifference point at profit. Same number of units you will sell to arrive at the same cost, same profit. That is your indifference point. They will ask either cost or either profit. Guys, if they are asking cost, try to understand. If at all your units are less than indifference point, then produce the product with the lesser fixed cost. Which one? If the units produced or units sold, basically I will write it as units, it is lesser than indifference point. Which one you should select? Select alternative with lesser fixed cost, because you can recover more. Whereas if at all units produced is greater than indifference point, select alternative with lower variable cost. Select with the lower variable cost. Sir, let's say two alternatives are there, A and B. A and B. Sir, A is there, no sir. Variable cost as well as fixed cost. In both, this is only lower compared to B. In that scenario, what we should do? Guys, there is no indifference point at all. Indifference point will come when one product is having lesser variable cost, one product is having lesser fixed cost. If the one product only have both lesser variable, lesser fixed, that means the other product cannot reach this level at all. For example, you produce 10 units. Let's say 3 alternatives are there. 2 alternatives are there. And if at all they will give 3 alternatives, then you should check AB, BC, CA. Only 2 things you can take at a time. Now, I will show some random numbers I will take and show it first. First, I will show why there will be no indifference point in case of both are lesser. Let's say 2 are there, A, B. Okay. Variable cost per unit. A Huh? How much? 50. B. Do you really want to make the complicated things by taking the prime numbers? Thanks. Fixed cost.
Lakhs. 5 lakhs.
2 lakhs and no. Let's take lesser one. 1 lakh will take. Huh? Now guys, try to understand. You produce 10 units of A. How much will be cost? 10 into 50. That is 5,000 or 500. 500 plus 2 lakh. 2 lakh 500. 10 into 25. 250 plus 1 lakh. 1 lakh 250. You produce 100 units. Again, A will be more than B. There will be no point that where A and B will intersect. If they intersect, that itself is IDP, no. Indifference point. There will be no point where both will intersect. Which means always and always remember, indifference will exist only and only when one is lesser in variable, the other one is lesser in FC. If the single one is only lesser in both, there will be no indifference point. Now guys, now shall I take it as 3 lakhs? Shall I take it as 3 lakhs? Now, first we'll calculate indifference cost. Indifference point for cost, which means if you produce some X number of units of both A and B, cost under A and B will be same. That is, cost of X will be how much in case of A? X into rupees 50,000, sorry, rupees 50. That is variable cost plus fixed cost is 2 lakh. That will be total cost of A when you produce X number of units. Total cost of B when you produce same X number of units. $50X plus 2 lakh is equal to 25X plus 3 lakh. 25X is equal to 1 lakh. X is equal to 24,000. X is equal to 4,000 units. What do you mean by this, sir? When you produce 4,000 units, cost as per cost of A and cost of B both will be same. Check 4,000 into 50, 1 lakh. Hey, how much is 1 lakh divided by 25? 4,000 only. 4,000 into 50, 2 lakh. 2 lakh plus 2 lakh, 4 lakh. Okay. B, 25 into 4,000, 1 lakh plus 3 lakh. Understood? Understood? This is your indifference point in terms of cost. Now let's say in terms of sales, profit. That is both, if you sell some number of units, both will give you same profit. Selling price. Selling price, let's take it as 500 and 600. Shall we? Now, profit of A will be how much, sir? Let's say units, indifference point, profit will be X. Indifference point will be X. That is, if you sell X units, profit of A and B will be same. That is, 500X will be your sale. Yes, minus 50X will be your variable cost, minus 2 lakh will be your fixed cost. That is your profit of product A when you sell X number of units. That is equal to profit of product B when you sell X number of units. That is 600X minus 25X minus 3 lakhs. Got it? 450x minus 2 lakh is equal to 575x minus 3 lakhs. 1 lakh is equal to 125x. X is equal to 800 units. That is, if you sell 800 units, both your alternative A and alternative B will give you same profit. Just check. 800 into 500, how much? 800 into 600 is how much? 4 lakh 80,000. This is your sales minus variable cost. 800 into 50. 800 into 25. Contribution is how much? 3 lakh 60. 4 lakh 60. Minus fixed cost. 2 lakh. 3 lakh. 1 lakh 60 and got it. Both gives you a same profit. That is known as indifference point. Guys, concept wise marginal costing, everything is covered here. Now, the examination, the marginal costing depends on you processing the question, reading the question carefully, getting a more and more information as possible and solving the question. There is no, that is where the marginal costing, the mistakes will be there from the student's end. Got it up. Now we'll see few questions of your study material. We'll wind up the marginal costing. Done. How many questions are there you told? 15. One is done already. 14 more are remaining. Two is also leave. No, 2C here. ABC Limited incurs the fixed cost of 3 lakh. It is a single product company, which means no need to calculate multiple break even and all. With the annual sales budget of 70,000 unit at a selling price of 300. Variable cost is 285 per unit. Variable cost is 285 per unit, which means 15 rupees is your contribution per unit. Correct? Correct? No. Company is deliberating about an increase in the selling price to product to 350. Now it is 300, will increase to 350. This shall required in order to improve the quality of the product. It is anticipated that despite increase in the selling price, the sales volume shall remain unaffected. However, fixed cost shall go beyond 450,000 and variable cost will increase to 330 rupees. You are required to draw profit volume graph and all you leave. Determine the break-even point. Guys, let's find out a break-even point in two scenarios. Yes, first one. See, I can do the fixed cost divided by contribution per unit. Straight away I will get a break-even point. But I am not doing that. I will go for table. First, let's assume units to be at break-even point, units be X. First case, how many units to be sold? X units at the rate of 300. Sales will be 300X. In the second case, sales will be 350X. 300X and 350X. Next, variable cost 285X. In the second case, it is 330X. Contribution 15X, 20X, fixed cost 3 lakh, 4,50,000 will give me profit of break even point, no, 0. So X is equal to, guys, 20,000 units in the first scenario. Next scenario, 22,500 units. Got it? Got it? Now, sir, what if they ask you calculate the profit? Calculate the profit in two scenarios. First one, we are planning to sell 70,000 units at the rate of 300. 70,000 into 300 sales. 21 lakh. Next, they are telling units sold won't change. So next one also 70,000 only, but the selling price is 350. 70,000 into 350. 20. 24 lakh. 50,000. Two crore 10 lakh. 2 crore 45 lakh. Now, variable cost 285 into 70,000. 1 crore 99 lakh 50. Next one, 70,000 into 330. 2 crore. How much is my contribution? 10 lakh 50,000, 14 lakhs. Correct? Minus fixed cost. In first scenario, my fixed cost is 3 lakh. In next scenario, fixed cost is 450,000. 7,50,000 will be profit. 9,50,000 will be where? Profit. If they ask whether to accept the proposal or no, we'll easily tell accept it. Why? You are making more profit. Your profit will be increased by 2 lakh. Oh, by the way, shutdown cost is there. I forgot to tell. Listen here. Listen here. Shutdown cost means, guys, if you temporarily close your business also, you have to incur that cost. Why will you close the business? When you are making a loss, you will close the business. So shutdown cost is when you will make a loss, you have to, when you close the business also, you have to incur that particular expense cost. That we call it a shutdown cost. Sir, why it is important? Guys, whether to run the business or to whether to close the business, shutdown cost plays the major role. How, sir? I agree, I am incurring a loss. Let's say my loss is 1 lakh. Let's say my loss is 1 lakh. Now, by running the business, I am incurring a loss of 1 lakh. If I close the business, I have to incur the cost of 2 lakh every year. Tell me whether I will run the business or I will close the business. Why? Loss will be restricted. Loss will be restricted. Now, the 2 lakh is the shutdown cost, unavoidable cost. Okay. Now, guys, in the question, they will ask at what number of units it is better to shut down the business. Guys, when it is better to shut down the business, if I produce and my loss exceeds 2 lakh, better to shut down the business. Let's say I am producing, my loss goes to 2 lakh 50. Better to shut down or better to run? Shut down. Why? If I shut down, my loss will be 2 lakh. If I don't shut down, my loss will be 2,50,000. Extra 50,000 loss I will incur. So better close it. Now, how to decide, sir? All you have to do is, guys, the loss, the shutdown cost will be there. No, that you should keep it as a target. That is to incur this loss. How many units I have to produce? Take the loss amount of that And normally you calculate how many units to be produced, let it be X, selling price into X, variable cost into X, contribution you will get, minus fixed cost, should give me that much loss. Now let's say I got to know 2000 units. That is, if I sell 2000 units, I will incur the loss which is equal to shutdown cost. I will incur the loss which is equal to shutdown cost. Now, if at all I am selling less than 2000, my loss will be more. Shut down the business. If I am selling more than 2000 units, run the business. If I shut down the business, my loss will be 2 lakh. So, if I produce 2000 units, my loss will be equal to 2 lakh. Now, if it's 2 lakhs are equal, what we should do? Equal means run, because there is a possibility of recovery. So, now, if my loss is 2 lakh, I will run now. If at all my units are less than 2000, close the business. More than 2000, run the business. Got it? Yes? Now, guys, the sports material manufacturing company budget the following data. Calculate the PV ratio. PV ratio will be, guys, 60,000 is a contribution. Sales is 1 lakh. PV ratio is 60%. Guys, PV ratio could be calculated per unit or PV ratio could be calculated total also. Break-even point. Break-even point will be fixed cost divided by PV ratio. 50,000 divided by 60%. Sorry. 83,333. Margin of safety. Total sales is 1 lakh. Break-even sales is 83,333. Margin of safety is 16,667. Got it? Next they are asking effect on the PV ratio. Guys, 20% increase in physical sales volume will also increase the variable cost. Total sales will change, total variable cost will change in the same proportion, which means PV ratio will remain constant. PV ratio will remain constant. However, break-even point also will remain constant. Margin of safety will increase because increase in the price. Like that, you should check for all these things. Okay. Go through this question once before going to exam. Mark it as LMR. Guys, here I told no. They will give the question like this. Change in the sales divided by change in the profit will give you PV ratio. PV ratio. This question is also based on that only. This is that one. Which one? Combined. Accelerate Limited manufacture and sells 4 type of product ABCD. The sales mix in value, not volume. Which means here you can use the combined PV ratio formula. Value, not in units. You won't get a combined contribution per unit. You will get combined contribution percentage. So using that, budgeted sales at 100% is 60,000 per month. Which means 60,000 you are going to divide in this ratio. For that you are going to apply the contribution percentage. They have given variable cost percentage, which means contribution percentage will be 100 minus this. Then you will get a combined contribution. Fixed cost divided by combined contribution, you will get the break-even sales to be achieved. That if you divide in this ratio, you will get sales to be achieved. Got it? Here it is, guys, here it is combined contribution per unit question. The mixed whatever they have given is in the unit ratio. Okay. Here it is unit ratio. All these questions we have to go through this before going to exam once. And there is something called as key limiting factor that we'll discuss in a while. Yes. Now we'll be doing key limiting factors. Okay. Now we'll be doing key limiting factors. What do you mean by key limiting factors? Guys, very simple. Key limiting factors is all about few times the resource will be limited. Resource will be limited. Of course, for your product there is a demand, but the resource is limited. For example, you are producing one product. Let's say product A. Now it takes material X and material Y. Material X it takes 2 kgs. Material Y it takes 3 kgs. Material X it takes 2 kgs. Material Y it takes 3 kgs. Now try to understand. For your A, the demand is 10,000 units. Demand is 10,000 units. X is available 22,000 kgs. Y is available 20,000 kgs. Now guys, although your demand is 10,000, can you produce 10,000 units is a question now. Your demand is 10,000 units. Can you produce let's say 21,000? Can you produce 10,000 units? To produce 10,000 units, you need 2 kg of A, which is 20,000 kg. Of course, X we have 22,000 kg, no doubt in that. To produce 10,000 units of A, you need 3 kg of Y, which is basically 30,000 kgs of Y. Do you have that enough kgs with you? Which means, can you produce that? Now guys, the Y is there, no? Where only 21,000 is there. This we call it as a key limiting factor. This we call it as a key limiting factor. So in that scenario, what you should do, sir? Guys, let's say 2 units are there. A is there, B is there. Capacity, you can produce 10,000 units of A, 20,000 units of B. How much you can produce? 10,000 units of A, 20,000 units of B. Now, demand 8,000 units of A is there, demand 25,000 units of B demand is there. Guys, max to max how much I can sell? In case of A, max to max I can sell 8,000 units, not 10,000. Although I can produce 10,000, sales is only not there. What I can do? Got it? Going to B, you can sell max to max 20,000 units. Although demand is there, but the product only is not there. What we can do? Understood? Now try to understand this. Direct material per unit. Let's say 100 rupees, 200 rupees. Direct labor guys, per hour it is 10 rupees. So per unit of A, let's say direct labor is 50 rupees. Per hour 10 rupees. For A it is 50 rupees, which means 5 hours of labor hours is required for A. B, let's say 80. 8 hours of labor is required for B. Overheads rupees 5 per hour. 25 rupees, 40 rupees. Got it? Huh? If they give like this, what we will do? Selling price. Selling price. Let's say this is 400. This is 500. Now my question is, which one will you produce? What you are going to do? You are going to check whether it is giving positive contribution or no. Guys, first one. Let's say this is 200. This is 400. Now, selling price 20. Your first one contribution is 75 rupees. Sorry, 25 rupees. Second one contribution is 80 rupees. First one contribution per unit is. First one contribution per unit is how much? Rupees 25. Second one contribution per unit is how much? 80. Correct? Now my question is, or let's make it 250. 75. Now my question is very simple. Which one will you produce? Will you produce A or will you produce B? B. Because it's giving more contribution per unit and number of units are also more. If that was the case, A is also giving you profit. B is also giving you profit. Did anyone stop you from producing A and B? Where did I tell you? Anything I told? Only this much is there. I will produce both A and B because both A and B is giving me profit. Correct? Now, there is one small bouncer. What is it, sir? Hours of labor available. Which means now labor is a key limiting factor. We also call it as key factor. We also call it as limiting factor. How much it is, sir? Let's say 60,000 hours. How many hours? 60,000 hours. Now tell me which one will you produce and in what quantity will you produce? Of course, I can't produce both now. Why? 1 unit of A needs 5 hours. Correct? 1 unit of B needs 8 hours. 5 hours and 8 hours. Now 20,000 into 8. 1,60,000 hours. 8,000 into 5. 40,000 hours. Now, whether can you produce both? Full. In full can you produce? No. In part you can. Now my question is, which one will you produce? To what extent? How many units of A we will produce? How many units of B will produce? Which is giving you more contribution? B is giving you more contribution. So we'll produce B first. How much you can produce B? Guys, 60,000 divided by 8. 7,500 of B will produce and A we won't produce anything. If we do like this, it will be wrong. Why? I will tell. Let's say you produce 7,500. How much contribution you will make? 7,500 into 80. 6 lakh. Shall I do it in different way and shall I see? To increase this contribution? A I will produce to the maximum extent. 8,000 units, 5 hours, 40,000 hours. Which means A I am going to produce 8,000 units. B, remaining 20,000 hours divided by 8 hours. 2500 units of B I will produce. 8000 units of A, 8000 into 75, 2000 units of 500 of B, 80. Okay. How much? Which is better? Whether your 6 lakh is better or this 8 lakh is better? Now, how did we get to know that A we should produce more? Listen. Whenever the key limiting factor is there, always and always, decision will be based on contribution per key limiting factor. Decision will be based on contribution per key limiting factor. Guys, I agree. I agree. A 75 rupees, B 8 rupees, I agree. But A is, which is a key limiting factor here? Labor hours. Labor hours. Now, A is taking how many labor hours? 5 hours. Which means per labor hours, how much is a contribution? Got it. B is taking how many labor hours? 8 labor hours, which means contribution per unit is how much? My decision will be purely depending upon contribution per key limiting factor. Got it? So now what I should do? I should produce how much ever possible for A, that is in case of this 8000 units. Remaining if any, then I can go for the other alternatives. But sometimes in question what they do, you know? In question what they do, you know? They will tell minimum units to be produced for A and B both. Here they will tell whatever the decision it could be, minimum 1000 units of A you should produce. Minimum 3000 units of B you should produce. So what you can do is, we got to know that we should produce max to max. But if at all I produce A 8000, 40,000 is gone, 20,000 is remaining. In that 20,000 hours, I will be able to produce only and only 2,500 units. Will I be able to produce 3,000 units? No. So what I will do? I will produce this, I will give that 3000 related hours first. 3000 into 8 hours. How much? 24,000. Now in the 60,000 hours, I will eliminate 24,000 hours. How much is remaining? 30. I will check now in this 36,000 hours, how many units could be produced? 7,800 or no? 7,200. I can produce 7,200 units. So now my mix will be 7,200 and 3,000 units. Sir, what if the question was 2,000 units? Then guys, what I will do? 2,000 units, how many hours are required? 2,000 into 8. 16,000 hours. 44,000 hours are remaining. But the best part is, now for A, only 40,000 hours are remaining. Still extra 4,000 labor hours are left. No. In that again I will produce B. But the process should go this way. Understood? First you should rank based on contribution per key limiting factor. Then accordingly we will produce exactly the same way. If you remember in the additional question bank what we discussed, one question on wheat, rice, maize or something like that, I have solved in additional question bank. Please go and check that. Okay. That question is very important, where there will be key limiting factor of hectares as well as your Minimum criteria is also there. Please go through that kind of questions. These are the examiner's favorite question. With that, we have completed revision of our marginal costing, which will be contributing at least 14 marks in total. At least 14 marks in total in your paper. On an average. Now listen here. Yes, it is 30%. But 30%, your paper won't come for 100. $128. Correct? 2 extra questions of 14 marks each. 128 into 30%. 40 marks almost. Which means if they give marginal 14 marks, standard 14 marks, budgeted 14 marks also, it will be well within the limit. Got it? So this is one of the important chapter. Keep that thing in mind, marginal costing. With that, we have completed our marginal costing. Next will be jumping to standard costing. Okay, give me a minute. Yes, guys, assume there are more than one key constraint is there in a single question. Let's say machine A can produce 8,000 units. Machine B, same product need machine A as well as machine B. As per machine A, you can produce 8,000 units, require like availability of machine A. But machine B is available only for 6,000 units. How many units you can produce in max? 6,000 units. Because the final key constraint will be that B. Although in A you can produce 8,000, you can't complete whole 8,000 in B. Got it? Now that is your key constraint. And one more thing is, sometimes they will give a key constraint in terms of labor, sometimes will be in material, sometimes will be in machine hours. Okay, in case of machine hour, you have to divide the overhead recovery rate. You have to divide that. Overhead recovery rate per hour 5 rupees they will give, overhead 20 rupees they will give, which means machine hour used is 4 hours. Overhead recovery, how it happens? Machine hours into rate, no. So total overhead divided by number of hours, what you will get? Got it? Done. Now we are starting with standard costing. I didn't turn it. I didn't start. But before going, I hope I paused it now. Then it was playing. Otherwise, then it would be playing, and I came back and I turned it on and paused again. Then whole marginal costing or key limiting factors. Hey guys, whoever watching recordings, please let me know whether the key limiting factor is there or not there in your video. If it's not there, please let me know. Now, guys, standard costing again, it is one more technique of costing only, where you will be controlling the cost. How, sir? You will predetermine one price and will tell, boss, my cost should be so much, and you try to incur well within that. Now that is standard costing, the process, the technique of cost control. Okay, how this will work, sir? This will try to restrict the cost incurred to the predetermined cost. This will restrict the cost incurred to the predetermined cost. That is your cost control. Again, of course, standard cost means what, sir? Predetermined cost. How much we decide before incurring. Now, how the standard costing process will work, sir? You will fix the standards. So my material should be so much, labor should be so much, overhead should be so much, like that. Then we will incur the actual cost. How much is my material? How much is my labor? How much is my overhead? Now we will compare the standard as well as actual. Now you will find out if any deviations are there. The deviations we also call it as variances. Deviations we also call it as variances. Then we will analyze why the variance is coming. We'll analyze why the variance is coming and we'll take the corrective measures. Now, sir, variance is always bad, sir. The answer is no, sir. It could be good also, no. You can take more than your set standard or you can take less than your set standard. If at all your actual cost is less than your standard, good, favorable. If at all your standard is less than your actual or your actual is more than standard, adverse, unfavorable. Got it? Now, sir, here standard means what? Guys, here standard means what? Standard for actual. Standard for actual, not standard for standard. It is standard for actual. Got it? What do you mean by that, sir? Let's say they will tell 10 kg of input is used for 10 units. Now you are producing 100 units by taking 110 kgs. Now you can't tell, sir, standard 10 kg was there, sir. Actual 110 kg, 100 adverse. Can you? Why? Standard is there for 10 units. You should convert standard from standard, basically budget, into standard for actual. So always remember, standard means standard for. So now for 10 units, if it was 10 kg, for 100 units, it was supposed to be 100 kg, but you used 110 kg. Now you are going to tell whether it's adverse or favorable. You should convert the standard into actual outputs. Adverse. You are using more. Got it? Got it? Now, guys, for your standard costing, cost could be divided into material, labor, overhead. Overhead again into variable overhead, fixed overhead. However, for your costing purpose, your standard costing discussion is restricted only and only to the extent of material and labor. Material and, got it? This overhead is not there in your costing. However, this is there in your management accounting. Group 2. Okay, you guys don't worry. By the time you complete your college, my management accounting will get. Or you tell me when you guys will have this internals and all, that time we'll complete all this. Now, guys, basically to give you a hint, management accounting, 50% of your paper is based on marginal costing and standard costing. Other 50% is transfer pricing, blah blah. Easy paper. Now, guys, for you, only two variances are required, which and all? Material variance, labor variance, or employee cost variance. Now try to understand. Material variance, guys, example and all here I am not going to show. I am going to straight away take you to formulas. Guys, material cost variance means how much material cost you estimated, how much you actually incurred. How much estimated, how much actually incurred. That is standard cost minus actual cost. Standard cost minus actual cost. Standard cost means what, sir? Standard quantity into standard price per unit. Whereas actual quantity means what? Actual cost means what, sir? Actual quantity into actual price. Standard quantity into standard price minus actual quantity into actual price will give you material cost variance. Now my question is, if the standard cost is more than actual cost, favorable. If the actual cost is more than standard cost, adverse. Now, guys, the cost variance, now we don't know. Here, there could be two people in the mistake. Two people might be at fault. Who, sir? One, our purchase manager. Who? Our purchase manager. How, sir? We might have asked him to buy at lesser price. He might be buying at a more price. Or we might have asked him to buy at 10 rupees. He might be buying at 8 rupees or 12 rupees. In both the case, variance will come. Correct? Okay. One is that guy, sir. Who is one more? One more is your production manager. How, sir? We asked him to use 10 kg per unit. He is using 12 kg. Or he might be using 8 kg. Which means, guys, we are going to divide the cost variance into price variance and usage variance. We are going to divide the cost variance into price variance and usage variance. Now, price variance means our purchase manager's work is very simple. Boss will tell some quantity. It is unnecessary for you whether so much quantity is allowed as per budget or no. Your work is only one thing. What is it? We'll ask you to buy some quantity, you buy that quantity. We'll ask you to buy few quantity, you buy that quantity. Which means you are responsible for buying the actual quantity at the standard rate. You are responsible for buying the actual quantity at a standard price. Actual quantity at standard price. What do you mean by that, sir? What I mean is, we asked you to buy it at 10 rupees. You are buying at 12 rupees. Sir, standard quantity, actual quantity, you are supposed to buy how much ever we tell. None of your business whether we are using more or less. Sir, but if you use more or less, due to the production manager, this guy is also how? Let's say I asked you to buy it at 10 rupees. You bought it at 10 rupees. You buy 1 lakh kg, you buy 1 kg. End of the day, 0 into something is 0. If at all you do the work what I tell, your work is what? Buy whatever we tell at the whatever the rate we tell. So, you are going to consider the actual quantity. Okay. So, standard price minus actual price into standard quantity is price variance. So, actual quantity is price variance. SP minus AP into AQ will give you what? Price variance. Got it? Got it? Now, price variance. Price variance is basically, guys, standard price minus actual price into actual quantity. Standard price minus actual price into actual quantity. When the price variance won't be there, when the actual price and standard price are same. Now my question is, when it is adverse, when it is favorable? If the standard price is greater than the actual price, favorable. You are buying at a lesser price. If the actual price is greater than the standard price, adverse. Got it? Now, okay. Now we got to know how much is the mistake of our purchase manager. Sir, what about production manager? It is based on his usage. That is standard quantity minus actual quantity. The standard price or actual price? Standard price. Why standard price? Hey, try to understand. For our production manager, our purchase manager, instead of going and buying at 12 rupees, instead of 10 rupees, we asked him to buy at 10 rupees. He is buying 12 rupees, buying at 12 rupees. Guys, the 2 rupees, do you think really we should charge to our production manager? He has done nothing. He has done nothing wrong. Should we charge it to him? No. Which means for our production manager, we restrict their variances only and only to the standard price. That is standard quantity minus actual quantity into standard price. Cost variance, what we did? Actual cost, standard cost minus actual cost. Standard cost is standard quantity into standard price minus actual quantity into actual price. Got it? Now that could be divided into two. Usage price. Price means standard price minus actual price into actual quantity. Usage means standard quantity minus actual quantity into standard price. Got it? Sir, how to remember this? Guys, SAAP. Basically, there is one software called SAP. That is SAP, but here it is SAAP. What do you mean by that, sir? Your price variance is standard minus actual into actual. Standard price minus actual price into actual quantity will give me price variances. Now your usage variance. In Hindi, mother-in-law means Sasu mano, Ma you live, Sasu you keep. With love. That is, your usage variance is standard quantity minus actual quantity into standard price. Standard quantity minus actual quantity into standard price will give you usage variance. Got it? Now, this usage variance could be further divided into mix and yield. Why, sir? Because our production manager told, sir, usage variance, you can't charge me full. Why? What happened? Sir, you know what? Our purchase manager, idiot guy, is getting a less quality product, sir. When the quality is less, of course, the consumption will become more, no? Is it my fault? So we are like, okay, boss. Okay. Done. Whatever you tell is correct. Let's say A, B. Standard quantity you are supposed to use was 200 and 300. But actually you are telling you are using 250 and 400 is not your fault. It's a purchase manager's fault. We'll do one thing. Let's check that also. What is it? Sir, your total actual quantity is 650. If at all, you are using that extra whatever we have just because the quality is not good, we'll do one thing. I will revise a standard for you. I will revise a standard. Enjoy. How I will revise? You are telling that what we planned 500 is not enough. We want 650 because of the quality. Okay, sir. 650. Correct. But the consumption ratio should remain same, no? 2:3 only, no? How much it will be? 650 divided by 5 into 2. 390. This was supposed to be the one now. Boss. Now try to understand. How much we were planning to use? 500. How much we are actually using? 650. Guys, this is revised. Sorry. How much we are planning to use? 500. How much we are actually using? 650. Okay, boss. We are going to tell that this is the mistake of our purchase manager. But the problem is where, the ratio in which our production manager used, that is also not correct. He should have used as 250 and 400. What the hell is that? Sorry, 260 and 390. What the hell is that 250 and 400? So we are going to tell, boss, in this your mistake is also there. So what we will do is, this usage variance will further divide it into two. Material mix variance, material mix variance, material yield variance. Yield is basically we are telling, okay boss, whatever you tell you agree. Your new standard is 150 units, let's say. Old standard was 140, which means comparing just standard and standard to just to check the quality of the product, yield of the product, sub-usage of the product. Yield is also known as sub-usage. Yield is also known as sub-usage. To check the sub-usage of the product, we are increasing our standard. Now guys, standard quantity minus revised standard quantity into standard price will give you yield variance. This is our purchase manager's mistake. Again, purchasing the sub-quality product. Standard quantity minus revised standard quantity into standard price will give you yield variance. Whereas, guys, if at all your standard what you thought, you increase your standard cost, it was favorable. First you thought you will finish this CMA course in 1 lakh. Now the CMA course, again you entered into CMA course, then you understood that we need some more extra. Let's say our new budget, I'm not telling actual, new budget is 120. Now the 20,000 is adverse or favorable? Adverse. How?
So first, if it's going to be original, standard and actual, the difference will be more.
Actual you leave. I'm considering standard and standard. Before entering the course, not generally, actually also it's adverse only, unless and until your papa ki pari, dad's pigeon. Now try to understand. Here it is adverse only, which means you thought one cost, now you changing your cost again, standard only, both are standard only, but you are revising it to more now. Adverse. So if at all your revised standard quantity is more than actual quantity, sorry, standard quantity, adverse. If at all you revise your quantity into less, you thought CMA course will be 1 lakh. But then you got to know that it is just 70,000 is required. Now adverse, favorable. Favorable. Whether you actually incurred 70, that we don't know. But we set our standard too. Got it? So, revised is more, adverse, revised is less, favorable. Now, that is yield. Okay. We agreed whatever you told. Why the hell instead of 240 you are using, or sorry, 260 you are using 250 units? Hey, you should be happy, no? You told 260 new standard. I used only 250. Good. Next product, I asked you to use 390. How much you are using now? So guys, here we'll be thinking of the mix. For example, few costly material will be there, cheaper material will be there. Cheaper material become more and costly material becomes less, then that's fine. Not for quality, price wise, cost wise. But the costly material, instead of cheaper material, you are using costly material. Cost will become more, no? So now there you are messing up with the mix. You are messing up mix. You are not using it in a standard proportion. That we call it as mix variance. Production manager mistake. Whose mistake? Production manager mistake. That is revised standard quantity minus actual quantity into standard price. Revised standard quantity minus actual quantity into standard price. I hope you got to know how to calculate revised standard quantity. Total of actual quantity in the standard ratio. Total of actual quantity in the standard ratio will give you revised standard quantity. Will give you revised standard quantity. While calculating standard quantity and all, if there is any normal loss, what we should do? Reduce it. 100 units they are telling to produce, and in the input there is a 10% loss, which means input is not 100, input is more than 100. Input is 111.11 should be. If you give an input of 111.11, then if you reduce 10%, then you will get 100 as a standard. Got it? So you should address the input also, I mean the loss also, but normal loss, not the actual loss. That is all about your material. Now going to labor. Guys, labor also cost variance, that is how much we are paying to them, how much we thought of paying to them, they working for standard hours, which standard hours for actual production, standard hours for actual production, that is actual hours paid into actual rate, that is your actual cost, standard hours into standard rate, that is your standard cost. Now if the standard cost is more than actual cost, favorable or adverse? Favorable. If the actual cost is more than adverse, if the actual cost is more than the standard cost, then it is adverse. Got it up? So if the actual cost is more than standard, adverse. If the actual cost is less than standard, favorable. Hope you guys got it. Now that cost variance, guys, we can divide into three. One, our HR mistake, that is we asked them to get it at some rate, they are not getting at that rate. Next one is our production manager mistake. Next two, why they should make them work, he is not making them work at the same way how we want. Got it? That is your efficiency variance and idle time variance. Guys, if you want to know the logic why it is so, the videos are already uploaded in the YouTube. 2 videos are there, no? Where you guys will check. In your class only we have done, the same recording is there. It's there in the same channel, you can go and check. Material variances as well as labor variances, concept videos, if I am not wrong, 1 hour each. Okay, if you want a clarity about why it is and all. Now where were we? Idle time variance. First we'll discuss about idle time variance. Guys, idle time means what? You paid, they didn't work. Which means actual hours paid minus actual hours work is your idle time. Actual hours work, actual hours paid minus actual hours work is your idle time. Now into standard rate will give you idle time variance. Guys, one thing you have to remember in question, if they talk about idle time, then only idle time exists. Sir, idle time means normal idle time or abnormal idle time? Abnormal idle time. Why not normal idle time? Normal idle time will get adjusted in the standard hours. Only abnormal idle time is one which you are treating it as idle time. Now, always remember, idle time is good or bad? There is no favorable at all. Idle time is always adverse. So labor idle time variance is adverse. And what is the formula for labor idle time variance, guys? Actual hours paid minus actual hours worked into standard rate. What rate? Standard rate. Got it? Now, labor efficiency variance. Guys, here in how many hours they should have completed the work, how many hours they are actually taking to complete the work. How many hours they should have taken to complete the work, how many hours they are actually taking, how many hours they should have taken, standard hours, how many hours they have taken, actual hours, worked, not paid, worked. If the idle time is not there, paid and work both are same. Okay. Now your efficiency is standard hours minus actual hours work. And whose mistake it is? Production manager? No. Production manager will he be okay with the actual rate or standard rate? Standard rate. He won't be okay with the actual rate. Why he should take the variances which are due to our HR? They are doing Rangoli. Why this guy have to suffer? Correct? Now standard rate, standard hours minus actual hours work into standard rate will give you labor efficiency. Got it? Now labor rate variance, HR. Hey, whether they work or they don't work, none of your business. How many hours you are paying? You should pay at a standard rate, but you are paying at a actual rate. That is standard rate minus actual rate into actual hours paid. Actual hours paid will give you labor rate variances. If the standard rate is less than actual rate, favorable. Sorry, adverse. If the actual rate is less than standard rate, favorable. Got it? If the standard hour is greater than actual hours, favorable. Favorable. If the actual hours are greater than standard hours, adverse. You are taking more hours than required. Got it? Now guys, efficiency variance could be further divided into two. Mix variance, yield variance. Mix variance, yield variance. Mix variance means, again, that guy, now our production manager, here also is blaming. What? Sir, you are not getting the employees the same way you wanted. You are getting the employees who will do the work very slow. What I should do? Okay. Which means yield variance. Got it? Got it? Guys, mix variance is also called as gang variance. Gang. G. So mix variance is also known as gang variance. Now, guys, labor yield variance means standard hours minus revised standard hours. Whereas mix variance means revised standard hours minus actual hours. When the revised is more than actual, favorable. Revised is less than actual, adverse. When the standard is more than revised standard, favorable or adverse? Favorable. Because your new standard, you are estimating cost less than what was there. Reducing your standard. So, favorable. If the revised is more than standard, adverse. Got it? Got it. Now, these are the few variances. Let's revise it once again, guys. Material cost variance. Standard cost minus actual cost is a material cost variance. If the standard cost is more than actual cost, favorable. If the actual cost is more than standard cost is nothing but standard quantity into standard rate. Actual quantity into actual rate is actual cost. By the way, standard quantity is for actual output. Standard quantity for actual output. That could be divided into two. Price, usage. Price is nothing but, guys, SAP. Standard price minus actual price into actual quantity. Usage is nothing but SASU. Standard minus actual quantity into standard rate. Standard price. Usage could be divided into material mix variance, material yield variance. Yield means comparing standard and standard, that is RSQ minus SQ into standard rate. If the RSQ is more than SQ, adverse. RSQ is less than SQ, favorable. Whereas if at all it is mix variance, it is comparing new standard with the actual, that is revised standard quantity minus actual quantity into standard rate. If the revised standard quantity is more than actual quantity, favorable. If it is less, adverse. Also, labor rate variance, guys, it could be, that is nothing but standard cost minus actual cost. Standard cost means standard hours into standard rate. Actual cost means actual hours paid into actual rate. That could be divided into 3, sometimes 2. If idle time is 3, there 3, otherwise 2. If the idle time is there 3, rate variance, efficiency variance, idle time variance. Rate variance is nothing but standard rate minus actual rate into actual hours paid. Standard rate minus actual hours into, standard rate minus actual rate into actual hours paid. If at all it is labor efficiency variance, that is standard hours minus actual hours work into standard rate. If at all it is labor idle time variance, actual hours paid minus actual hours work, that is your idle time into standard rate. Your efficiency could be divided into 2, yield and mix. Yield is, guys, yield standard. Revised standard hours minus standard hours into standard rate. Mix is revised standard hours minus actual hours worked, not paid. Because efficiency we are considering work, not paid. Minus work will give you mix variance. Got it? Into standard rate. This is about your standard costing. We'll see few questions now. Yes, guys, look into this question. Yes, the standard cost of a certain chemical mixture is as under. Okay, they're asking you to calculate the material cost variance, price variance, usage variance, mix variance, and yield variance. Quickly tell me the cost variance formula. Standard quantity into standard price minus actual quantity into actual price. Material price variance, standard price minus actual price into actual quantity. Usage variance, standard quantity minus actual quantity into standard price. Mix variance, revised standard quantity minus actual quantity into standard price. Yield variance, revised standard quantity minus standard quantity into, basically that depends on how you write the conclusion. If the all you have to do is, if the revised is more, then it is adverse, otherwise it's favorable, like that it is. If you write SQ minus RSQ is also fine. Then if you get the negative amount, that is adverse, positive amount favorable, adverse. In case of yield, no, that you have to by heart the formula, no, if that's the case. No need to by heart the formula, you remember the conclusion. Now, 40% of material A at the rate of 20 per kg, 60% of material B at the rate of 30 per kg. A standard loss of 10% is expected in the production. The following actual cost detail is as follows: 180 kg of material A, 220 kg of material B, and the weight produced is 360 kg. Guys, now what you should do, you should find out standard for actual. Standard for actual. Guys, how to find out standard for actual? Try to understand. If the standard is 100, actual will be 90. Normal. Now, 90 means they are telling 360 kgs. 100 means question mark, cross multiplication. 400. That is, if you give a input of 400 kg, you should get 360 kg as output. Array, if you are giving more, then that means your problem. For that, whatever output, how much input you should give is the question. Done. Or you can take it as standard input as I. 10% of the input is loss, 0.19. That is giving you 360. Sir, but that is not actually giving us 360, sir. 400 kg is giving us Hey, 400 kg is giving us, we agree. But there could be abnormal loss also, no? Standard won't address the abnormal loss, standard address the normal loss. So guys, how much is standard? 400. Now, we got A, we got B. Or I will write like this. We got A, we got B. First is standard quantity. Guys, total standard quantity is how much? 400. In that A is how much? 60%. 120 kg. B is how much? Sorry, 60%. No, 400 into 60, 240. 240 kg. B, A, 40. 40% of 400, 160 kg. B will be 60%, 240 kgs. Correct? Actual quantity they only have given 180 and 220. Standard price they only have given 20 and 30. Actual rate they only have given 18 and 34. Accordingly, using this table, you can solve the question. I'm not going to solve and all. This question, if we do, that is more than sufficient for the time being. See here. Following are the variances you are required to calculate. Cost variance, what is the formula? Standard price into standard quantity minus actual quantity into actual price. Price variance is standard price minus actual price into actual quantity. Usage, standard quantity minus actual quantity into standard price. This quantity of material purchased is 3000 units at the rate of 9000 rupees, which means actual price is how much? Rupees 3. Actual price is rupees 3. Standard quantity of material required for 1 ton of finished goods is 25 units, which means for 1 ton you need 25 units of raw material. For standard rate is 2 rupees. Opening stock is nil, closing stock is 500, which means out of 3000 units, you are just utilizing 2500 units. So your actual quantity is not 3000, actual quantity is 2500. You should consider how much you actually consumed. Now, they are telling finished product at the end of the period is 80 tons, which means, guys, find out standard quantity. That is 1 ton needs 25 units. 80 ton needs how much? 80 into 25. 2000 units. So your standard quantity is 2000 units, actual quantity is 2500, actual price is rupees 3, standard price is rupees 2. Clear? Look at this question. The standard cost of one of the product of the company is shown below. A 40 kg, B 10 kg, C 50 kg. The standard input mix is 100 kg, standard output is 90 kg, which means for the 90 kgs, you want to do all these things. Now, actually we are producing 4,18,500 kgs. For this, we have to find out a standard. Very simple, guys. Very simple. Find out the standard input. Whatever the input, minus 10% loss, because 100 if you put, 90 will get. 10% is the standard loss. Minus input should give you 4,18,500 if at all there is no quantity variances. How much is I? 4,18,500 divided by 9.9. 4,65,000 kgs. 4,65,000 kgs. Now, guys, this we are going to divide it into 3 ratios. Product A, product B, product C. Standard quantity in the ratio of 40, 10 and 50. How much is 465,000 into 40%? 1,86,000. How much is 10%? How much is 50%? This is your standard quantity. Actual quantity, you know that 195,000, 42,500, 220, 5,000. Your actual price, 80, 52, 21. Standard price 76, 50, 20. Got it? Now guys, RSQ shall we calculate? Yes. For ABC shall we calculate RSQ? How to do that, sir? Guys, how much is the total of actual quantity? 195,000 plus 42,500 plus 225,000. Four lakh 62,500 kgs. Now, guys, 4,62,500 kgs in the ratio of 40, 10, 50 into 40% into 10% into 50%. 4,62,500 actual input. Output has nothing to do. Total of actuals in the standard ratio. How much? 1,85,000. 46,250. 2,31,250. Correct? This is my RSQ. That is total of actual quantity in the standard ratio will give me RSQ. Guys, material cost variance, what is the formula? Come again. Standard quantity into standard price minus actual quantity into actual price. Price variance. Standard price minus actual price into actual quantity. Usage variance. Standard quantity minus actual quantity into standard price. Mix variance. Revised standard quantity minus actual quantity into standard price. Yield variance. Standard quantity minus revised standard quantity into standard price. If the actual is more than the revised standard, adverse. If the revised standard is more than standard, adverse. Now, they have given, see here, to produce 1080 units, you need 500 units of A, 400 units of B, 300 units of C. Correct? But you are actually producing 1180. You are actually producing 1180. So guys, to produce 1080, 500. To produce 1180, how much? This is actual quantity. This is actual price. Let's find out the standard quantity. Guys, to produce 1080, 500. To produce 1180, how much it should be? Standard quantity for actual production. Five? Sorry? Point? 296. 3. Next up. 500 for 1180. For 400, how much? Sorry, for 1180 it's 500. For 108, sorry. Why I am writing here, sir? It is 546.293. Guys, 400 for 1080. For 1180, question mark. For 1080 it is 400. For 1180 it is question mark. 437 I will write. Next, 300 for 1080. For 1180 how much? 327.78. Now this is my standard quantity, actual quantity, standard price is here. RSQ how to compute, sir? Total of the actual quantity, that is how much input? 400, 500, 400, 1300, 1300 in the ratio of this standard. We'll get the revised standard quantity. Not much things are there. Go through that once. Listen here. Labor variances, guys. Actual hours work they have given 8,200 and 6,390. Two departments. Standard rate are 3 and 3.4. Standard hours produced, which means your standard hours for actual output. Standard hours produced means standard hours for actual output. Gross wages, that is how much you are actually paying. Got it? Which means there are X and Y. First, standard hours. Standard hours for actual output, they only have given it as standard hours produced. Standard hours produced is different, earned is different. If they give earned, that is standard for standard. Produced is standard for actual. And 6,015. Your standard rate 3 and 3.4. And by the way, mix and yield variance in labor and material will come only and only in case of 2 or more variables are there. 2 or more material, 2 or more class of labors are there. Otherwise, whatever is there in the usage variance, everything is yield only. Because to mix what you will mix? A glass of water should be mixed with the glass of water. Does that make any sense? So, actual hours 8,200, 6,395. Sir, work the paid. Here idle time is not there. Both are same. Actual rate will be, guys, 28,080 divided by 8,200.
3.4243.
3.4243.
3.4.
3.4. Next, 19,370 divided by 6,395. 3 point. Guys, whenever you get this kind of numbers, no, you know what you should do. This is nothing but actual rate into actual hours. No need to divide and multiply again for the quantity cost. Next, come to rate variance. Rate variance, what is the formula? Come on. Standard rate minus actual rate into actual hours paid. Can I write it as standard rate into actual hours paid minus actual rate into actual hours paid? This is nothing but finish. Hope you understood. That's where you need actual rate. In any other formula you don't need. Got it? By the way, labor cost variance formula, quick. Standard hour into standard rate minus actual hours paid into actual rate. That could be divided into rate, efficiency, idle time. Idle time is actual hours paid minus actual hours worked into standard rate. Your efficiency is actual hours worked and standard hours, that is standard hours minus actual hours worked into standard rate. Your rate variance is actual rate minus standard rate into actual hours paid. Your efficiency could be divided into mix and yield. Mix is also known as gang. That is revised standard hours minus actual hours will give you mix into standard rate, of course. Actual hours in the sense actual hours work, whereas revised standard hours minus standard hours into standard rate will give you yield variance. Calculate the variances, guys. There is a input of material A, B and C, total 700, that is standard. We thought 25 is a normal loss, so output expected is 675 if you give an input of 700. But the best part is we got output as 675 only, which means this itself is a standard quantity. Standard quantity of A is how much? 400. Standard quantity of B is 200. Standard quantity of C is 100. Which means for 675 400, for 675 question mark. For 675 200, for 675 question mark. For 675 100, for 675 question mark. Understood? Now, guys, here bit of weird this thing they have done in case of labor. Different calculation they have done. You don't worry all those things. All you have to do is for producing 675 units, 100 hours of men is required, 200 hours of women is required. Men's are getting paid at 2 rupees, women's are getting paid up 1.5. ICMA's opinion. Can't take risk. YouTube report abusing. Now, guys, 675. Now try to understand. For this also, it will be same only, no? Same only, no? Why same, sir? Output. So this itself will be the standard, this itself will be the actual. Accordingly, we are going to do, but in your material, they have done labor something different. You guys have to take care of it. This question is nice. Listen, this will be the last question we will be discussing. Or one more question we'll discuss and we'll wind up this particular standard cost. Okay. Now, listen, guys. The standard labor component they have given. Skilled, semi-skilled, unskilled. Actual number of workers 28, 18, 4. They are working for 40 hours a week, which means skilled, semi-skilled, unskilled. Actual hours, very simple. 28 workers working for 40 hours. 28 into 40. 1120. 18 hours working, 18 workers working for 40 hours. Sorry? 730. 4 workers working for 40 hours. This is your actual hours. Standard. Standard is also simple, no sir. 32 into 40, 12 into 40, 6 into 40. That will give you budgeted. That will give you budgeted. Then sir, how to find the standard? They themselves have given. Gang produced 1800 standard labor hours of work. Which means whatever they produce, no. For that standard hour required is how much? 1800. Whatever they have produced, for that the standard hour is required is 1800. Now guys, 1800, I will divide it on the basis of this standard ratio. Because if you see guys, 32 into 40 is how much? 1000. 12 into 40 is how much? 6 into total. Understanding. If you take directly 40, 40, 40, that will come to 2000 hours, where you are completing the work which is equivalent to 1800 standard hours, which means 1800, I am going to take it in this ratio. 1800 into 32 divided by 50, that is 32 plus 12 plus 6. Thousand 800 into 32 divided by 50. That is your standard hour, 1152. Divide by 32 into 12. How much? Hey, on calculation what? 432. Divide by 12 into 6. This will be your standard hours. Now, revised standard hours will be actual hours in the standard ratio 1120 plus 720, 1840, 2000. Actual hours are 2000. Now, revised standard hours is 2000 in the ratio of 32, 12 and 6. 2000 divided by 50 is how much? 2000 divided by 50 is how much? 4, no? 40. So 40 into 32. 1280. 40 into 12. 40 into 6. So this will be your revised standard. And anyhow, standard rate you have, actual rate you have. You are going to do that way. Mark it as LMR. A chemical company gives you the following standard and actual data. You are required to calculate standard data. 450 of kg of A you should introduce, 360 kg of B you will introduce. Total will come to 810 kg. In that 90 kg loss will be there. 720 kg will be output. To produce the 720 kg, you want 2400 skilled workers, 1200 unskilled workers. Actually, you are producing 760 kg. Actually, you are producing 760 kg. Now try to understand. Material A is there, material B is there. Standard quantity. Guys, for 720, you need 450. For 760 question mark. For 475. Next, for 720 you need 360. For 760 question mark 3. That is your standard quantity. Actual quantity you already know. 450, 360. 450, 360. Standard price. Standard price is, guys, 2010. Actual price is 1911. Actual price is 19 and 11. Now going to labor. Guys, for 720 kgs, you need 2400. For 760 kgs, how much? For 720, 2400. For 760, how much? For 720, 2400. For 760, how much? Two thousand four hundred and 200 and 200 and now. For 720, we are taking 2400. For 760 question mark, cross multiplication will work like this. 760 into 2400 divided by 720. 2500 and for 720, 1200. For 760, how much? This is your standard hours. Actual hours they only have given. Actual hours they have given it as 2400, 1200. Revised standard hour will be 3600 in this ratio. 2:1 ratio. You will get everything. You can do accordingly. Of course, your material they are using something nonsense things and all. In this question they are using properly. In that question they are using nonsense things. So you stick to our normal process. Got it? Here 5% idle time is there. Go through this. All these ICMA material, guys, if you solve for marginal standard along with the additional questions, whatever we have discussed, that is more than sufficient for your whole costing. Got it? Budget and budgetary, do it on your own. Nothing special is there. We can skip it. I mean, I can skip it in marathon, but your examination, that is important. Okay, easy scoring one. Easy scoring one. But I will tell you one simple thing here. Try to understand sales budget. Sales budget. First budget, what you should prepare is budget with the key limiting factor. Based on that only everything will be there. That you leave. Sales budget will be there. Based on that, you will get to know how much to be produced. Based on the production, you will get to know how much should be consumed. Based on the consumption, you will get to know how much you should be purchased or procured. Okay. Now, guys, for the sales units plus closing, you will get to know how many units you want during that period. How many units to be sold plus closing, you will get to know how many units you want. For that, minus opening stock, if you do, you will get to know how much to be produced. Once you got to know how much to be produced, for that, add closing stock, how much you are planning to keep, minus opening stock, you will get to know. See, produced you got. For that, add opening minus closing, you will get to know sales how much. Now, produced you got to know, no, into raw materials required to produce so much. You will get a consumption. For the consumption, if you add closing stock, how much you are planning to keep, minus opening stock, you will get to know how much to be procured. How much to be procured, purchased. Got it? This is how budget works. Sales budget means sales units, blah, 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 blah. Divisional wise, all those things will come. And one more thing you have to keep in mind is your flexible budget and master budget. Master budget means basically your P&L only or cost sheet. Whereas flexible budget, guys, it changes along with the units. That is, the cost you are going to divide into variable, semi-variable, fixed. Fixed will be remaining fixed. Semi-variable, again you divide into variable and fixed. Variable along with the output, it will change. Fixed, it won't change along with the output. Keep those things in mind. And zero-based budgeting, please go through the theory. That is, every year you are going to start from the scratch. You are not going to do last year's budget plus minus. You are going to start from the scratch. Got it? Got it? With that, we have completed our marathon. All the best for your exams. Once your result comes, please keep us updated. Thank you. Bye bye.